Very good morning, everyone. Just wait for 1 minute. Hello. Very good morning, everyone. How are you all? Everyone fine? बोलिए. Yes. Excellent. Shekhar, good morning. Ganesh, good morning. Balaji, good morning. And Aravindan, good morning. Arushi, good morning. Saraswati, good morning. Bhuvnesh, good morning. Jay, good morning. Karthi, good morning. Okay, very great. Sati, good morning. Mahesh, good morning. Yes. Are you all ready for revision? Everyone revision first. Let me know that whether voice is clear or not. Is the voice okay? Audible? Clear? No noise? Just update me. Because once I will start, then we cannot get it done. Okay, so first let me know whether the voice is audible or not. Anush, good morning. Amrita, good morning. Sandeep, good morning. Palachandra, good morning. Hare Darshan, good morning. Tanguru, if I am pronouncing the name wrong, I'm sorry for that. Okay, morning. Clear? Everything is clear? Please take financial guarantee sum. I will take financial instrument, but not today. First, let me update you what we are going to do in this marathon revision. That already I have informed that, but I am just informing you that what is the my plan. Today I'll be taking all the asset-based IND AS. IND AS 16, IND AS 38, IND AS 40, IND AS 2, IND AS 23, IND AS 36. Then tomorrow at the same time I'll be taking lease and share based payment. Then 27th I will take consolidation and business combination. 28 financial instrument I'll take financial instrument chapter. 29 I will take revenue recognition, but for this revenue recognition the time might change. For this IND AS 115 I may change the time because I have some other commitment came for 29 April. So I may change the time. I will update you. I will update you as soon as possible. Correct now. So don't worry about this. This revenue recognition I will take. The time might change. Date might change. The time might change. I will update you. But it now what is the objective of this particular revision batch? That normally I have seen the student don't know at last moment what to revise, which question need to be revised, and how to revise. So I will do revision from your point of view. What content we should revise, what question we should take care, and what question we can ignore from examination point of view, because that there are some questions which you can do even though you are not reading it. But this point is the objective. Understood? What I have seen that in the last moment normally students waste their time on understanding that how to do the revision, and this is the major point where student lacks. How to compile the revision purpose. So for that purpose I am with you so that you can revise all the point with me. Now already I have given one more point. I would like to inform that I don't know what is your revision plan. If you are starting FR from today, then well and good. You do revision as per whatever I am suggesting you. But I have given a 5 days plan on the understanding that you have some other subject also. I hope that also you have gone through that 5 days plan start from 27. So 27, 28, 29, 30, 1. This is a 5 days plan I have already given. If you are following that, stick to that. Understood? So you make your plan as per your choice. Now, if you have decided that you will revise with me, that is also okay, provided that your other subject are well in track. If you are writing both group, you should also think about DT, IDT, paper number 6, as well as audit and AFM subject also. If you can't leave that, you can't leave the revision of that. So suppose you have thought that you will start from 27, but right now today is 25th and you are doing this asset based IND AS with me. So of course the asset based IND AS revision will be completed with me only. There will be some question which I will give you for practice by your own, but the entire revision will be completed with me only. Then at this point of time, when 27th I have given asset based IND AS revision, at that point of time you should use that 5 hours or whatever I have allocated. That hours you should allocate for any other topic, for any other subject. Means don't do only FR if you are starting from 25th. I hope you are understanding. Whatever you have planned, stick to that. Got this point? Have you understood? Now you might be thinking that there are other IND AS, means there are many IND AS which I have not taken into consideration. But I have been informed by many students that sir, do this particular IND AS also. For example, there was a huge demand of IND AS 33, IND AS 21, analysis of financial statement. There are some chapter which has been demanded by a student. So I will consider that chapter revision also. For that, timing will be informed to you when I am going to plan that. For example, today I am taking 20. Today I am starting with asset based IND AS. So in the ninth I may come. Is from 9:30 p.m. I may come to cover that particular chapter also. So that will be automatically informed to you. Don't worry about that. Is I am planning entire revision for you, but provided I need to have the sufficient time for that, and I can manage your preparation for that. Understood? Correct? So can we start? Can we start? Now whatever I'll be doing, you need to repeat with me yes sir, no sir, so that I can understand. Yes, you are able to follow me. Okay. So whatever concept I am explaining, you need to inform me whether you are able to understand that or not. You need to only say 2 words, yes sir, no sir. Got this point? Yes sir, no sir. You need to mention me so that you are with me. You are not deviated. You are not deviated. Can we start? Boliye. Yes sir, we can start. So what we'll do, I'll start with IND AS 16. I will start with IND AS 16 now. This IND AS 16 is of course my IND AS Saaransh book. I don't know whether you are following my book or you are not following my book. If you are following my book, very good. But at this moment, I will say, don't change your book. Don't change your book. So if I am following this book and you are following some other faculty book, the content will remain same. The content will never change. I hope you are understanding. So don't change the book. Do from the book from where you have done previous revision. Have you understood? At this point of time, you are not supposed to change any book. You are not supposed to change any book. I hope you are understanding. Got this point? Yes, sir. One question came from Gayatri. Will it be in YouTube, sir, after live? Yes, it will be in YouTube forever. So you can also listen as per your time convenience. But if you will do with me, it will help you a lot. Why it will help you a lot? Because when you do by your own, you may be wasting a lot of time. I will say just I will start, and within some time, within some hours, we'll be able to complete entire asset based IND AS. One particular chapter, one particular content will be completed from your point of view. Understood? Yes, sir. Right now I'm using 4th edition. You have also 4th edition, but if you have some 3rd edition, 2nd edition, don't be confused right now. Okay, sir? Because 3rd edition also is similar to 4th edition only. But whatever you have followed, that only you follow. I think already you have updated all the amendment. But this, sir, can we start? Yes, sir. What I will do first, I will revise the content in a very quick moment. So how to revise, that also you need to understand. देखो content is very important, but there is no need to memorize it. There is no need to memorize it. So everyone will follow with me. Everyone will follow with me. Correct? Very good, Sati. You are my student and you are following my guidance. Very good. Thank you very much for that. Let us start. Let us start without wasting any time. We'll start with property, plant and equipment. Ind AS 16. What is the meaning of property, plant and equipment? Meaning is what? Property, plant and equipment are tangible item. You need to repeat with me. You need to repeat with me whatever I am saying. Just repeat it. Don't only listen. I am saying property, plant and equipment are tangible item. You need to also say property, plant and equipment are tangible item. Got this point? So everyone will repeat with me. Everyone will repeat with me. Then only मजा आएगा. नहीं तो सजा हो जाएगा. Understood? मजा सजा में बदल जाएगा. It means if you are only listening, so the revision will not be completed. Revision will not be completed. You will be wasting your time. So whatever I am saying, just revise with me the word to word. Word to word जो मैं बोल रहा हूँ वो भी आपको बोलना है. आई होप यू अंडरस्टैंडिंग. एक बार यस सर बोल दो इफ यू आर फॉलोइंग मी. इफ यू आर फॉलोइंग मी, यस सर एवरीवन से बोलिए. कैन वी स्टार्ट? बोलो पीपीआर टेंजिबल आइटम. पीपीआर टेंजिबल आइटम विच आर हेल्ड फॉर थ्री पर्पस. विच आर हेल्ड फॉर थ्री पर्पस. पॉइंट नंबर 1, यूज इन द प्रोडक्शन ऑफ गुड्स or supply of goods or services. Use in production of goods or supply of goods or services. Point number 2, use for rental to others. Use for which purpose? Rental to others. Point number 3, administrative purposes which are held for admin purpose. And point number B is what? Which are expected to be used for more than one accounting period. Which are expected to be used for more than one accounting period. Understood? PP definition. Once again, PPR tangible item which are held for use in production of goods, supply of goods or services, rental to other, admin purpose, and which are expected to be held, which are expected to be used for more than one accounting period. Correct? Now, admin purpose is a wider term, so it will include all other purpose, all other business purpose. However, investment property means the chapter name is property, plant and equipment, but any property which meet a definition of investment property will be covered under Ind AS 40, will not be covered under Ind AS 16. Now, treatment of spare part, standby equipment and servicing equipment is very important, can be asked in exam. For MCQ, this is important. What is the treatment of spare part, standby equipment and servicing equipment? If it meet the definition of PP, then we need to apply Ind AS 16. But if it does not meet the definition of PP, then it will be considered as inventory. We need to apply Ind AS 2. Then it will be considered as inventory. We need to apply Ind AS 2, and we need to apply Ind AS 2. And whenever it is used, the entire carrying amount of such inventory will be charged to PL as an expense. So once used, the carrying amount of such inventory will be charged to PL as an expense. Chalega. Now coming to recognition criteria, there are two conditions for recognition purpose. There are two conditions for recognition purpose. First condition is what? It is probable that future economic benefit will flow to the entity. First condition is what? It is probable that future economic benefit will flow to the entity and the cost of the item can be measured reliably. Correct? So this is not so much important because normally for PP both the condition will be satisfied. But if they ask some recognition criteria, write down this only. It is probable that future economic benefit will flow to the entity and cost can be measured reliably. Then coming to the initial recognition, once the recognition is completed, we do recognition at cost price. So initial recognition is done at cost price. Cost price means cash price equivalent. What do you mean by cash price equivalent? To what Ind AS 16 says that whenever payment is not deferred beyond normal credit period, whenever payment is not deferred beyond normal credit period, then cost price will be equal to the consideration paid. Whatever you have paid, that become the cost price. But whenever payment is deferred beyond normal credit period, means whenever payment is delayed and it is more than normal credit period, then cost price will be equal to present value of all future payment. So they will give you future payment, deferred payment. You need to find out present value as per the discount rate given. The cost price will be equal to present value of all future payment, or it will be equal to normal purchase price, is purchase price at normal credit terms, or it will be equal to purchase price at normal credit term. Normally in exam, either they will give you purchase price at normal credit term or they will give you future payment and discount rate. So you can find out present value of all future payment. Understood? So what do you mean by purchase price at normal credit term? Purchase price at normal credit term means what? Invoice price minus trade discount plus any non-refundable duties and taxes. Any non-refundable duties and taxes. So purchase price at normal credit term means what? Follow? It is means what? invoice price minus trade discount plus non-refundable duties and taxes. This might be given, so that become the cost price of that particular property, plant and equipment. In this case, you need to also calculate interest. Interest will be equal to all future payment minus present value of all future payment. That will be interest, and that interest will be recognized as an expense over the period of credit. Over the period of credit as per the rate of interest given in the question. Correct? Understood? However, it can be also capitalized. It can be capitalized with the cost price of PP if the condition of IND AS 23 is satisfied. Means if it is a qualifying asset and all the condition given under IND AS 23 is satisfied, then it can be also capitalized. However, if question is silent, always such interest expense will be charged to profit and loss account as an expense. Chalega? Now, elements of initial cost, what are included and what are not included in this property, plant and equipment. Very simple. There are three elements: purchase price, then directly attributable expenses, and third is what? Initial estimated cost of dismantling, removing and restoration of the item where it has been located. Correct? This point you know now. So purchase price means what? Invoice price less trade discount, add non-refundable duties and taxes. So this will be very simple. All information will be given. For taxes, if question is silent, always assume that it is non-refundable. For taxes, whenever question is silent, always assume it is non-refundable. Understood? Trade discount will be deducted, but any cash discount or settlement discount will not be deducted. The cash discount and settlement discount will not be discussed. Will not be deducted. Directly attributable costs examples are what are the example? Any employee benefit expenses directly for construction of that asset, are directly incurred for the construction and acquisition of that asset. Transportation cost, installation expenses, site preparation expenses, professional and technical fee. And one important point, that any testing cost, any cost which has been incurred during the testing period will be also capitalized, and any sale proceed from the sale of the product generated during the testing period will be deducted from testing cost, and net amount will be capitalized. So all the cost of testing will be capitalized after deducting proceed from the sale of any product produced during the testing period. Understood? Yes, sir. Now the last point is what? Initial estimated cost of dismantling and removing the item or restoring the site where it has been located. To this point, you know that present value of that future expenditure will be capitalized. So whenever there is a legal or constructive obligation for dismantling or removing or restoration, then present value you need to calculate, and you need to calculate the amount of provision as per IND AS 37, and that amount will be capitalized in the cost price of PP. What journal entry will do for this? Journal entry will PP account debit to provision. On this amount, of course, depreciation will be charged as per IND AS 16, and provision, can I say, as per IND AS 37. Every year we need to add interest cost in this. So interest cost will be added as per the discount rate given in the question. Understood? Yes, sir. Coming next point, self-constructed assets. Suppose they have given the question of self-constructed asset, so all the costs whatever is directly attributable will be capitalized. For example, direct material, direct labor, direct construction cost. So all the directly attributable expenses will be capitalized. However, you need to be careful about abnormal loss. Any abnormal loss will not be included in the cost price of that asset. Correct? And any income and related expenses, and the related expenses of any incidental operation that may occur before or during the construction or development of such item will not be capitalized. It will be transferred to profit and loss account. For example, the best example whatever we have taken was income may be earned through using the building site as a car parking. That is an incidental operation. So any income and related expenses will be transferred to PL. That cannot be capitalized. Understood? Correct? Any internal profit, if any internal profit is included, for example, one department has transferred raw material to another department at a profit, so that become internal profit of that company. Internal profit will not be included in the cost price of PP. That should be also eliminated. Got this point? Apart from this, whatever cost has been incurred which are not directly attributable to the construction or acquisition of property, plant and equipment will never be capitalized. For example, cost of conducting business in a new location with a new class of customer will not be capitalized. Costs incurred in introducing a new product or services will not be capitalized because these are not directly attributable cost. Correct? Now, cost of opening a new facility, inauguration expenses, etc. will not be capitalized. Admin and other general overhead will not be capitalized. Correct? Yes, sir. When to cease capitalization? Cease कब करेंगे? Once the asset is ready for its intended use or sale. Once the asset is ready for its intended use or sale, will cease capitalization. After that, will not capitalize any further cost. Any further cost. So there may be some expenses which have been incurred after the asset is ready for use, but before the asset is actually put to use, that will be charged to profit and loss account. With simple word, any expenses which are incurred after the asset is ready for use, that will never be capitalized. For example, cost incurred after the asset is ready for its intended use, but before it is actually put to use, will not be capitalized. Initial operating losses, any operating losses will not be capitalized. Cost of relocating or reorganizing the property, plant and equipment will not be capitalized. Suppose you are doing relocation of your business from one place to another place, that relocation cost or reorganization cost will never be capitalized. Foreign costs, of course, will be capitalized as per the requirement of Ind AS 23, and government grant may be reduced as per the requirement of Ind AS 20. So this will be done in the respective Ind AS. But borrowing costs, if the PP is a qualifying asset, we can capitalize it. And as per Ind AS 20, any government grant may be deducted from the cost price of asset, may be deducted from the cost price of depreciable asset, if you remember. Correct? Yes, sir. The next point is PP acquired in exchange of non-monetary considerations. Simple rule is what? In this case, whenever you purchase any PP in exchange of other asset, whenever you purchase PP in exchange of other asset, what is the formula? Formula is what? Cost price of the PP acquired will be equal to fair value of asset given up. Bolo, fair value of asset given up. First preference will be fair value of asset given up plus minus cash adjustment. Plus minus cash adjustment means what? Cash paid minus cash received plus cash paid minus cash received. If this is not given, then second preference will be fair value of asset received, fair value of asset received. Whichever is clearly evident, whichever information is given in the question, whichever information is given in the question, if both information is given, first preference will be taken this, second preference will be this. If this is not given, then use this information. What is the formula? Cost price of PP acquired will be equal to fair value of asset given up plus minus cash adjustment of fair value of asset received, whichever is clearly evident. If both are not given, then the cost price of PP acquired will be equal to carrying amount of asset given up plus minus cash adjustment. Plus minus cash adjustment. There are three preference. First is what? This. Second is this. Third will be what? Carrying amount of asset given up plus minus cash adjustment. However, if the transaction lacks commercial substance, if the exchange transaction lacks commercial substance, then the cost price will be equal to carrying amount of asset given up plus minus cash adjustment. In that case, the fair value information is not relevant from examination, from accounting point of view. Understood? I hope this you have understood. Any doubt? I'm just try to understand. I'm just going through the important point. एक बार revise करो important point. This will help you. Recall करो क्या क्या करते थे. Then we'll come to the question. It will not take more than 20 minutes. Not take more than 20 minutes. Subsequent cost क्या होगा? What do you mean by subsequent cost? It will not take more than 20 minutes. Just go through this. Then only expected question जो होगा उसको करने में मजा आएगा. Then you will take more interest in that particular question. What will be the useful that we are doing the content plus expected question, but we are doing very fast, and in this way you will be able to understand what to read, what not to read before examination. Got this point? Yes, sir. Subsequent cost, there are three type of subsequent cost. One is day-to-day servicing cost. This will be always charged to profit and loss account as an expense. It will never be capitalized. So any routine repair and maintenance expense will never be capitalized. However, replacement cost and major inspection cost, from examination point of view, it will be always capitalized. From examination point of view, it will be always capitalized. Replacement cost or major inspection cost, it will be always capitalized from examination point of view. Understood? Yes, sir. Subsequent recognition, they have given two options. One is cost model, revaluation model. Whichever entity want to apply, means as per the information given the question, we can apply either cost model or revaluation model. This revaluation model can be applied in the exam only when the information has been given. Otherwise, we'll never apply revaluation model. We'll apply cost model. Cost model means what? Cost less accumulated depreciation less accumulated impairment loss. Revaluation model means what? Fair value on revaluation date minus subsequent accumulated depreciation minus subsequent accumulated impairment loss. Impairment loss will be calculated as per Ind AS 36. Chalega. Now revaluation model, coming to the accounting, directly coming to the accounting treatment of revaluation. However, you know that the option is available class wise, not item wise. If for one item in that class we have opted revaluation model, for that entire item under that class need to be done as per revaluation model only. Correct? The revaluation accounting treatment, very simple. First time revaluation, if there is a increase, it will be a revaluation gain, and that revaluation gain will be transferred to OCI and accumulated in revaluation surplus. So any revaluation gain will be recognized in OCI as revaluation gain and accumulated in revaluation surplus. But downward revaluation, there is a revaluation loss. Revaluation loss will be debited to PL. What journal entry will do? Journal entry PL account debit to property, plant and equipment. Subsequent revaluation depend upon previous upward revaluation. Previous upward or downward revaluation. If previously there was upward revaluation, once again upward, the revaluation gain will be transferred to OCI and accumulated in revaluation surplus. But now downward, previous upward, but now downward. So can you say now there is a revaluation loss? This revaluation loss will be first adjusted with which will be debited to OCI to the extent of revaluation surplus available, and the balance loss will be debited to PL. Means what journal entry will do for this? First OCI account debit, then PL account debit to property, plant and equipment. Understood? Now coming to downward, previously downward, once again downward, to revaluation loss will be debited to PL, but previously downward, once again now it is upward, so there is a revaluation gain. So this revaluation gain will first credited to PL to the extent of previous decrease, and the balance gain will be credited to OCI as revaluation surplus. So what journal entry will do? PP account debit, first it will be credited to PL to the extent of previous decrease, and the balance will be credited to OCI and accumulated in revaluation surplus. Understood? Yes sir, chalega. Now coming to accounting treatment of accumulated revaluation surplus. This is very important from examination point of view. There are two options given. First option is what? The entire gain in accumulated revaluation surplus will be transferred retained earning on derecognition of the asset. Derecognition of the asset means on disposal of that asset. So entire revaluation surplus of an item of PP will be transferred retained earning when the asset is derecognized. The journal entry is what? Revaluation surplus account debit to retained earning. The second option is what? An amount equal to additional depreciation. Can I say you can easily calculate the amount of additional depreciation? The amount of additional depreciation from examination point of view, the entire revaluation gain divided by useful life kar dena. This is what? Amount of additional depreciation. Amount of additional depreciation. So this is for 1 year. If suppose the remaining useful life, out of remaining useful life, 3 year has been expired, so this become 3 year additional depreciation. Understood? So additional depreciation, you can calculate the amount of additional depreciation will be transferred from revaluation surplus to retained earning during its remaining useful life. So an amount equal to additional depreciation will be transferred from revaluation surplus to retained earning during its remaining useful life. If question is silent, you can always use this. The question has given the information about this, then of course you need to consider this also. I hope you have understood this point. Yes sir. Then this you can do by your own. Coming depreciation, only 2 point I will say. Depreciation will commence from the asset from a date when the asset is ready for use, not put to use. Depreciation will commence from a date when the asset is ready for use, not put to use. Correct? Second, depreciation will cease when the asset is classified as held for sale or when the asset is derecognized, whichever is earlier. So the asset may be classified as held for sale as per the requirement of IND AS 105. So on that date will cease depreciation. After that, no depreciation will be charged. Or on the date of derecognition, whichever is earlier. Component accounting, you all know that now we follow component accounting. We charge depreciation based on significant component, based on the useful life of significant component. Residual value, you know, depreciable amount, you know, useful life will be given the question, residual value will be given the question. Depreciation method, SLM, RBM, PUM, this will be as per the information given the question. So normally question will provide which method we need to use, either SLM or reducing balance method or production unit method. Changes in useful life, of course we need to do changes in useful life, residual value or depreciation method on a prospective basis. On a prospective basis means we need to do the changes depreciation for the year in which the changes has been made, correct? Land and building, of course the land is not a depreciable asset, building is a depreciable asset. On building we should charge depreciation as per the useful life of building. Impairment loss will be calculated as per IND AS 36. Derecognition will derecognize property, plant and equipment when there is no future economic benefit expected from that or on disposal of that asset, whichever is there. Yes sir. Yes, sir. Calculation, of course, we know calculation sale proceed minus cost of disposal minus net sale minus the carrying amount of the asset, that will become gain or loss. This gain or loss will be always transferred to PL. Be careful, be careful. This loss on sale cannot be adjusted with revaluation surplus. This gain or loss will be always transferred to PL even though asset is revalued. Even though there was the revaluation surplus, so this gain or loss will be always transferred to PL. It cannot be adjusted with revaluation surplus. It cannot be adjusted with revaluation surplus. Correct? Understood this much? Correct. Now there is one special point that whenever this one special point is what this gain cannot be considered revenue, because revenue means what? Income from ordinary activity. But there is one special point that there was some property, plant and equipment which was initially given on rent, then after some time it is ceased to be given rent and included in inventory in the ordinary course of business, then the sale of inventory which was initially PP will be considered as revenue, and we will do reclassification of PP to inventory. So reclassification is always done at carrying amount. We'll pass one journal entry, inventory will increase and PP will decrease, inventory account debit to PP, and the sale of such inventory will be considered as revenue. Scope you can read, scope I think not required, this you can read, disclosure you can read. So this is the entire coverage of IND AS 16. The last point is what? Appendix A to IND AS 16. This might be important from examination point of view. Changes in DRSL. Suppose you have created a provision for decommissioning, restoration, similar liability, and subsequently there is some changes due to reassessment of future expenditure. Then how to do accounting? It is based on whether you are using cost model or revaluation model. If it is cost model, so any increase it will be added to the cost price of the asset, means any increase in provisional amount. So what journal entry will do? Property, plant and equipment to respective provision. If there is a decrease in liability, then it will be reduced from the cost price of PP. So what journal entry will do? Provision account debit to property, plant and equipment. Correct. However, if the decrease is more than the carrying amount of PP, then any balance amount will be credited to PL. Understood? However, it is revaluation model, so increase in liability and decrease in liability will not be adjusted with the cost price of PP. This will be adjusted with revaluation surplus, if any. Correct. Now if there is an increase means loss, so this loss will be adjusted with OCI to the extent of revaluation surplus available. Balance will be debited to PL and this will be provision. So this will be adjusted with OCI to the extent of revaluation surplus available, and balance will be debited to PL, if any. If there is an increase, so there is a gain. Sorry, if there is a decrease in liability, there is gain. So this gain will be transferred to what? OCI. But if suppose previously there was a downward revaluation, so I will say you can do in this way: provision account debit to PL to the extent of previous decrease. Due to downward revaluation, any balance will be transferred to OCI to the extent of revaluation surplus. Understood? Correct? Chalega? Yes, sir. With this entire coverage, then now let us come to the expected question. Can we come to the expected question? Now, expected question is already given in my Telegram channel. I have recently added one more Google Drive link. In this, all these expected questions chapter wise has been given. So go to my Telegram channel. I am saying go to my Telegram channel. The link of the Telegram channel is given in the description of this video. So go to my Telegram channel. So this is given chapter wise. Correct now. So can we come to the expected question? Follow up to this. Now you can ask me some question if you want to ask. I am ready with the expected question. So how many marks will be asked in your expected question? They could just try to, this is an expectation, probability are there, but you can't be sure about that. But how I have designed my expected question, if you do that much question, so mostly all the concept will be covered. That will also help you for any new question in exam. Correct now. So right now, don't think about that how many marks will be asked. Just try to understand whether you are able to do this type of questions or not. Correct now. Whether you are able to do this type of questions or not. Right now, don't think about marks. Correct now. It is quite possible that from this expected question more than 50 marks question may come. It is quite possible that they may create some new question in your FI paper. Then what to do? Yes sir. चलो start करते हैं. Question number 1. This is question number 43 of my question bank. So if you are following my question bank, you can come to question number 43 of my question bank of 10th edition. Of 10th edition. Got this point? Yes, sir. What is given? On 1st April 2019, entity purchased an office block building for 50 lakh and paid a non-refundable property transfer tax. So this non-refundable property tax will be capitalized because non-refundable tax, and direct legal cost, this will be also capitalized. So this will be capitalized. Okay, sir. During 2019, the entity redeveloped the building into two-story building. Okay. Expenditure means they have redeveloped in 2 floors. Expenditure on redevelopment 1 lakh, building plan approval, this will be capitalized. 10 lakh construction cost, this will be capitalized, including 60,000 refundable purchase tax. Refundable, so this will not be capitalized. The amount to capitalize will be 9 lakh 40,000. 9 lakh 40,000. 40,000 due to abnormal wastage of material labor. So this abnormal loss will not be capitalized. Abnormal loss will not be capitalized. When the redevelopment of the building was completed on 1st October 2019, so this is the date when the asset is ready for use. So will cease capitalized on this date. The entity rent out ground floor of the building to its subsidiary company under an operating lease in return for rental payment. So they have given the ground floor on rent. So can I say any property which is given on operating lease for earning rental income will be investment property? Will be investment property. So it is actually related with IND AS 40 also. IND AS 40. So I'll come to IND AS 40. I will just revise that concept also. The subsidiary use the building as a retail outlet for his product. Subsidiary using that particular property for his retail outlet means for business purpose only. The entity for his administration and maintenance staff usage. The first floor is used for the admin purpose only. Yes, sir. Equal value can be attributed to each floor. But first floor, ground floor, equal value will be attributed. Will divide by 2. How will the entity account for the above mentioned expenses in the books of account? So of course you need to just write down what will be capitalized and what will not be capitalized. Also discuss how the above building will be shown in the consolidated financial statement of the entity as a group and in the separate financial statement as per relevant IND AS. For this you need to also understand the concept given under IND AS 40. So first let us do capitalization part. So purchase price will be capitalized, non-refundable fee will be capitalized, property tax will be capitalized, direct legal cost will be capitalized, expenditure on redevelopment, building plan approval will be capitalized, and construction cost reduced by a refundable tax will be capitalized 9,40,000. So this become the total cost. Will divide by 2. The first floor will be half, second floor will be half. Treatment of abnormal wastage. So you need to write down as per IND AS 16, abnormal loss will be charged to profit and loss account as an expense immediately. Only this much you should write down. Now accounting property of building. Now what IND AS 40 says that whenever there is a property which is used for 2 purposes. So and if that portion of the property is separable, then apply respective IND AS. Apply respective IND AS. So can I say, just try to understand in the separate financial statement. In the separate financial statement of parent company, can I say first floor will be property, plant and equipment. So it is used for admin purpose, and the ground floor will be considered as investment property because it has been used for earning rental income, correct? However, in the individual financial statement of subsidiary company, so that property which has been taken on rent is used for what? Business purpose, so that will be classified as property, plant and equipment. But in consolidated financial statement, because the entire building is within group, whether it is first floor or ground floor, is entire building is within group, so entire building will be classified as property, plant and equipment. This is as per the concept given under IND AS 40. This is as per the concept given under IND AS 40. That is only given. Just read this point, you will be able to understand. This is a very good question, already asked in exam, can be repeated in the exam. Chalega? Yes, sir. Then come to question number 2. This is also newly introduced question. What is the question? Check karenge. An entity has the following item of property, plant and equipment. This can be asked in MCQ. This question can be asked in MCQ. Property A vacant plot of land on which it intend to construct is new admin headquarter. There is a vacant plot in which they are intending to construct a new admin headquarter. Property B, a plot of land that it operate as a landfill site. Landfill site means what? In that all the garbages are thrown. That will be open area where we throw all the unwanted things. A plot of land that it operate as a landfill site. Property C, a plot of land on which is existing admin headquarter are built. Means a plot of land in which admin headquarter has been constructed. This is nothing but land and building. This become land and building. Property, a plot of land on which a direct sales office is built. This is also land and building. So in the land, there is some direct sales office has been constructed. Property E1 to E10, 10 separate retail outlet and the land on which they are built. This is also land and building on which retail office has been constructed. Equipment A, computer system at its headquarter and direct sale office that are integrated with the point of sale computer system in the retail outlet. So it is a computer system which is integrated with the computer system in retail outlet. Equipment B, point of sale computer system in each of the retail outlet. So this is also computer, this is also computer. Then furniture and fitting in his admin headquarter and his sales office. There are some furniture and fitting in admin headquarter and sales office. Then shop fixture and fitting in the retail outlet. There are some fixture and fitting in retail outlet. How many classes of the property, plant and equipment? You can see these are 2 land. Then there are 3 land and building. Then A and B, these are computer system. And these are fixture and fitting. And this is also fitting, fixture and fitting. This is a furniture and fitting. This is fixture and fitting. You're getting? Now just try to understand. Whenever there are land, but there is one land where admin office will be constructed. And there is one land which is open area for landfill site. These are 2 different class. They have asked you to find out the class of property. So this property A will be different class. Property B will be different class because nature is different. So we do class wise, we do selection of class as per the nature of the asset, but because there are 2 land but have a different nature, they will be of different class. So property A will be different class, property B will be different class. Property C, D, these are land and building, and property E1 to E10, these are also land and building. This can be considered as same class because this is land and building in which some office building has been constructed, but some judgment is required, but the question is silent regarding that. So you can consider property CD E1 to E10 as a same class because this is land on which some building has been constructed. This building is admin office, sales office or retail outlet, so you can consider as what same class. However, retail outlet based on judgment can be considered as separate class also. Equipment A and equipment B are, because these are computer system which are integrated, therefore this will be a same class. So equipment A and equipment will be a same class. This furniture and fitting in admin headquarter and his sales office, and so shop fixture and fitting, this will be of different class. Because their nature will be different. One is they have given shop fixture and fitting in retail outlet, and one is furniture and fitting in admin headquarter office. Of course, furniture and fitting and the fixture and fitting will be of different class. So based on the judgment, we need to also classify that. So of course, this can be important for MCQ question. Okay, sir. Correct. Have you understood? Yes, sir. This can be one good question till now not asked in exam, question number 2, but this can be important for MCQs. I hope you have understood question number 2. Just read the answer, you will be able to understand. I hope you have understood. Can we go to the other question, question number 3? Question number 3 says what? Entity X has a warehouse which is closer to the factory of entity Y and vice versa. The factories are located in same vicinity. Same vicinity means same area. Entity X and entity Y agree to exchange their warehouse. The carrying value of warehouse of entity X 1 lakh and its fair value is 1,25,000. It exchanges warehouse with the entity Y, the fair value of which is 1,20,000. They also receive cash amounting to rupees 5,000. How should entity X account for the exchange of warehouse? Now it is given that one warehouse has been exchanged with another warehouse, and both the warehouse is located in the same vicinity. So can you say in this they are similar asset? Similar asset means this transaction lacks commercial substance. This transaction lacks commercial substance. However, it is not given clearly, but whenever in exam they say similar vicinity, same area, same surrounding, we'll always assume that this exchange transaction lacks commercial substance. Therefore, the cost price of new warehouse will be equal to carrying amount of asset given up, carrying amount of warehouse given up plus minus cash adjustment. What is the carrying amount of warehouse given up? 1 lakh. What is the cash? 5,000. Therefore, the cost price of new warehouse will be 1 lakh 5. Uh, sorry, it also receive, my mistake. It also receive cash amounting to rupees 5,000. So it will be 1 lakh minus 5,000, that is 95,000. So 95,000 will be the cost price of new warehouse. So it is given 95,000 is the cost price of new warehouse which has been acquired. Understood? Have you understood this particular point? Correct. Now in this question, if they ask for 5 marks question, so of course you write down how as per IND AS 16. Whenever as per IND AS 16, how to write down as per IND AS 16, cost price of an asset acquired in exchange of non-monetary consideration will be equal to fair value of asset given up plus minus cash adjustment of fair value of asset received. However, if the fair value is not measured reliably or as the exchange transaction lacks commercial substance, then cost price of new asset means cost price of TP acquired will be equal to carrying amount of asset given up plus minus adjustment. In the given case, because one warehouse has been purchased with another house and they are in similar vicinity, similar area, therefore it can be concluded that this transaction lacks commercial substance, and therefore the cost price of new warehouse will be equal to carrying amount of old warehouse plus minus cash adjustment, in this minus cash receipt. So in this you can write down. Chalega? So when transaction lacks commercial, then there will be no gain and loss. In this particular case, there will be no gain and loss. Just try to understand what will be journal entry. New warehouse will be 95,000. Bank account, how much you have received? 5,000. And old warehouse, the carrying amount is 1 lakh. So ultimately there will be no gain or loss. There will be no gain or loss. So nothing will be transferred to PL. Nothing will be transferred to PL. Understood? Whenever transaction does not lack commercial substance, then there will be some gain or loss. That gain or loss will be transferred to PL. That gain or loss will be transferred to PL. Understood? Yes, sir. One more doubt came, sir. How many classes are there? So you can add on this property A. This property A is one class. Property B is second class. This property C and D, as per the solution given, from my point of view, it requires judgment. But if you see the solution, so as per solution, this property C and D will be another class. This will be third class. Property E1 and E10 will be fourth class. Equipment A and B together will be fifth class. Furniture and fitting will be sixth class. And shop fixture and fitting will be seventh class. Understood? Have you understood now? Now, okay. As per the solution, from my point of view, this property C, D and property E1 and 10, for that judgment require more information required, but as per the solution they have given, as per the judgment they have taken that property E1 to E10 will be a different class because they are of different nature. तो हम solution को follow करेंगे. Got this? चलेगा? Yes, sir. Please, have you understood question number 3? Yes, sir, बोलो. Have you understood question number 3? Have you understood question number 3? Everyone. Question number 3 done. Come to question number 4. This is a very important question. Flying Airways Limited is a company which manufacture aircraft part and engine and sell them to large multinational company like Boeing and Airbus Industries. On 1st April 2001, the company began the construction of new production line. Okay. The costs relating to production line are as follow. Cost of basic material lease price less trade discount. So this will be capitalized. Recoverable goods and service tax incurred not included in purchase. Recoverable means refundable. This will not be capitalized. Employment cost of the construction staff for 3 months. Whenever they give 3 months, 2 months, 4 months, be careful because the capitalization will be only for the capitalization period. capitalization period will be up to the date when the asset is ready for use. So be careful. So this will be capitalized, but for how many months you need to be careful. Other overhead directly related to construction, this will be also capitalized. Payment to external advisor relating to construction, this will be also capitalized. Expected dismantling and restoration cost, this will be also capitalized, but at present value. Got this? Yes, sir. Additional information. The construction staff was engaged in the production lines, which took 2 months to make ready for use and was brought into use on 31st May. Is this capitalization will be only for 2 months. So 2 month expenditure will be 800. Will capitalize 800. Understood? Yes, sir. The other 400 will be charged to PL as an expense immediately. The other overhead they incurred in 2 month period only. So this 900 is incurred for 2 months only. Ended on 31st May. They included an abnormal cost of 3 lakh caused by major electrical fault. This 900 include 3 lakh. This 900 include 300 as an abnormal loss. So can I say out of this 600 will be capitalized and 300 will be charged to profit and loss account. 300 will be charged to profit and loss account. Understood? Yes, sir. The production line is expected to have an useful economic life of 8 years. At the end of that, Flying Airways Limited has a legally required to dismantle the plant. Of course, there is a legal requirement to dismantle the plant, and the amount of 2 million is already given here. Yes, sir. They have given discounting rate is 5%, and they have given discounting factor rupees 0.68. Every information is given. You'll do 2000 into 0.68. That will be capitalized. 4 years after being brought into use, the production line will require major overhaul to ensure that it generates economic benefit for the second half of useful life. Well, after 4 years from a date when the asset is ready for use, it requires some major overall expenditure which will give benefit for another 4 years. So what IND AS 16 says that we need to find out the current price of that future expenditure which will be included in the current cost, and for that portion of expenditure the benefit will be for how many years? For the first 4 years. It means you need to find out the current cost of the future expenditure. So they have been given the estimated cost of overall at current prices. Current prices means as on the date of initial recognition was 3 million. Understood? Correct. So for this 3 million, the economic life will be 4 years. And for the balance portion, the economic life will be 8 years. So we need to use the component accounting for depreciation. This particular point is very important. Normally student, you will do mistake yahin par. Have you understood this para? Yes sir, bolo. Have you understood this para? Correct. If you have not understood, I will explain again. The company compute the depreciation charge on a monthly basis. The depreciation will charge from which date? From the date when the asset is ready for use. It was ready on which date? On 31st May. 31st May to 31st March. 31st May to 31st. 10 month to 10 month depreciation will be charged. For 10 month depreciation will be charged. Analyze the accounting implication of costs related to production line to be recognized in the balance sheet and profit and loss account. They have asked you what amount will come in balance sheet, what amount will come in the profit and loss account. Correct? Yes, sir. First let's see what will be the amount of capitalization. So purchase cost will be capitalized. Yes, sir. Then the goods and service tax which are recoverable will not be capitalized. Then employment cost will be capitalized at 800. So the alignment mistake is there. Employment cost for 2 months. Then other overhead minus abnormal loss will be capitalized. Payment to external advisor will be capitalized, and dismantling cost will be capitalized at present value. So this become the total cost to be capitalized. Now out of this, can I say 3000 belong to what? Current cost of the future, current cost of major overall. This portion of current cost of major overall which may incur after 4 years will be deemed to be included in the total cost, for which we'll assume that it will give benefit for the next 4 years, first 4 years, and the balance 10,260 will be depreciated for 8 years. Useful life will be 8 years. For this useful life will be 4 years. This have you understood? Correct. So of course, can I say on this 3000 we can charge depreciation for 10 months based on 4 year economic life? and on 10,000 to will charge depreciation for 10 months based on 8-year economic life. That you can calculate. Correct. Now we have created a provision of 1360. 1360 mechanism will add interest at a rate of 5% for 10 months. It will come 1360 into what is the rate of interest, 5% into 10 divided by 12 is coming how much? 56.67. So 56.67 will be added, and this will be the carrying amount of provision in the balance sheet. Carrying amount of provision will be 13, so इसमें add करो, that will become 1417 approximately. So this become the carrying amount of provision in the balance sheet. Understood? Depreciation you can calculate and then you can do it. I hope you have understood. Any doubt? So you can see in the balance sheet, property, plant and equipment will come after depreciation. Provision for dismantling cost will come after adding finance cost. Correct. In statement of period, depreciation will come as we have calculated using the economic life. Finance cost will come. This is the extract of SOP. Can be one good question. Similar question is given in MCQ also. Have you understood this particular point? Done. Any doubt in this? Any doubt in this question? This is most expected question in exam. Hello. Yes sir, no sir. Have you understood? Can I proceed? Question 5. This is also a good question. Can be asked in exam. Already asked in exam. ABC Limited is setting up a new refinery outside the city limit. In order to facilitate the construction of refinery and its operation, ABC Limited required to incur expenditure on the construction and development, railway siding, roads and bridges. So ABC Limited incur the expenditure on construction development. It will not have any ownership right on these items, and they are also available for use to the other entity at public address. Is what they are saying. They have a factory, and outside the factory they have constructed some road and railway siding and bridges. So can I say, if I am constructing any road outside my premises, I do not have any control on that. This it will not meet the definition of asset. So any expenditure which will not meet the definition of asset should be charged to profit and loss account as an expense. Correct now, because it will not meet the definition of asset. But in this case, what IND AS 16 says that whenever we apply recognition criteria, so recognition criteria will be applied based on the unit of measurement. Is what constitute a unit of measurement has not been defined under IND AS 16. Therefore, judgment need to be applied. Just try to understand. A factory cannot give future economic benefit without this road, without this bridge, without this railway siding. If you want to apply recognition criteria on factory, that can be achieved only when you include that road, bridge as a total and apply recognition criteria. So what IND AS 16 says that because unit of measurement has not been defined, we need to apply the judgment in this case, and the recognition criteria will be applied on the group of assets which are capable of generating future economic benefit in future, and therefore in this case the road, bridge and railway siding, the expenditure on that will be capitalized. However, for depreciation we'll use the component accounting. For depreciation we'll use component accounting, that is given. So this is a case study based question. You write down as per the case study. So in this you should write down first recognition criteria, then write down that IND AS 16 does not provide the unit of measurement for recognition, that is what constitutes an item of PP. The judgment is to be required in applying the recognition criteria to entity specific circumstances. Correct? So in the given case, the railway siding, then you can write down in your own word, depreciation will be done as per component accounting. So if this question comes, just write down that yes, it will be capitalized. Yes, the expenditure will be capitalized. Understood? Chalega. Component portion needs separate disclosure. No separate disclosure required for component depreciation. In balance sheet, we write down total asset minus accumulated depreciation. So depreciation will be calculated based on component accounting, but in disclosure will be done on total asset basis. Total asset basis. Understood? Does MCQs need extra preparation? No, it does not require any extra preparation. Whatever you are doing for descriptive questions, similar type of question will be asked MCQs, but based on 2 marks. Correct now. So if you are doing Thoroughly, you can attempt all the MCQs. Correct? MCQs for for FR paper. I don't know about other subject. For FR, it does not require any additional preparation. चलेगा? Come to one more question. Question number 6. Entity has a nuclear power plant and related decommissioning liability. The nuclear power plant started operating on 1st April 2001. The plant has a useful life of 40 years. Its initial cost was 1,20,000. So they have given initial cost on 1st April 2001. This includes an amount for decommissioning cost of rupees 10,000. Well, 1,20,000 include 10,000, which represented 70,400 in estimated cash flow payable in 40 years, discounted at a risk adjusted rate of 5%. So this 10,000 is the present value of future expenditure, that is 70,400 discounted for how many years? 40 years at a risk adjusted discount rate of 5%. So they have given present value as well as future value of expenditure. The entity's financial year end on 31st March. Assume that a market based discounted cash flow valuation of rupees 1,15,000 is obtained on 31st March 2004. So they have given market value cash flow valuation, discounted cash flow means they have given fair value. Fair value has been given for revaluation model. Yes, sir. But on which date? On 31st March 2004. This valuation is after deduction of an allowance of 11,600 for decommissioning cost, which represent no change to the original estimate after the unwinding of 3-year discount. Like this 1,15,000 is after deducting an allowance for dismantling cost, which is nothing but 11,600. This 11,600 is nothing but cost of disposal, because dismantling cost is nothing but disposal cost. This 1,15,000 is after deducting the cost of disposal. So this is actually fair value less cost of disposal. Now you only say revaluation is done at fair value, keep fair value less cost of disposal at fair value. So we don't require fair value less cost of disposal, we require fair value for revaluation. So in this, what you should do, you should find out fair value by adding, what you'll do, 1,15,000 will add 11,600, and this will become what? Fair value. The fair value will become 1,15,000 plus 11,600. This become 1,26,600. Have you understood this particular point? This is the point which you need to understand from examination point of view. This question is still now not asked in exam, can be asked in exam, super expected in exam. So 1,15,000 plus 11,600 become what? Fair value. Fair value become how much? 1,26,600. On 31st March 2005, means next year, the entity estimate that as a result of technological advances, the present value of decommissioning liability has decreased by 5,000. So there is a reduction in provision. Whenever there is a reduction in provision, we have to apply appendix A to IND AS 16. Now in this case, revaluation model is adopted. So any decrease is again will be transferred to revaluation surplus. So this decrease will be adjusted with revaluation surplus as per appendix A to IND AS 16. The entity decide that full valuation of asset is needed at 31st March 2005 in order to ensure that carrying amount does not differ materially from fair value. The asset is now valued at 1,07,000, which is also net of allowance for reduced decommissioning obligation. This is also they have given fair value less cost of disposal. So we should do is to find out fair value. We should do fair value less cost of disposal plus cost of disposal. But abhi right now they have not given the cost of disposal as on 31st March 2005. That we need to find out. How the entity will account for the above changes in decommissioning liability if they adopt revaluation model. Have you understood the entire question? If I just go through the entire question, just try to understand what they have given. 1/4/2001, the cost price was 1,20,000. It include TRSL of 10,000. Now they have given 31st March 2004. In this, revaluation model was adopted. Correct. First, we need to find out carrying amount up to these days. Carrying amount will be after depreciation. depreciation will be for how many years? 40 years they have given. So can you see, we'll do 1,20,000 divided by 40 into 3. This is 3 year. 9,000 become depreciation. This become minus 9,000. This become 1 lakh. 7,000. Correct now? Understood? So this become carrying amount. Now on this date, you need to find a fair value. Fair value they have given 1 lakh, means fair value less cost of disposal they have given how much? They have given 1 lakh 15,000. In this we'll add 11,600. 1 lakh 15,000. We'll add 11,600. This become 1 lakh 26,600. 11,600 is nothing but after adding interest for 3 year, if you add same amount will come. Check kar lena at the given discount rate. This become fair value. So what is the revaluation gain? Revaluation gain will be 1,26,600 minus 1,11,000. Revaluation gain will be 15,600. Understood? Now this is 31st March 2005. 1 second depreciation will be charged for this particular year. That will be now on 1,26,600 divided by remaining useful life. Remaining useful life will be 40 minus 3 means 37. 1,26,600 divided by 37 is equal to how much? It will come 3420. You can see rounding off will come 3420. What is the carrying amount? 1,26,600 minus 3420. It will be coming 1,23,180. This become carrying amount after depreciation. Now what was the decommissioning liability? यहाँ पर 11,600. In this will add 5% interest. 5% interest is given na? 5% interest. So after adding 5% interest, how much it is coming into 1.05 is coming 12,180. You can say 12,200, 12,200 approximately. In solution, I think they have taken 12,200. So I am also taking that. You can take 12,180 also. Correct? Now it has been reduced by how much? 5,000. After that, what is the changes? 7,200. This become now the reduced liability. This become the reduced liability. Now what is the fair value less cost of disposal given at this point of time? What is the fair value less cost of disposal given? You can see it has been given how much? Fair value less cost of disposal given 1,07,000. 1,07,000. 1,07,000 plus you'll do 7,200. This will become 1,14,200. This become fair value. So 1,14,200 minus carrying amount is given how much? 1,23,180. There will be some revaluation loss. This revaluation loss will be first debited to OCI to the extent of revaluation surplus available, and balance will be debited to PL. So of course we have revaluation surplus, that will be charged to revaluation surplus only. Correct? What is the revaluation loss? 1,14,200 minus 1,23,180. Correct? It is coming 8980. 8980. This will be debited to OCI revaluation surplus, and any increase, this is a gain. This will be credited to OCI as revaluation surplus. This becomes the entire explanation of this question. Have you understood this particular point? Have you understood this? This explanation, have you understood? Follow, yes sir, fast. Understood? Correct. This can be one probable question in exam. This can be one probable question in exam. Okay, sir. Yes, sir. Done. One last question of India 60. Similar question have been asked in exam, but once again it can be asked. Can be also asked in the form of MCQs also. Okay, sir. What is given? On 1st May 2022, Sanskar Limited purchased 42 lakh worth rupees land for construction of a new warehouse for stocking new product. They have purchased land. The land purchase had a old temporary structure which was to be demolished for the purpose of construction of warehouse. The salvage material from the demolition was to be sold as a scrap. The company started a construction work of the warehouse on 1st June 2022. They purchased land on which date? 1st May. But the construction started from which date? From the 1st June. Following costs were incurred by the company with regard to the purchase of land and the construction of warehouse. Legal fee for the purchase contract of land and record ownership. This will be capitalized. This particular amount will be capitalized where? In the cost price of land. Understood? This will be capitalized in the cost price of land, capitalized, but in the land portion. Architect and consultant fee, it will be capitalized, but in building portion. Cost of demolishing existing structure for the purchased land, this will be capitalized, but in the land portion. In the land portion, because you are demolishing the old building. So because you purchase one land with old building, so whatever demolition cost will be added to the cost price of land only. So you can use the land only after demolition. Only after demolition. Understood? This is a beautiful point. 1,35,000 will be added to the cost price of land. Here you can do mistake. Here you can do mistake. Site preparation charges. This will be capitalized to the building. The building. Purchase of cement and other material for the construction, including GST of 1 lakh, and GST credit is 50% of payment. Which can I say? We should only capitalize 50% of GST. 50% of GST will not be capitalized. 15 lakh minus 50,000 will be capitalized. Minus 50,000 will be capitalized to building portion. Employment cost of construction worker will be capitalized to building portion. General overhead cost will not be capitalized. 30,000 per month will not be capitalized. Overhead cost incurred directly on construction of warehouse, it will be capitalized, but they have given 35,000 per month. Be careful. Income received from land used as a temporary parking, this will not be capitalized. This will not be capitalized. Chalega. Receipt of 35,000 being proceed from the sale of salvage and scrap material from demolition of existing. So this sale of scrap will be deducted from what? This demolition cost will do 1,35,000 minus 35,000, and this net amount will be capitalized with the cost price of land. This net amount will be capitalized with the cost price of land. Material costing rupees 40,000 was wasted, and further 1,20,000 was spent to rectify the wrong design work. So this material costing, to where is the material given? Purchase of cement and other material. So from this will minus what? 40,000 and will minus 1,20,000. 1,20,000. Understood? So this both will be deducted. Yes. The employment cost are for 10 months from 1st June to till 31st March. But they are saying this entire employment cost is for how many months? 10 months. We need to just understand how for how many months we can do capitalization. Yes, sir. The construction of factory was completed on 28 Feb. 28 Feb, which is considered to be substantial period of time as per Ind AS 23. So 28 Feb, it started on which date? It started on 1st June. So 1st June, July, August, September, October, November, December, January, February. It is 9 months. The capitalization can be done for 9 months. What will do? 8 lakh into 9 by 10 will be capitalized, and 1 by 10 will be charged to profit and loss account. Be careful about this point. Here also you can do mistake. The use of warehouse commenced on 1st March. So from the next day only it was put to use. So depreciation will be charged from 1st March only, means from a date when the asset is ready for use. The overall useful life factory building was estimated at 25 years from the date of completion. However, it is estimated the roof of the warehouse need to be replaced 15 years after the date of completion, and the cost of replacing the roof at current price would be 25% of the total cost of building. This 25% of total cost of building will be allocated to roof, and for roof the useful life will be 15 years. For balance portion the useful life will be 25 years. And again depreciation will be charged only for 1 month, because from 1st March, so only for 1 month depreciation will be charged. Yes sir. At the end of 25-year period, Sanskar Limited is legally bound to demolish the factory and restore the site to its original condition. So of course they will give you some future expenditure 80 lakh. They will also give you what? Discounting factor. They have given 0.092. Of course you can find the present value. This will be also capitalized. This will be also capitalized. Sanskar Limited raised a loan of 60 lakh at a rate of 10% per annum on 1st June. So 1st June, this was the construction period. So capitalization will be done from 1st June only. But for how many months? Only for 9 months. Because once the asset is ready for use, then further no capitalization. So then 60 lakh into 10%, 60 lakh into 10% into 9 by 12. This much will be capitalized. Yes, sir. The building of warehouse meet a definition of qualifying asset. Okay. Sanskar Limited received an investment income of 25,000 on the temporary investment of the proceed. So as per IND AS 23, for specific borrowing, any investment income from temporary investment will be deducted and net amount will be capitalized. Net amount will be capitalized. Understood? Assume the cost of demolition of the old structure is directly attributable to cost of land. It is given also. Even though not given, we'll assume this only. The company follows straight line method of depreciation. You are required to compute the cost of construction of warehouse, depreciation charge, and the carrying amount. Carrying amount means after depreciation. Carrying amount means after depreciation. You should also explain your treatment. So you should also explain why you have capitalized, why you have not capitalized. So capitalized means directly attributable cost. Not capitalized means not directly attributable cost. Only this much you should write down for explanation purpose. If capitalized means directly attributable cost, if not capitalized means not directly attributable cost. Understood? Yes, sir. This become the question. I think you have understood all the point. However, in this question, for this particular point, for this 1,20,000, they have taken two assumptions. If this 1,20,000 is not included in this 15 lakh, then can I say if not included, then will not deduct 1,20,000. But if 1,20,000 is included in 15 lakh, that will deduct. So from my point of view, question is silent. Always will assume this is the total material cost and 1,20,000 is included in 15 lakh. So on that assumption, I have done the calculation. Understood? However, they have given solution in two ways for this 1,20,000. Correct? You can see the solution. You can see purchase 42 lakh, legal fee, net cost has been capitalized. This becomes the total cost price of land. Correct? Then for building, you can see everything has been capitalized. In the first assumption, they have taken that this does not include that 1,20,000. However, I have taken the second viewpoint. So you can also take the second viewpoint and you can read the answer. You will be able to understand. Now coming to depreciation, whatever cost you have calculated of building, this is the total cost of building calculated. Out of that, 25% will be allocated roof and the balance will be allocated to other part. For these, you will charge depreciation for 15 years for 1 month. For these, you will charge depreciation for how many years? What was the economic life? Economic life was 25 years. For how many months? 1 month. Depreciation can be calculated. Depreciation will be added. Depreciation will be deducted from the cost price and the net amount will be the become carrying amount. Got this point? You can do it. Chalega? Yes, sir. Last question for IND AS 60. Last question. Come to the last question. Company X built a new plant that was brought into use on 1st April 2001. The cost to construct the plant was 1.5 crore. The estimated useful life of the plant is 20 years and the company X account for the use for the plant using cost model. They have cost model. The initial carrying amount of plant included an amount of 10 lakh for the decommissioning, which was determined using a discount rate of 10%. Means 10 lakh is the discounted amount and this 1.5 crore include 10 lakh. On 31st March 2002, the company X remeasured the provision for decommissioning to 13 lakh. So they have remeasured the provision. So 10 lakh now become 13 lakh. Correct? Provide necessary journal entry at the end of year 1. So can I say at the end of year 1, you need to calculate depreciation. depreciation will be on 1.5 crore divided by 20. 1.5 divided by 20, it is coming how much? It is coming how much? Lakhs. Agar if you do in lakhs, so it will be 7.5 lakhs. So 7.5 lakhs. What journal entry will do? Depreciation account debit to accumulated depreciation. Then can you say on this 10 lakh you will also add interest cost. So 10 lakh into 10% means 1 lakh will be interest cost. What journal entry to do? Interest expense account debit to provision for dismantling. You can see interest expense account debit to provision for dismantling or decommissioning. 1 lakh, 1 lakh. Now, after adding interest, can you see it become 10 plus 1, 11 lakh? You will compare with the revised provision. Revised provision is 30 lakh. What is the increase? Increase is what? 2 lakh. So they have adopted cost model. This increase will be added to the cost price of the asset. So what journal entry will do? PP account debit to provision for decommissioning 2 lakh. Very simple question. This type of question can be asked in MCQ also. MCQ based question also this type of question can be asked. Just to correct. With this I have completed all my expected question. Expected question has been. Now you can do the balance question whatever you feel you can also do, and then IND AS 16 will be completed from your point of view. IND AS 16 done. You can see we have taken less than 1.5 hours for the revision. Now you say you want some hour break or I can continue. Follow. You want some break or I can continue? Or any doubt in this chapter, you can ask me that also. So I will take any other question if you have doubt in that particular question. IND AS 16, IND AS 16 mein, if you have some doubtful question, just inform me. I will take that question also into consideration. Now first, of course, I will continue. I am with you only. But first, any doubt in any particular question of IND AS 16? So it is quite possible that you have a doubt in that question and that question can come in exam. Then what is the use of revision? There is no use of revision now. So if you say sir continue other chapter, I will start with IND AS 38. 5 मिनट तो मैं बात ही कर रहा हूं आपसे. I will talk 5 मिनट. 5 मिनट के बाद ही स्टार्ट करूंगा. First just look into any conceptual doubt है, any question doubt है, any information doubt है. There are 3 types of doubt: conceptual doubt, question doubt, or solution you have not understood, or you have not understood the information of the question. So any doubt, just ask me. If no doubt, just write answer. Continue, continue, continue. I will continue. Whether my speed is okay? Speed is okay? Yes. Krishnamurthy, I have understood your doubt. Just try to understand what is the concept. Concept is what? This is conceptual doubt. Just try to understand what IND AS 16 says. What IND AS 16 says. Suppose the total cost has been incurred. That question was 13,260. Correct now. And after 4 years, some major expenditure is required to which will give the benefit for the next 4 years. It is nothing but one type of major overall expense or inspection cost. We call it inspection cost. Just try to understand whenever you have constructed any property plan equipment, at that time you need to incur some inspection cost. This cost will include some inspection cost or not. Without inspection, can you use any asset? For example, right now I am developing I'm constructing a building. मान लो constructing building. So can you say without inspection can we start using it? It is quite possible that it may the whatever the quality of cement you have used, that might not be correct. So some inspection is required for that particular construction. So it means what Ind AS 16 says that after 4 years you require some major inspection cost, a major overall cost. So that type of cost will be also incurred here, which will be giving benefit for the first 4 years. But you don't know how much is the amount of that expenditure. Therefore, this future expenditure you need to estimate. The present value of this will be considered as the current price of that future major inspection cost, and that will be deemed to be included in this cost price. That will be deemed to be included in this price. So out of 13,260, 3,000 will be considered as current price of major overall cost, which will be deemed to be included in this price, which will give benefit for the next 4 years. And the balance 10,260 will give benefit for the next 8 years. Now understood? Krishnamurthy, now understood? Suppose in the question they have given this future expenditure. You need to find out present value of this in exam. In this question they have given already the current price, but in your exam question they may give some future expenditure with the discount rate. To just find out present value, that become the current price of that expenditure, which will be deemed to be included in this. Understood. Now let us start with another chapter. Please come to Ind AS 38. Come to Ind AS 38. Now, Ind AS 38 revision will not take much time. Only small point. Let us do fast. Correct now. So intangible asset. What is the meaning? Meaning is what? Intangible asset which are identifiable, which are non-monetary, which is without physical substance. These are the three important characteristics of any asset, so that it will become intangible asset. First, it must be identifiable, it must be non-monetary asset, it must be without physical substance. Now identifiable is more important from examination point of view. Identifiable means what? Any asset which are either separable. Separable means it can be capable of being sold separately, capable of being exchanged separately, capable of being licensed separately, then it is separable. Or it arises from any contractual or any other legal right, even though it is not separable, then also it will be intangible asset. Means any asset is identifiable if it is either separable or it arises from contractual or other legal right, then it will become identifiable asset. So first condition is what? That asset must be identifiable, then only it can be intangible asset. Correct? Understood. This become the meaning of intangible asset. Yes sir. Then after that you can read the balance part. Recognition criteria means what? That same two condition. There must be probability of future economic benefit and cost can be measured reliably. Initial measurement of intangible assets similar to property, plant and equipment. Ind AS 16 means all the points are same to same. All the points are same to same. So I am not reading. Once again, deferred settlement terms also same point. Correct. When to seize also same point. Acquired in exchange of non-monetary assets, same point. Means it will be also equal to cost price of asset given up plus minus cash adjustment. Means cost price of intangible asset acquired will be equal to fair value of asset given up plus minus cash adjustment of fair value of asset received or carrying amount of asset given up plus minus cash adjustment. However, if the transaction lacks commercial substance, then the cost price will be equal to carrying amount plus cash plus minus cash adjustment. Acquisition as a part of business combination, this will do in business combination. Correct now. Acquired through government grant. So if any intangible asset is acquired through government grant, there are two options: either recognize at fair value or recognize such intangible asset at nominal value or concessional value. Nominal value or concessional value. However, this point is as per Ind AS 20. Internally generated intangible asset. Any intangible asset which are internally generated, there are two phases of expenditure. One is research phase. Any expenditure during research phase will be charged to profit and loss account. Development phase expenditure can be capitalized, not always, can be capitalized if 6 conditions are satisfied. If there are 6 conditions, means if the entity can demonstrate the following, then the development phase expenditure will be capitalized as an intangible asset. What are the 6 conditions? There must be technical feasibility of completing the intangible asset. There must be intention to complete the intangible asset. There must be ability, or there must be ability to use or sell intangible asset. There must be existence of market for the intangible asset or output of intangible asset. There must be availability of adequate technical or financial resources, and there must be ability to measure the expenditure reliably. If this is condition satisfied, from that date, when these six conditions satisfied, we can start capitalization. Is any expenditure before that date during development expenditure will not be capitalized. That will be also charged to profit and loss account as an expense. Correct? Understood? Then recognition of an expense. What Ind AS 38 says that if any expenditure does not meet definition criteria as well as recognition criteria, will be charged to profit and loss account as an expense immediately. So any expenditure which will not meet definition criteria as well as recognition criteria will be charged to profit and loss account as an expense immediately. Some examples are given, you can read. Subsequent recognition is similar to property, plant and equipment, means cost model, revaluation model, everything is same. So 1 second detailed discussion is not required. Amortization has been divided in two parts. Intangible asset having finite life, intangible asset having indefinite life. So any intangible asset having indefinite life will not be amortized. It will be tested for impairment on annual basis irrespective of indicator. So any intangible asset which has indefinite life will not be amortized, will be tested for impairment on annual basis irrespective of indicator. However, if it has finite life, we'll do amortization. Amortization is based on the information given in the question. Information will be given about cost price, about residual value, about the useful life. Based on that, we can do amortization. Correct? Now, so you know about depreciable amount, residual value, amortization period. This you know, everything you know. Three method, 1 second, SLM, RBM, PUM. Three method will be there: straight line method, reducing balance method, or production unit method. As per the information given in the question, we can do that. There is one point ki amortization based on revenue. This is very important point from MCQ also. Now, can we do amortization based on revenue? They have given three methods: SLM, RBM, PUM. PUM is based on the unit produced, expected unit to produce. Now, suppose the information has been given, they have given expected revenue to be generated from the use of intangible asset. So can you do amortization based on that? But no, it is not permissible. So amortization based on revenue is not permissible. So if they have given sales information or revenue information, that cannot be taken into consideration for amortization purpose. In that case, if nothing is given, use SLM only. If the future economic benefit expectation is not given, if that information is not given, then always apply SLM only. Understood? For intangible asset. However, this amortization based on revenue is permissible for only some type of asset where the objective is to generate revenue only. If you purchase the intangible asset and the objective is to generate some targeted revenue, then we can use amortization based on revenue. Means from examination point of view, question is silent. Don't use amortization based on revenue. Correct? This information has been given ki right to explore natural resources, right to operate toll road. This type of right can be amortized based on revenue. Otherwise, we'll never use amortization based on revenue. Impairment will be as per Ind AS 36. Derecognition is same to same whatever we have done under Ind AS 16. So this chapter you can see completed. There is no other point which require revision. Understood? Chalega? Can we start the question? You can see after Ind AS 16, now content will not require much explanation. Once you have understood Ind AS 16, Ind AS 38 it will be super easy. Correct? Now let us come to part. Question. So it is given expected question in AS 38. First, question number 6 is question number 6 of my question bank. Question number 1 of expected question. Sun Limited acquired a software from Earth Limited in exchange for a telecommunication license. The telecommunication license is carried at 5 lakh in the books of Sun Limited. In the books of Sun Limited, what is the carrying amount of license? 5 lakh. The software is carried in the books of Earth Limited at rupees 10,000. This is the carrying amount. Advise journal entry in the following situation. So they have given 3. We need to pass journal entry based on that. This is nothing but one intangible asset acquired in exchange of other intangible assets. We need to pass journal entry in both books. Both books means Sun Limited and Earth Limited. My question to you all: Sun Limited has acquired, means given up. Which asset is given up? Sun Limited acquired software. They have received software. They have received software and they have given up telecommunication license. What is the correct? Similarly, Earth Limited has given up software and they have received telecommunication license. Correct. So first they have given fair value of software is itna, fair value of telecommunication license is itna. Correct. Now for Sun Limited, we need to find out the cost price of software acquired. That will be equal to fair value of asset given up, the fair value of telecommunication license given up. The fair value of telecommunication license is 5 lakh. So that become the cost price of software. So what journal entry will do? Software account debit, add 5 lakh to telecommunication license at carrying amount, and carrying amount of telecommunication license is also 5 lakh. You can see this is carrying amount. Carrying amount is also 5 lakh, and therefore there is no gain or loss. Therefore there is no gain or loss. So software account debit to telecommunication license. But for Earth Limited, what is received? Telecommunication license. We need to find out the cost price of telecommunication license, which will be equal to fair value of software given up. Fair value of software given up. What is the fair value of software given up? 5,20,000. What journal entry will do? Telecommunication license account debit 5,20,000 to software. And what is the carrying amount of software? That is 10,000. So carrying amount of software is 10,000. So any gain or loss, that will be difference. Difference will be what? 5,10,000. That will be gain on exchange and that will be transferred to PL. Have you understood this? In this you can do mistake in carrying amount. So the asset which is derecognized will be derecognized at carrying amount. Be careful. Be careful. Understood? Second, fair value of software cannot be measured reliably. However, similar telecommunication license is transacted by another company at 4,90,000. So they have given fair value of telecommunication license. Correct. Now for Unlimited, we need to find out the fair value of software. This cost price of software, that will be equal to fair value of telecommunication license given up, and we know the fair value of telecommunication license, that is 4,90,000. What journal entry will do? Software account debit 4,90,000 to telecommunication license, carrying amount is 5 lakh. Difference will be loss will be transferred to PL. For Earth Limited, we need to find out the cost price of telecommunication license, which will be equal to fair value of software given up, but that is not known. Second preference will be fair value of telecommunication license, that is 4,90,000. So what journal entry will do? Telecommunication license 4,90,000 to software 10,000. The difference will be gain. Gain will be transferred to profit and loss account. Correct? Yes. Third point is neither fair value of software nor telecommunication license could be reliably measured. Means now fair value is not known. Then cost price will be equal to carrying amount of asset given up. So in this case, the cost price of software will be equal to carrying amount of telecommunication license, that is 5 lakh. In this case, cost price of software will be equal to carrying amount will be equal to, sorry, this is in this what they have purchased? Telecommunication license. The cost price of telecommunication license will be equal to what? Carrying amount of software given up. Correct. Now they have given reverse journal entry. Credit they have given software account debit. Debit they have done telecommunication license. Entry is correct only. Chalega. Yes sir. You do debit first, credit baad mein. Okay. Yes sir. This is also done. Question number 2 is also interesting question. What they have given? X Limited is engaged in the business of manufacturing fertilizer enter into a technical collaboration agreement with a foreign company Y Limited. As a result, Y Limited will provide a technical know-how, and the cost of that is 10 crore. How much they have paid? 10 crore. They purchase one intangible asset at 10 crore and the useful life is 5 years. X Limited estimated the production of fertilizer as follow. Year 1, year 2, year 3. They have given estimated unit to be produced, means we need to apply production unit method. At the end of year 1, they achieve its target production. At year end 1, they achieve the target production. At the end of year 2, 65,000 metric ton of fertilizer was being manufactured, and X Limited considered to revise the estimate for the next 3 years. The revised figure are 85,000, 1,05,000, 1,15,000 metric ton for 3, 4, 5. Second year, some information has been changed. Is for year 1, what will be the amortization? So what is the total cost? 10 crore. What is the actual production? They achieve the target production 50,000. divide by total estimated production. The total estimated production will be this: 50 plus 70 plus 100 plus 120 plus 110. Coming how much? 4,50,000. So this will be the first year amortization, equal to how much? 10 crore. 10 crore into 50 divided by 450. 1 crore 7 lakh 7,111. This become the first year. The second year normally student do mistake. The second year we need to first find out revised carrying amount. What is the revised carrying amount? This minus this. This minus this. That will be equal to how much? Is 8 crore 88 lakh 88,889. You need to find out first revised carrying amount. Then multiply with revised estimate. What is the actual production of second year? They produce actual 65,000 and then they have revised this. Revised this is how much? 85, 105 and 115. You will do 65,000 divided by revised estimate for the remaining year. That is 65 plus 85 plus 105 plus 115. That is coming 3,70,000. So this become the debt amortization for the second year. This become the amortization for second year. So normally student do mistake यहाँ पर कि for year 2 we need to first find out revised carrying amount. The revised carrying amount will be depreciated based on the new estimation. Based on the new estimation. Understood? Understood this point? Follow. चलेगा? Can we proceed? Yes sir, we can proceed. Then X Limited is engaged. This question can be also asked in MCQ. X Limited is engaged in the business of publishing journal. They acquired 50% stake. However, the question is not correct. It will be 100% in Y Limited, a company in the same industry. X Limited paid purchase consideration of 10 crore. Means this is related to IND AS 38. Read with IND AS 103. थोड़ा business combination तो you know. And the fair value of net asset acquired is 8 crore 50 lakh. The above purchase consideration include 30 lakh for obtaining the skilled staff of Y Limited. Now what IND AS 103 says that any intangible asset can be recognized in the books of acquirer if it meet the definition of intangible asset. Okay, skilled staff will not meet the definition of intangible asset and therefore it will not be recognized. The skilled staff, even though you have paid some consideration to buy skilled staff, there also it will not be recognized as intangible asset because it will not meet the definition of intangible asset. 50 lakh by way of payment toward non-compete fee so as to restrict Y Limited to compete in the same line of business. So can I say it will meet the definition of intangible asset because this is identifiable, because this arises from legal and contractual right. Legal and contractual right, which even though it is not separable, so this will meet the definition of intangible asset and this will be recognized. It means what is the purchase consideration? Purchase consideration is 10 crore. देखो, purchase consideration is what? 10 crore. We need to find the fair value of net asset acquired. So how much tangible asset? 8 crore 50 lakh. In this we'll add the fair value of non-compete fee, that is 50 lakh. So total become 8 crore 50 lakh plus 50 lakh means 9 crore. So what is the INA? INA become 9 crore and the difference will be what? Value of goodwill. Means automatically the value of skilled staff will be included in the value of goodwill. So what IND AS 38 plus IND AS 103 says that whatever you are paid for any skilled staff, that will be automatically included in the value of goodwill, but it will not be separately recognized. चलेगा? Question number 4. X, this is also a good question, can be asked in MCQ. X Limited acquired Y Limited on 30th April. The purchase consideration is 50 lakh. The fair value of the tangible asset is 45 lakh. The company estimate the fair value of in-process research project at 10 lakh. So the company estimate a fair value of in-process research project of 10 lakh. Now what IND AS 103 says that if you have acquired some in-process research project of acquiring, it can be recognized in the books of acquirer because it will meet the definition of intangible asset even though it was not recognized in the books of acquiring as per IND AS 38. So because this in-process research project will meet the definition of intangible asset, will be recognized in the books of acquirer at fair value. No other intangible asset is acquired in the transaction. further costs incurred by X Limited in relation to research. Now X Limited, after acquisition of that research project, further they have invested 5 lakh in research expenses. This will not be capitalized. So for subsequent expenditure, we need to apply IND AS 38. For initial recognition, in case of business combination, we apply IND AS 103. But subsequent expenditure, we need to apply IND AS 38 only. 2 lakh to establish technical feasibility. This will also not be capitalized because till now we have not established technical feasibility. After this only technical feasibility has been established. 7 lakh as further development cost. So any expenditure incurred once the recognition criteria is satisfied will be capitalized. At what amount the intangible assets should be measured under IND AS 38? So initially it was at 10 lakh and now 7 lakh will be added. It will be carried in the balance sheet at 17 lakh. 17 lakh. Correct. So if they ask what will be the carrying amount of in process research project in the balance sheet of acquire, it will be 70 lakh. And this 5 plus 2 lakh will be charged to profit or loss account expense. If suppose they ask you to calculate goodwill, goodwill will be how much? 50 lakh is the PC, and intangible asset will be total net asset will be 40 lakh, 45 lakh plus 10 lakh, that is 55 lakh. So there is a gain on bargain purchase. How much? 5 lakh will be gain on bargain purchase. Understood? Correct? Understood? Yes, sir. Next point, question 5. This is also important question, have been asked 2 times in exam. What they are saying? X Limited is engaged in developing computer software. The expenditure incurred by X Limited in pursuance of the development of software is given below. They are developing some software. Paid rupees 2 lakh towards salaries of program designer. Okay. Incurred rupees 5 lakh to other cost of completion of program design. Okay. Incurred rupees 2 lakh for cost of coding and establishing technical feasibility. So can I say at this point of time they actually obtain technical feasibility? Correct. Now means can I say up to this all expenditure cannot be capitalized. So this will be charged to PL, this will be charged to PL, this will be charged to PL as an expense. Paid 7 lakh for other direct costs after establishing the technical feasibility. This can be capitalized. Incurred rupees 2 lakh toward other cost of testing cost. This will be also capitalized. Testing cost will be capitalized. Cost of producing product master for training material. Of course, this will be also capitalized to bring the asset ready for its intended use. A focus group of other software developer was invited to a conference and cost of conference aggregated to any inauguration cost once the asset is ready for use will never be capitalized. This will not be capitalized. So you can see you can capitalize only 7 lakh plus 2 lakh plus 3 lakh. What is the total capitalized cost? It is 12 lakh. The 12 lakh can be capitalized. Got this point? It's only given, you can read. Question number 6 is also good question. Already asked in exam one time, but can be repeated. Can be repeated. Good question. Super Sound Limited had the following transaction during the financial year 2019-20. On 1st April 2019, Super Sound Limited purchased the net asset of Music Limited for rupees 13 lakh 20,000. What is the PC? Equal to 13 lakh 20,000. The fair value of Music Limited identifiable net asset is, what is the goodwill? Goodwill is equal to 3 lakh 20,000. So goodwill is equal to 3 lakh 20,000. So you can see Super Sound Limited is of the view that the popularity of Music Limited product, the life of goodwill is 10 years. This is bakwas because goodwill cannot be amortized as per IND AS 103. Goodwill can be only tested for impairment on an annual basis. So this is not correct. So goodwill will not be amortized. Only it will be tested for impairment. On 4th May 2019, Super Sound Limited purchased a franchisee to organize musical show from Arman TV for rupees 80 lakh. So they purchased a franchisee. Franchisee means they intend to contract to use the trade name of that particular franchisee. So 80 lakh will be the key pay. So this will be an intangible asset. At an annual fee of 2% of musical show revenue, and they need to pay some royalty for that. That will be 2% of musical show. So whatever royalty amount is paid, that will be an expense. The franchisee expire after 5 years. Musical show revenue were 10 lakh for the first year and projected future revenue for the financial year 2020-21 is 25 lakh and 30 lakh per annum for the remaining 3 years. Now you only say, can you do amortization based on revenue? No, we cannot do amortization based on revenue. So this is totally wrong information. Means not required information. So we'll do amortization based on useful life on SLM basis. Nothing is given. So 5 year. So this 80 lakh will be amortized based on how much useful life? 5 year. Correct now. However, it was purchased on 4th May 2019. Correct. Yes. On 4 July 2019, Super Sound Limited was granted a copyright that had been applied for by Music Limited. During the financial year 1920, Super Sound Limited incurred 2,50,000 legal costs to register the patent. Of course, this will be capitalized. 2,50,000 will be capitalized and will recognize intangible asset, and 7 lakh additional costs to successfully prosecute a copyright infringement suit against the competitor. Kids, any legal expenses which has been incurred once the asset is ready for use will never be capitalized, because this is not directly attributable cost to bring the asset in working condition. Correct now. So this 7 lakh will not be capitalized, only 2,50,000 will be capitalized. The life of the copyright is for 10 years. Super Sound Limited follow an accounting policy to amortize all intangible asset on SLM basis. It is given on SLM basis, but can it can be SLM, it can be PUM, it can be RBM based on the information given the question. But if nothing is given, always you will use SLM, correct? Or any other appropriate basis over a maximum period permitted by relevant IND AS. Now, IND AS does not give any maximum period for amortization. They have given that we need to estimate the useful life. So for goodwill, no life. For this, useful life is 5 year, and for this patent, the useful life is 10 year. It is given the question. There is no maximum period permitted by IND AS. Taking a full year amortization in the year of acquisition, because they have given we need to calculate full year amortization in the year of acquisition. So we ignore the date of acquisition. We'll ignore the date of acquisition. We'll amortize based on the full year amortization, even though it was acquired during the year. A schedule showing the intangible asset, a schedule showing the related expense in SOPL. Means you need to prepare extract of balance sheet and extract of SOPL. In balance sheet, बताओ what will come? In balance sheet, goodwill will come. What was the cost? 3,20,000. This you can prepare. No depreciation, no amortization. So this become the carrying amount. If franchise, the cost is 80 lakh. 80 lakh divided by 5 will do. So 16 lakh will be amortization. This become carrying amount. 2,50,000 is a copyright. It will be amortized based on 10 year useful life is given. 10 year 25,000. This become the carrying amount. Correct. So this become the total carrying amount. This will come in the balance sheet. Non-current asset, intangible asset will come. Now coming to SOPL. So can you see SOPL? One, revenue of the current year is given. Revenue of the current year is given 10 lakh. You can see this 10 lakh will come as revenue. This 10 lakh will come as a revenue. The revenue will come as per 10 lakh. You can see 10 lakh they have shown. And can I say amortization expense already we calculated. Amortization expense will be 16,25,000. Correct. And there are some other expense also. So one expense is what the royalty fees, whatever they have paid, 2% of revenue, 2% of revenue, 10 lakh. So 2% of 10 lakh is 20,000. The 20,000 will be what? One expense, and there is one legal cost they have paid. Defend the case, whatever. Correct now. So that was 7 lakh. The total other expenses become 7 lakh 20,000. This is given 7 lakh 20,000 as other expense. So this become extract of SOP. And this is a good question. I will say good question. They have given some note. Just read it. Understood? Chalega. Question number 7. This is also one type of question which is also important for MCQ. This type of question can be asked in MCQ. This particular question can be asked. Simple question it is. Expenditure in new production process. They are developing some new production process. Up to 31st December 2,700. After 1st Jan up to 31st March 900. Total is 3,600. The production process meet the intangible asset recognition criteria for development on 1st Jan. This can I say this expenditure will be charged to PL, and this can be capitalized. 900 will be capitalized. The amount estimated to be recoverable from the process is 1,000. So they have given recoverable amount. Now what IND AS 36 says that any intangible asset which are not yet available for use will be tested for impairment on annual basis irrespective of indicator. So can you say even though this intangible asset is under development stage, means till now it is not ready for use, then also we'll do annual impairment testing. What is the carrying amount? 900. What is the recoverable amount? 1,000. Because recoverable amount is more than carrying amount, therefore no impairment loss for the first year. Correct? That is only given. Then expenditure incurred in the second year is 6,000. So the first year the carrying amount was 900. 6,000 will be added. Now it becomes 6,900. Correct. As on 31st March 2003 means at the end of the year, the estimated amount recoverable from the process 5,000. Now they have given recoverable amount 5,000. So once again, annual impairment testing will be done, and you can see this 1,900 will be impairment loss, will be charged to profit and loss account. They may ask you carrying amount, they may ask you amount write down to PL. This type of question can be asked in multiple choice question. But with this we have completed all the question of Ind AS 38, which were from my point of view can be expected in exam. Apart from this, if any doubt in Ind AS 38, you can ask me. I am coming to your questions, Sarvani. Sir, please explain question number 24 of Ind AS 16 7th edition. Let's come to that. I'm coming, Ravani, your question Ind AS 16 you are saying now. Any doubt in Ind AS 38 we have completed. If anyone have any doubt in any other question, just inform me, or any other concept inform me. We'll do that. After that we'll take one more chapter. But I'm first discussing the doubt of Ravani. You said 7th edition na? AS 16. Subset question number 24. Just see whether this question is same or not. This question तो right now I have discussed रे. अभी तो I have taken this question only. You have not listened it. Ravani, question number 24 already I have taken in my expected question. You are asking about this question only, no, Ravani? If you are asking about this question, so already I have taken in my expected question, okay? Arvindam is saying that Ind AS 38 is clear. Okay, sir. Ind AS 38 is clear. Ravani, are you there? Question already I have done. Next, as continue. Next we can continue. Okay, we'll continue. First, let me check everyone is clear or not. I think everyone is not doing with me. They are thoda sa late, and therefore they are not answering my question. Giri is also said clear, sir. Let me wait for 2-3 minutes. I will also take thoda sa time for relaxation. Very clear, clear. Very good. Excellent. Any other doubt in Ind AS 38? No doubt. Let us come to one more chapter, then we'll take a break also. Come to Ind AS 40. Now, Ind AS 40, let me revise first Ind AS 40 in a fast way. So Ind AS 40, what do you mean by investment property? Investment property is a property. When I say property, property means what? Property means property means what? Land or building or part of building or land building, all are property. So any property which is held by owner or held by lessee as a ROU asset, for which purpose? For earning rental income or for capital appreciation or for both, that will be considered as investment property. That will be considered as investment property. Okay, sir. These examples can be important for MCQs. These all examples can be important for MCQs. Just go through this. Any land which is held for capital appreciation, IND AS 40 will be applicable. Any land which is held for sale in ordinary course of business, IND AS 2 will be applicable. Any land held for currently undetermined future use, is abhi right now use is not determined, an entity is expecting that it will be used either for earning rental income or for capital appreciation. Nothing is given, it will be deemed to be held for capital appreciation, and IND AS 40 will be applicable. IND AS 40 will be applicable. But if it is suppose given they want to use it for building administrative office, then it will be property, plant and equipment. Nothing is given, we'll always assume that it is deemed to be held for capital appreciation and it will be IND AS 40. Agricultural land, IND AS 16, because it is held for production purpose. Correct now. Building owned and leased out under operating lease. Any building if you own and leased out under operating lease means held for earning rental income, IND AS 40 will be applicable. Building owned and leased out under finance lease. If leased out under finance lease, can it be derecognized? Derecognized, so the question of classification will not arise. Property held as a ROU asset and leased out and subleased under operating lease, it means that ROU asset is also held for earning rental income. IND AS 40 will be applicable, means it will be treated as investment property. Property held as a ROU asset and leased out under finance lease, it will be derecognized. The question of classification will not arise. A building that is vacant but it is held to be leased out under one or more operating lease, means in future it will be given on operating lease, IND AS 40 will be applicable. Property which is being constructed for future use as investment property, means future will use as investment property, IND AS 40 will be applicable. Building held for sale in ordinary course of business, IND AS 2, it will become inventory. Owner occupied property. Owner occupied property means what? Any property which is for production purpose or supply purpose or admin purpose, that become owner occupied property, so IND AS 16 will be applicable. Property constructed on behalf of third party. Suppose I am constructing any property on your behalf, then in my books IND AS 115 will be applicable. Correct now. Revenue, we need to recognize revenue in my books, so of course IND AS 115 will be applicable. Property occupied by employee at concessional rent. If suppose you have given any property to your employee at concessional rent, so that is not held for earning rental income. That is not held for earning rental income, so IND AS 16 will be applicable. IP classified as held for sale, any investment property which is now being classified as held for sale, so IND AS 105 will be attracted. Got this point? So from this actually I have seen they may ask MCQ based question ki which IND AS is applicable, which IND AS is applicable. चलेगा? Yes sir, आगे चलते हैं. Now special case, there are three special cases. First is dual use property. So what IND AS 40 says that if any property has dual purpose, has two portion or more than two person used for different purpose. First, see whether that portion is separable. Portion is separable means what? Whether it is capable of being sold separately or can be given on finance lease separately. Means it is not yet sold. It is not given on finance lease. Whether it can be sold, whether it can be given on finance lease. If yes, it means it is separable. If it is separable, then account separate IND AS in different portion as per their meaning. Correct now. So apply different IND AS in different portion. But if it is not separable, if the portion is not separable, then which IND AS will be applicable? So what they are saying, if the owner occupied portion is insignificant, then apply IND AS 40. But if owner occupied portion is not insignificant, then apply IND AS 60. If suppose 90% is given on rent and 10% retained for admin purpose, then owner occupied portion is insignificant in this case, therefore it will be IND AS 40. We need to apply IND AS 40. But suppose 60% has been given rent and 40% retained, so 40% is not insignificant. 40% is not insignificant, therefore entire asset will become what? Property, plant and equipment, and IND AS 16 will be applicable. Second point is what? Any property which is given on rent with ancillary services. So what they are saying, if the ancillary services, whatever has been provided, is insignificant. For example, we have provided some routine maintenance or maintenance security services. These are insignificant services. In that case, the property, whatever has been given on rent, will be classified as investment property, apply IND AS 40. But with property, if you are providing significant services, is whatever services you are providing is not insignificant, then in that case, that property will be classified as property, plant and equipment, and IND AS 16 will be applicable. Just simple example, if I say hotel accommodation, the hotel accommodation, the room is given rent with significant services. In that case, it will be property, plant and equipment, not investment property. Chalega? Yes. Property leased out to group entity. Already I have taken one question in India 16 today only. What they are saying, if a property has been leased out by parent to subsidiary or vice versa, so in their individual and separate financial statement apply as per the definition. Apply as per definition, but in consolidated financial statement apply IND AS 16. If the property is within group, the property is used within group, then apply IND AS 16. It will be classified as property, plant and equipment only. Correct? Means simple, but if I say parent has given an asset, property on operating lease, subsidiary company. Correct? Now, in separate financial statement of this parent, it will become investment property. In individual financial statement, suppose this has been used for admin purpose, so this will be a property, plant and equipment. But in consolidated financial statement, because this asset is used within group, it will be property, plant and equipment, not investment. Understood? Then coming to recognition and measurement. Recognition and measurement is very simple. Correct now. So once again, recognition criteria remains same. Recognition criteria is what? There must be probability of future economic benefit and cost can be measured reliably. However, there are two types of investment property. One is owned investment property, is held by owner. One is ROU asset held by lessee. So any ROU asset held by lessee which has been classified as investment property, their recognition and measurement will be done as per IND AS 11. This is outside the scope of this chapter for recognition and measurement. Understood? What they want to say? Just try to understand what they want to say. Investment property are of two types. One is owned, one is ROU asset held by lessee. So their initial and subsequent measurement will be as per IND AS 116. But this initial and subsequent measurement will be as per IND AS 40. Initial recognition will be done as per cost model. Is at cost. At cost. And same principle, whatever means same thing. What will be included, what will be excluded, that is as per IND AS 16 only. Is nothing special point. And subsequent recognition for this, IND AS 40 says apply cost model as per the requirement of IND AS 16. Means there is no revaluation model. There is no revaluation model. Be careful about this. There is no revaluation model for investment property. There is no revaluation model as per for investment property. Understood? Correct? Yes. That is only given. Measurement, initial recognition, separate acquisition cost, it will be at cost. Whatever included is same thing only. Cost excluded same. Whatever we have done in IND AS 16. Acquired a deferred credit, same point. It will be present value of all future payment. Interest will be the difference between future payment minus present value. That will be recognized as an expense over the period of credit unless it is covered under IND AS 20. Correct? Investment property held by lessee as ROU asset go to IND AS 116. IP acquired in to exchange. Same thing, cost price of investment property acquired will be equal to fair value by asset given up plus minus cash adjustment or fair value by asset received or carrying amount of asset given up plus minus cash adjustment. If the transaction lacks commercial substance, cost price will be equal to carrying amount of asset given up plus minus cash adjustment. Subsequent recognition only at cost model. Only cost model, that too as per the requirement of IND AS 16. This cost model will be as per IND AS 16. However, fair value require only disclosure. Means what IND AS 40 says that you need to measure fair value and that fair value will be disclosed. That fair value will be disclosed. So fair value require measurement and only for disclosure purpose. You need to disclose the fair value of investment property in your notes to account. Transfer. This might be important question. What they are saying in IND AS 40, there can be reclassification of investment property, owner occupied property, or from owner occupied property to investment property, or from investment property to inventory, or from inventory to owner occupied property. If the purpose of that property has been changed, is initially it was given on rent, now it is held for sale in the ordinary course of business. Initially it was investment property and now it become inventory. So we need to reclassify from investment property to inventory or vice versa, or from investment property to owner occupied property or vice versa. So this reclassification will be done at carrying amount. The reclassification will be done at carrying amount, and the cost price of such asset will not change for measurement purpose. Is for measurement purpose, the cost price will remain same. Understood? So simple that such transfer do not change the carrying amount of the property transferred, and they do not change the cost price of that property for measurement or disclosure purpose. For measurement or disclosure purpose, this is the key point. I hope you have understood. Derecognition, same to same disclosure you can read. I hope you have understood. Now let us come to the question. Question में आ जाए. Ind AS 40 is completed. Division हो गया. You can see 5 minutes. Don't give much time because all points are same. Once you have done Ind AS 16, so you are not supposed to give much time now on what? Ind AS 40. मेरी बात समझ पा रहे हो गया ना, खत्म हो गया ना. Yes sir. Coming to question. AS 40. Let's take some question. Question number 1. Question number 1 is expected. May come in MCQ also. Good question. This is nothing but related to transfer wala point. Reclassification. X Limited owned a land property whose future use was not determined as the 31st March 2001. How should the property be classified as on 31st March 2001? So of course the future is not determined, nothing is given. It will be investment property as on this date. During June 2001, X Limited commenced construction of the office building on it for own use, presuming that construction of office building will still be in progress as on 31st March 2002. So can you say now they started constructing a building for own use, is office use. So it will be reclassified from investment property to what? Property, plant and equipment. Of course the construction is not yet completed. It will be capital WIP, capital work in progress, but it will be property, plant and equipment only. Correct? How should the land property be classified by X Limited in his financial statement as on 30? They have asked about land property only. They have not asked about the construction cost. They have asked about land property. So land property as on 31st March 2002 will be reclassified from investment property to owner occupied property, means property, plant and equipment. Will there be any change in carrying amount? No change in carrying amount. Correct? So no change in carrying amount. Only this is the answer. Whether the change in classification to or from investment property is a change in accounting policy to be accounted in accordance with Ind AS. No, it is not changes in accounting policy. Reclassification is not changes in accounting policies. Therefore, retrospective accounting will be not done. Prospective accounting will be done from the date of change. Would your answer to A above be different if they were to be management intention to commence construction of an office building for own use? However, no construction activity was planned by 31st March 2002. What they are saying, we have only intention to construct, but till now no construction is started. So right now we will not do reclassification. So Ind AS 40 say reclassification will be done when you have actually commenced the construction. If you have decided, it does not give any evidence that it will be used for office use. Correct now. Therefore, no reclassification done. In this case, as on 31st March 2002, it will be classified as investment property only. And now you can read the answer. Correct. Come to question number 2. Question number, what they have given. X Limited is engaged in the construction industry and prepares financial statement up to 31st March each year. On 1st April 2013, X Limited purchased a large property consisting of land for 2 crore and immediately began to lease the property on an operating lease. So okay, this is an investment property. Chalega. Annual renter were 20 lakh. Annual renter were 20 lakh because this was given operating lease. On 31st March 2017, the fair value of property is 2 crore 60 lakh. This is not at all relevant because for investment property, subsequent recognition cannot be done at fair value. However, this is important only for disclosure purpose. Under terms of lease, Pi Limited also is able to cancel the lease by giving 6-month notice in writing to X Limited. Pi Limited gave the notice on 31st March 2017 and vacated the property on 30th September 2017. up to 30th September 2017 means how many months? 6 months. A 6 month rental income will be recognized, means 10 lakh will be recognized as rental income. Correct? On 30th September 2017, the fair value of property was 2 crore 90 lakh. This is also not relevant because uh, fair value, we never apply fair value, means revaluation model for investment property. On 1st October 2017, X Limited immediately began to convert the property into 10 separate flats of equal size, which X Limited intend to sell in the ordinary course of business. So now the purpose has been changed. Now they started developing some flats on the property, on the land, which will be used, which will be held for sale in the ordinary course of business. So now the property will be reclassified from investment property to inventory. Correct. At carrying amount, because it was land is not a depreciable asset, so carrying amount will remain 2 crore only. So reclassification will be done at 2 crore. So on 1st October 2017, a reclassification will be done at 2 crore. Understood? Have you understood this point? Yes, sir. X Limited spent a total of 60 lakh in the conversion project till 30th September. This 60 lakh will be added, the conversion cost will be added. What is the cost price of that inventory? 2 crore 60 lakh. It become 2 crore 60 lakh. The cost price of that inventory will become 2 crore 60 lakh. Chalega? 2 crore 60 lakh. And so the project was incomplete. It was incomplete. Miss Kennedy, it will be WIP. The inventory will be considered WIP. Yes, sir. And the directors of X Limited estimated that they need to spend a further 40 lakh to complete the project. What is the cost to complete? The cost to complete is 40 lakh. And after which the flat could be sold, for each flat could be sold at 50 lakh. How many flat they want to consider? 10 flat. Each flat can be sold at 50 lakh. So what is the total sale price? Expected sale price is 5 crore minus expected cost to complete, that is 40 lakh. 40 lakh. So what is the NRB of WIP? NRB of WIP will be 4 crore 60 lakh. So this inventory will be measured as per the IND AS 2 requirement as on year end. So that is 2 crore 60 lakh or 4 crore 60 lakh, whichever is lower. So it will be measured at 2 crore 60 lakh and will be disclosed in the balance sheet under the head current asset as inventory. On 31st March 2018. This is given in the answer. Understood? Chalega? Have you understood this particular question? Good question. This question can be also asked in the form of MCQ. If they will give you entire question, they will ask you only one question of 2 marks. Then reading will take time. If you can read and understand quickly, then MCQ become very easy. Question number 3. UK Limited has purchased a new head office for rupees 10 crore. The new office building has 10 floor and the organization structure of UK Limited is as follows. You can see first to 7 they are using for what? Business purpose. The first to 7 floor will be classified as property, plant and equipment. And 8, 9, 10 was vacant. Now vacant does not mean it become investment property. You need to understand the intention of using that vacant floor. However, can you say this become a building with dual use? If nothing is given, always will assume it is separable. Separable means for this floor we will apply IND AS 16. For this 8, 9, 10 we need to wait for the question. Of course, this will be IND AS 40 because we are doing IND AS 40 question. Since UK Limited did not need floor 8, 9, 10 for business need, it has leased out the same to restaurant on a long-term basis. Now, long-term basis does not mean operating lease or finance lease. Correct now. Long-term lease does not mean operating lease or financing. Long-term lease can be operating, can be financed depending upon the information given the question. That 5 indicator, if you remember, as per IND AS 116 will lead to finance lease. Correct now. So of course, if it is a finance lease, then it will be derecognized. So it will be operating lease only. It has been given on operating lease. I will just inform you how it is an operating lease. Then IND AS 40 will be applicable. The terms of lease agreement are as follow. Tenure of lease is 5 years. Non-cancelable period is 3 years. Annual lease rental receivable from this floor are 10 lakh per floor with an escalation of 5% every year. Based on the certificate from its architect, UK Limited has estimated the cost of 3 top floor as approximately 3 crore. The remaining cost of 7 crore. You can see the total cost was 10 crore. Out of this 10 crore, 3 crore is allocated to what? 8, 9, 10 and 7 crore is allocated with to first to 7 with land portion. That is only given. can be allocated 25% to a land and 75% towards building. So 7 crore is PP, that will be land. Land will be 25% and 75% is the building. As on 31st March 2018, UK Limited obtained a valuation report from an independent valuer who has estimated the fair value of property is 15 crore. UK Limited wishes to use cost model for PP. It is correct. Cost model for PP is correct. However, fair value model for measuring investment property, this is not correct. We can't use fair value model for investment property, even though it is given. We'll use cost model only. So this is some mistake which we need to rectify. You can limited depreciate a building over the estimated useful life of 50 years with no estimated residual value. What is the useful life of the building? 50 years. And this 8, 9, 10, this floor has been given for how many years? 5 years, maximum 8 years. Can you say which is not for the major part of economic life of the asset, and therefore it will be an operating lease as per the indicator given under IND AS 1. Correct. However, you can also find out the present value of this lease payment, but for the discount rate is required. Discount rate is not given. If you find out present value of lease payment and that is not approximately equal to the fair value of that particular portion, then also it is not a finance lease. Correct now. But for that, what is required? Discount rate is required. Discount rate is not given in the question. Advice UK Limited. So they have first given that yes, it is an investment property. Why it is an operating lease? That information is given. You just write down this point because the lease term is not for the major part of the economic life of the asset. Therefore, it will be an operating lease, and therefore this top 3, 4 will be classified as investment property. Investment property. Then they have given, देखो, investment property 30%. So 3 crore is mentioned. PP will be 70%. So 7 crore, 25% is allocated to land and 75% is allocated to building. Now they are giving fair value. Fair value is also allocated in the same ratio, but fair value will not be used. Fair value for investment property is required only for disclosure purpose. So we have done allocation in the same ratio. We can do the valuation model, cost model, because as per the question, but this will be also cost model. Even though they have given fair value model, we will not use fair value model, we use cost model. Now less depreciation based on the economic life. Economic life is 50 years, useful life is 50 years. So it will be, this will be nil, this will be divided by 50, this will be divided by 50, this will be the carrying amount. Correct now. Impairment loss we should not recognize because there is no indicator impairment. We impairment testing only when there is indicator, and here the fair value is more than carrying amount. Of course there is no impairment indicator, so there is no impairment loss. This is the answer. Correct. Chalega. Yes. One more question. Question number 4. Korea Limited. This is also good question. In this question only one point I need to inform you. Only one point. This can be asked in exam, till now not asked in exam. What is given? Korea Limited own a building A which is specifically used for the purpose of earning rental, means investment property. The company has not been using building A or any other facility for its own use for a long time. The company is also exploring the opportunity. Okay, sir. Following information relevant for building A for the year ending 31st March 2020. Information they have given for building A. Building A was purchased 5 years ago at a cost of 10 crore and the building life is estimated to be 20 years. The company follow straight line method for depreciation. Only in this particular point you might do some mistake. My question to you all, you need to participate for this. Following information relevant for building A for the year ended 31st March 2020 means, just try to understand. They have given, this is 31st March 2020 and this is 1/4/2019. Correct. Now they have given building A was purchased 5 years ago at a cost of rupees 10 crore and the useful life is 20 years. My question to you all, 5 year will calculate from this date, or 5 year will calculate from the beginning of year. This is the particular point where you can do mistake. You need to inform me what you will do. I'm just waiting for you. Just don't read the solution right now. You need to just inform me. 5 year will calculate from 31st March 2020 or 5 year will calculate from 1/4/2019. Because this also I have discussed many times in the class also. Here you need to be careful. Here you need to be careful. Follow. One answer I got from 1/4/2014, not 1/4/2019. 19. Very good. So it is from this date. Be careful. This is from this date, not from this date. Why? Because they have given what? Following information are relevant for building A for the year ended 31st March 2020. For the year ended. For the year ended means what? For 1920. This is not the information as on 31st March 2020. The information for this year. No, no, assumption नहीं लिया. This is not an assumption. Assumption नहीं है. You can see what they have given. Following information relevant for the year ending. Ending means what? For the year 1920. For the year 1920 means from the beginning of the year. Now, if suppose they have given following information relevant for building A as on 31st March 2020, then 5 years will be counted from 31st March 2020. This is not an assumption. Understood? Understood this point? Yes, sir. I hope you have understood this particular point. This is not an assumption. Then during the year, the company has invested in another building B with the purpose to hold it for capital appreciation. Building B is also what? Investment property. The property was purchased on 1st April 2019, means at the beginning of the year, at a cost of rupees 2 crore. Expected useful life is 40 years. So this is 40 years, this is 20 years. As the company follow a straight line method of depreciation. Okay. Further, during the year 2019-20, the company earned or incurred the following direct operating expenditure relating to building A and building B. So these are the income, rental income, and they have given the expense. These are the direct operating expense. Now, as per IND AS 40, rental income net of operating expense should be shown separately in the SOPL. So this rental income net of operating expense, including depreciation, will be the rental income from net rental income from investment property. That will be a part of other income. That will be part of other income. The company does not have any restriction and contractual obligation against building A and building B. This is the disclosure requirement. This becomes disclosure requirement number 1. For complying with the requirement of IND AS, the management sought an independent report from the specialist so as to ascertain the fair value of building A and B. The disclosure number 2. The independent valuer has valued the fair value of property as per the valuation model recommended by International Valuation Standard Committee. Fair value has been computed by the method. This is the disclosure number 3. Means these are disclosure requirement as per the IND AS 40. Means can I say any disclosure which required only a note without any amount, for that information is need to be given the question, then only we can disclose. So whatever given, just write down 1 2 3 4 5 like this in exam. In notes to account, disclosure requirement about investment property, point number 1 2 3 4 like this. The other key point, the estimated rent per month and the expected growth rate in that. So this is the assumption required for fair value measurement. This is also required to disclose. Assume that fair value of property based on discounted cash flow method is 10.45 crore. This is also disclosure requirement. So this become disclosure requirement number 4. This become disclosure requirement number 5. What will the treatment of building A and building B in the balance sheet of Soria Limited? Provide detailed disclosure and computation in line with the relevant Indian accounting standard. Treat it as if you are preparing a separate note or schedule. This is good question. They ask extract of balance sheet, extract of SOPL with notes to account. You need to prepare balance sheet extract, SOPL extract, and write down the notes to account. Note number 1 for investment property, note number 2 for profit from investment property, like this. So can I say in this only you need to find out the carrying amount of investment property. So you can see one building was purchased यहाँ पर 5 years before. For what amount? For what amount? The amount was 10 crore. 10 crore. What is the useful life? 20 years. So 10 divided by 20 into 5. What is the accumulated depreciation? Accumulated depreciation become 2.5. Accumulated depreciation become 2.5. Means what is the carrying amount यहाँ पर? यहाँ पर carrying amount becomes 7.5. What is the depreciation of this year? That will be 0.5 for building A. Building B was purchased यहाँ पर, correct? For how many crore? Building B was purchased for how many crore? It was 2 crore. 2 crore. And what is the estimated useful life? 40 years. So 2 2 divided by 40 is coming how much? 0.05. This become the current year depreciation. Current year depreciation become 0.55. What is the carrying amount? Carrying amount become 7, and this become 2 minus 0.05. That is what? 1.95. What is the closing carrying amount? That become 8.95. This will come in the balance sheet. Correct now. This will come in the balance sheet. This become depreciation. So this will also come in the SOPL. SOPL. So here disclose it. Then now you can read the question. Solution. You can do it. You can see opening cost is 10 crore. Then addition 2 crore. This become 12 crore. Opening depreciation was 2.5. Then we added current year depreciation. This become total depreciation. This become the carrying amount of investment. Then rental income, it is given 1 crore. All the direct operating expense plus kar do, that will come itna crore. Then depreciation also added. This become the profit, net profit from the rental income. Then you can prepare extract of balance sheet. They have not prepared. You can prepare extract of balance sheet, extract of SOPL also. Correct. This will be shown under other income. This will be shown under investment property as a separate item. Then you can, they have given disclosure. You can give point by 1, 2, 3, 4, 5 like this. You can give in exam. This become entire solution. Understood? With this we completed this particular chapter. There is one more question. Actually, that question is of analysis of financial statement. That is very, very important that you do by your own. So that I have said many times in class, expected, super expected, that you do by your own. I am not doing that question. I am just informing you which question. Okay. There is one more question. I think you remember that question also. This is actually a question of analysis of financial statement. This also do by your own. They may ask this question in MCQ question 15. Just read it. This is based on whether it is an investment property, it is not an investment property. This may also come in exam. And this question, this is actually a question of analysis of financial system. Question 14 have been asked 3 times in exam. Do it again. Very simple question. You can do it. Correct? You can do it. Analysis of financial statement. If I will do analysis of financial statement, I will take this question again. Understood? So with this, I have completed IND AS 40. Now you have any doubt in IND AS 40? IND AS 40, any doubt? Chalega. So we have done with 3 IND AS 16, 40, 38. What are left? 2, 23, 36, 105. So I will take a break. Break of how many minute you require? So I will take 1 hour break. You take your break as you means you can do other questions. I want 1 hour break. As a relaxation chahiye. Correct. Otherwise my throat will be totally damaged. I will take 1 hour break. 1 hour strict break. Means I will meet you at 2:30. 30 I will meet you. Till then you can do the balance question. You can take your lunch break for 10 to 20. Means you don't waste your much time. Correct na? You do lunch at 10 minutes to 15 minutes. Then after the 45 minutes, start doing some other question if you want to do for this particular 3 chapter, whatever I have done. So complete it by your own. So in this three chapters, whatever I have done, do all other questions, whatever you feel, and complete it. Complete it by your own. And any doubt we can discuss after break. Chalega? Cool. Yes, sir. So we'll meet after. Right done. Break. Class will resume at 30. Revision लिखते हैं. Revision will resume at 2:30 p.m. What will do? AS 36, 105, 23 and 2. Okay, sir. Hello. Everyone again ready? Yes. I hope everyone has completed their break, has taken lunch. The lunch, I will always give a suggestion that now during this exam period, don't take heavy lunch, take light food. Okay. Because once you will take heavy lunch, so you will feel sleepy. Got this point? So I don't know what you have taken in lunch. Can you update me what you have taken in the lunch? Fast. Not feeling sleepy na? One more thing, I just want to add one more point before I start another chapter, that this coming whatever days are left before exam is very important for you. Of course, can I say lot of I will say negative point will come in your mind this moment. Negative point will come because you'll think more about result. Right now, I will say don't think about result, because if you think about result, nothing is going to change in life. Whatever you have done till now, just revise it. And once you have written exam, after that means once you completed entire exam, then you will think about result. Now, right now, don't think about result. Only think about preparation. How much you can cover. It's not always that you need to cover 100%. If you are able to cover 80%, 90% fully, then also it is enough from examination point of view. I'm not saying that don't cover 100%. You can cover 100%, cover it. But if you think that you are not able to, do not have sufficient time, how much time you have, try to use that in an efficient way. Try to cover how much you can come, how much you can cover, and go to exam with full determination. Write down whatever question has been asked, and of course you will be able to pass. But don't panic particular days. Okay, sir? Can we start? Yes, sir. Now we'll start with IND AS 23. I think IND AS 23, the content does not require any revision. The content does not require any revision. Of course, you all know that borrowing costs are nothing but the interest cost and other costs in connection with the borrowing. Correct now. The borrowing cost can be capitalized when it is directly attributable to the construction, acquisition, or production of a qualifying asset. Qualifying assets are those assets which take substantial period of time for getting ready for its intended use or sale. Substantial period of time is not defined in exam. However, if any asset is taking more than 12 months from examination point of view, we will always assume it is a qualifying asset. But suppose any asset is taking less than 12 months and the question is silent, then you can take assumption. You can take either of the assumption whether it is a qualifying asset, it is not a qualifying asset. If any asset is taking 9 months, 8 months, 7 months, I will say it is a question of interest calculation. Better you take an assumption that it is a qualifying asset. Correct now. And then just write down the assumption and calculate interest expense which will be capitalized. Now for the purpose of capitalization, there are two type of borrowing. One is specific borrowing, one is general borrowing. So specific borrowing, the amount of capitalization will be equal to actual borrowing cost which you have calculated by applying EIR. Now you know about effective rate of interest. To calculate actual borrowing cost by applying EIR, then from that will deduct income earned during the period of capitalization from investment in from temporary investment, that will deduct, the net amount will be capitalized. Doubt has came, sir, how you classify conventional hall giving for rent occasionally. Of course, it is a property. Just try to understand with that property. If you are giving property on rent, whether it is with insignificant services or significant services. If it is with significant services, then it will be property, plant and equipment. But normally conventional hall is given with what? Normally I am saying with insignificant services, ancillary services. Therefore, it will be what? That will be what? Investment property. Understood? Normally I am saying, but if you are providing significant services with that ancillary services, then it will be a in property, plant and equipment. Understood? Correct? Naveen, your doubt is over? Yes, sir. Now coming to general borrowing. General borrowing, first you need to find out total borrowing cost incurred on general borrowing, then calculate capitalization rate. Capitalization rate means what? Total borrowing cost on general borrowing divided by weighted average borrowing fund, weighted average general borrowing fund. Weighted average means wait for the number of months it has been used during that period, and you need to find out weighted average fund for that general borrowing fund into 100. This will be capitalization rate. Then capitalization rate will be applied on the expenditure on qualifying asset which is from general borrowing, and that will be the amount of borrowing cost to be capitalized. Understood? Then these are some points. Let us take some question about a commencement, suspension and cessation. I will say this is also very easy. You know about this point. This does not require any revision. Correct. Now is one a special point about exchange difference arising from foreign currency borrowing. For this, I will take one question. I will explain from that question. Can we start? Let us start with the question number 1. Question number 1 means this is question number 14 of question bank. An entity construct a new head office building commencing on 1st April 2001. Commencing on 1st April 2001, which continues till 31st December 2001 and is expected to go beyond a year. Means that from this question it is understood year end is 31st December. So capitalization period is September, October, November, December. 4-month capitalization need to be done. Directly attributable expenditure at the beginning of the month on this asset are 1 lakh in the month of September and 2,50,000 in the month of October and this October, November and December. The entity has not taken any specific borrowing, but there is no specific borrowing, but has incurred a finance cost on its general borrowing during the construction period. During the year, the entity has issued 10% debenture with a face value of 20 lakh. Whenever the question is silent about date of borrowing, in this chapter, always assume that borrowing has been taken at the beginning of the year. It was outstanding from the beginning of the year. If the question is silent, always assume it has been taken at the beginning of the year. And had an overdraft of 5 lakh, which was increased to 7,50,000 in December 2001. Means, can I say up 5 lakh was the overdraft amount up to the month of November, and from December it becomes 7,50,000. So from January to November it was 5 lakh, and for the last month December it becomes 7,50,000. Interest was paid on the overdraft up to 15% on until 1st October 2001. Up to 1st October means up to 30th September, we can say the interest rate was 15%. Then the rate was increased to 16%, means from October, November, December, the rate becomes 16%. Calculate the capitalization rate for the computation of borrowing cost in accordance with IND AS 23. You need to only calculate capitalization rate. Good question. Correct. Now, so I will say you need to calculate first the borrowing cost to be incurred during that year. Period is what? Jan to December. Then we have 9% debenture. It was outstanding for 12 months. The amount of loan was 20 lakh. The rate of interest is 10%. Whenever transaction cost is not given and the instrument is at market term, then always contractual rate of interest will be EIR. That is understood point. In this chapter, normally the contractual rate of interest and EIR will be same. But be careful. It may be a question of they may give us borrowing with some different EIR. Then you need to calculate interest expense by applying EIR on amortized cost. That we know from financial instrument chapter. Till now that type of question has not been asked in this chapter, so be careful about that point. It may be a question from your examination point of view. Normally interest is calculated by applying EIR on amortized cost. So from IND AS 109, I hope you know this point. Chalega? Yes sir. So be careful about this point. This become 2 lakh. Now, can you say bank overdraft up to the month of September, the rate of interest was 15%, 15%, and the amount of bank overdraft was 5 lakh. So 5 lakh into 15% for 9 by 12, it will be this amount, correct? Then for October and November, the rate of interest becomes 16%, but amount of a bank overdraft was 5 lakh only. So 5 lakh into 16% for 2 months, the borrowing cost will be this, correct? And for the last month, the amount of bank overdraft becomes 7 lakh 50,000. The rate of interest 16%. So 1 month we can calculate borrowing cost on that bank overdraft limit. So this become total borrowing cost. So total borrowing cost become this amount. Now this will be used for capitalization rate. To capitalization rate, we want weighted average borrowing fund. So can you see this 20 lakh? This 20 lakh is outstanding for 12 months. We will do 12 by 12. This 5 lakh is outstanding for how many months? Yeah, it is for how many months? 11 months. So we'll do 11 by 12. And this 7 lakh 50,000 is outstanding for 1 month. So we'll do 1 by 12. So we can find out weighted average borrowing fund. Now capitalization rate will be this borrowing cost divided by weighted average borrowing fund. This will be what your capitalization rate for the entire year. In this question, they have asked only what? They have only asked capitalization rate. Suppose they would have asked calculate borrowing cost to be capitalized. Then can I see this will be on expenditure. So you can see expenditure in the month of September is 1 lakh. If they ask suppose borrowing cost to be capitalized, so what you'll do? What you'll do? For the month of September, expenditure is 1 lakh. What is the capitalization rate? Capitalization rate is how much? It is, we have calculated 11.09% to 11.09%. September, it become of how many month? September, October, November, December. You will do 4 by 12. Correct. Then in October, it is 2 lakh 50,000. You will do 11.09%, and this will be 3 by 12. Then November, it is 2 lakh 50,000 into 11.09%. It will be 2 by 12. And December, it is 2 lakh 50,000. 11.09%. It will be 1 by 12. This will be borrowing cost to be capitalized. Borrowing cost to be capitalized. Understood? Done. First question you have understood? Yes, sir. Have you understood? So normally we do calculate capitalization rate on annual basis. Normally we calculate capitalization rate on annual basis, means per annum basis. But suppose if they ask you to calculate capitalization rate for capitalization period. Now capitalization period is 4 months. Suppose they ask you to calculate that, then all the calculation you do for 4 months, means calculate borrowing cost for the 4 month. Correct now. Calculate weighted average borrowing fund for 4 months, then you'll do 20 lakh into 4 by 4. 5 lakh is outstanding for 3 months out of 4, so 3 by 4. This you'll do 3 by 4, and 7 lakh 50,000 you'll do for 1 by 4. This will be the weighted average borrowing fund for 4 months, and then you'll do this borrowing cost for 4 months divided by weighted average borrowing fund for 4 months. So this will be for 4 months, means you have calculated capitalization rate for 4 months. However, if question is silent, always calculate capitalization rate for 12 months, means annual basis. Don't calculate for capitalization period. But suppose they ask calculate capitalization rate for capitalization period, then your answer will be 3.756% per 4 months for capitalization period. I hope you have understood. Chalega? Yes, sir. Yes, sir. Now coming to one more question. Question number 2. On 1st April 2001, entity A contracted for the construction of building for 22 lakh. The land under the building is regarded as a separate asset and is not a part of qualifying asset. So on the cost price of land will not do any interest capitalization, because that is a separate asset. It is not a part of qualifying asset. The building was completed at the end of March 2002. Means the commencement was on 1st April and completion was on 31st March. During the period, the following payment were made to the contractor: 1st April 2 lakh, 30th June lakh, 31st December 12 lakh, and 31st March you can see 2 lakh. The total become 22 lakh. So this is for the construction of building. So land cost has not been given here. Entity A borrowing at its year end of 31st March 2002 there as follow. So 10%. So they have given at year end. Year end is 31st March 2002 only. So 10%. They have given 10%. 4-year note with a simple interest payable annually, which relate specifically to the project, to this specific borrowing. That outstanding on 31st March 2002 amounted to rupees 7 lakh. So this, that outstanding at year end, so it has been not, it is not being given the question. It is taken at which point of time. So if nothing is given, of course we can assume at the beginning of the year. But in this question, they have given interest of 65,000 was incurred on this borrowing during the year. So they have given interest cost. There is no need to calculate interest cost separately. So they have given interest cost. So you don't require at what point of time this loan was taken. An interest income of 20,000 was earned on this fund while they were held in anticipation of payment. Okay, is because specific borrowing, so the income earned from temporary investment will be deducted and the net amount will be capitalized. Then it was 12.5% 10-year note with simple interest payable annually. That outstanding on 1st April 2001 amounted to rupees 10 lakh and remain unchanged during the year. 10% 10-year note with simple interest payable annually. That outstanding was 1st April 2001. So loan were outstanding at the beginning, and these are non-specific borrowing amounted to rupees 15 lakh and remain unchanged during the year. What amount of borrowing cost can be capitalized at year end as per the relevant IND AS? First we need to find out average expenditure, or you can directly find out capitalization rate. First we'll do capitalization rate. The capitalization rate will be based on general borrowing. General borrowing, correct. Now there are two loans. Capitalization rate, you can see on this 10 lakh the rate of interest is 12.5%. So it becomes 10 lakh into 12.5%, plus on this 15 lakh the rate of interest is 10%. The 15 lakh divided 15 lakh into 10%, this become borrowing cost. The total borrowing cost divided by total borrowing fund is 10 lakh plus 15 lakh, because it is outstanding from the beginning. It will be 12 by 12 by 12 by 12 only. So this become capitalization rate. 7% become capitalization rate. Understood? Now you can see in the 1st April how much expenditure has been 2 lakh. This 2 lakh will be first used from specific borrowing. What is the total specific borrowing? 7 lakh. So this entirely is from specific borrowing. So nothing is from general borrowing. Then on 30th June 600. So what is the balance specific borrowing? That is 500. So out of 7 lakh, 200 was used initially. Lakh was used initially. So balance 5 lakh will be used after that. Correct. It means 1 lakh will be from general borrowing, and this 12 lakh will be from general borrowing, and this 2 lakh will be from general borrowing. On this will apply what? Capitalization rate. On this will apply capitalization rate. Either you can calculate average expenditure, or you are, what you can do, you can directly apply capitalization rate on this for the particular period. So in this I think they have calculated first average expenditure. You can see 1st April nothing is related to borrowing. On 30th June out of 600 only 100 was related to general borrowing. They have done 100 into 9 by 12. 9 by 12 means 30th June to 31st March. Then 12 lakh into what? 3 months, because 31st December 31st March. So 3 by 12 will do. And 31st March, so this is 0 month, so it will do 0 by 12. So this become average expenditure. On this average expenditure, we'll apply capitalization rate. So this become 3,75,000. 3,75,000 into capitalization rate will be the borrowing cost to be capitalized. Correct. And can I say for a specific borrowing, entire interest cost will be capitalized net of what? Net of income on temporary investment. So 65,000 minus 20,000 will be capitalized entire amount irrespective of expenditure. Irrespective of expenditure, you can 65,000 minus 20,000 plus 41,250 is the amount of borrowing cost for capitalization. Amount of borrowing cost for capitalization. Understood? Have you understood this question? This can be a probable question. This type of question can be asked in exam. Normally student do mistake यहाँ पर कि this is out of 600. Out of 600, 500 is from specific borrowing. So for specific borrowing, they will also take how many months? 9 months. But for specific borrowing, whether it has been done at the beginning, whether expenditure has been done at the beginning or at any point of time during the year, the entire borrowing cost related to specific borrowing will be capitalized during capitalization period. Understood? Yes, sir. Then this one more question is also good question, which is related to group financial statement, means consolidated finances. The newly inserted question till now not asked, can be asked in exam. But they have given in a group with parent P, there are 3 subsidiaries with the following business: A, B, and C. A is a real estate, B is a construction company, C is a finance company. Parent company has no operating activities of its own but perform management function for its subsidiaries. Okay, parent company is not doing any operating activities. Correct. Financing activities and cash management in the group are coordinated centrally. Okay. Finance company is a vehicle used by the group solely to raise finance. The finance company will raise finance for the entire group company. All entities in the group prepare IND AS financial statement. Got this point? Correct. A real estate company, what they have given, borrowing is 10 lakh with an interest rate of 7%. So there is one borrowing. An expenditure on qualifying asset during the period amounted to rupees 15 lakh 40,000. Correct. All construction work were performed by the construction company. Amount invoiced by real estate company included. Amount invoiced to real estate company included 10% profit margin. Can you see in this 15 lakh 40,000, it include profit of construction company, but that will be eliminated. That will be eliminated in the consolidated financial statement, not in the individual financial statement. So expenditure is what, 15 lakh 40,000, but they have taken one borrowing. It is a general borrowing. Of course, it is general borrowing. Nothing is given. It becomes general borrowing. So since the amount of loan is less than the expenditure, the entire borrowing cost will be capitalized, because borrowing cost capitalized should not exceed the just try to understand. Borrowing cost capitalized should not exceed the actual borrowing cost. The actual borrowing cost is 10 lakh into 7% means 70,000. So 70,000 will be entirely capitalized to qualifying asset. Understood? Yes, sir. Construction company, there is no borrowing. There is no borrowing. There is no question of borrowing cost capitalization. However, finance rupees 10 lakh of expenditure on qualifying asset using its own cash resource. Using its own cash resource, so therefore there will be no borrowing cost, and there is no borrowing cost. The question of capitalization will not arise. So nothing will be capitalized. Finance company raised 20 lakh at 7% per annum externally and issued a loan to parent company for general corporate purpose at a rate of 8%. They have given loan. Whatever loan has been given, that become a financial asset, and financial asset cannot be a qualifying asset. So for finance company, there is no qualifying asset. Therefore, the question of borrowing cost capitalization will not arise. Now coming to parent company, use loan from finance company to acquire new subsidiary. Is whatever they have received the loan from finance company, they actually using that amount for investment in subsidiary. Is whatever loan has been taken, that will be diverted to which company? Subsidiary company. No qualifying asset apart from those in real estate company and construction company. Parent company did not use any loan to other entity. Parent company did not issue any loan to other entity during the period. Means, just try to understand from parent company point of view. When you prepare CFS, there are two qualifying asset: qualifying asset 1 and qualifying asset 2. One will be what? The qualifying asset is 15 lakh 40,000, but this include profit of construction company, which should be eliminated. This should be eliminated. So can you say the profit will be 10 by 110? So 10% is the profit margin. This is the sale price. Correct now. So can you say the if I am, are you? I hope you have understood what I am saying. Correct now. So what they have written? If you see the real estate company, amount invoiced to real estate company include 10% profit margin. 10% profit margin. Understood? So can I say this 15 lakh 40,000 include 10% profit margin, that should be eliminated to 10% of cost. It means 10%, 10 by 110 of sale price. Correct. So that should be eliminated. So 10 by 110, how much is the profit? 15 lakh 40,000 into 10 divided by 110, it is coming 1 lakh 40,000. From this you'll minus 1 lakh 40,000. So what is the cost? What is the cost from consolidated financial statement point of view? That is become 14 lakh. Understood? And qualifying asset 2, finance company, no, sorry, construction company 1 has one more qualifying asset, that is 10 lakh. This become 10 lakh. And they have two borrowing. One is borrowing 1 of 10%, that is real estate company 7 lakh. And one is borrowing 2, that is also 10% for finance company, which they have taken from outsider. So 7% they have raised at 20 lakh. So 20 lakh will be the second borrowing. So this becomes general borrowing. The rate of interest is same. Therefore, capitalization rate will be also same. Capitalization rate will be same. Now, in case of CFS, will not do any one-to-one relationship. Now there are two qualifying asset and there are two borrowing. So that will be used. That will be deemed to be used for this qualifying asset only. Therefore, what will be the borrowing cost to be capitalized? This will be 10%. So in this 1,40,000 will be capitalized into 10%. In this 1 lakh will be capitalized. So this will be the borrowing cost to be capitalized. Simple. I hope you have understood this point. Have you understood this point? Hello. Have you understood this particular point? In CFS, this will be the amount of borrowing cost to be capitalized. Understood? Any doubt? Have you understood this point? So because whatever loan they have received from a finance company, that were actually used to purchase the equity shares of subsidiary company, automatically that loan amount has been diverted to subsidiary company, which become the equity share capital of subsidiary company, and that was used by the construction company for the purpose of qualifying asset. So ultimately this loan amount has been only used, this loan amount has been used for the purpose of qualifying asset, and therefore this will be capitalized in the cost price of this particular qualifying asset. Got this point? Any doubt? I hope you have understood. So this can be one expected question from examination point of view. This is very easy. Just read the solution now. Now question number 4. XYZ has taken a loan in $10,000 on 1st April 2003 for a specific project at an interest rate of 5% per annum payable annually. On 1st April 2003, the exchange rate between the currency was 45 per US dollar. The exchange rate on 31st March became 48 per US dollar. The corresponding amount could have been borrowed by XYZ Limited in the local currency at an interest rate of 11% per annum. Correct? Calculate the borrowing cost and exchange loss. What will be your answer if the interest rate on local currency borrowing is 13%? So they have given two situations. First, interest rate in local currency borrowing. Local currency borrowing means functional currency borrowing is 11%. And second is 13%. So we'll do case 1, case 2. Case 1 is what? If functional currency borrowing, the rate of interest is 11%. Rate of interest is 11%. Now first in this case, what will be the borrowing cost? Borrowing cost. What is the amount of loan taken in foreign currency? 10,000 US dollar. 10,000 US dollar. Into what is the rate of interest? Rate of interest is what? 5%. Into 5% you will do. That will come 500 into, this is in US dollar. You need to convert on 31st March by using the exchange rate. Exchange rate on 31st March is 48. So you will do into 48. Into 48 is coming how much? 500 into 48 is coming 24,000. And there is one exchange loss. Exchange loss is equal to how much? Exchange loss is equal to 10,000 into. So initially, what was the exchange rate? It was 45. Now it become 48. The liability will increase, and it will increase by rupees 3 per dollar. So it will become 30,000. What is the objective? Out of this exchange loss, how much will be covered under IND AS 23 and how much will be covered under IND AS 21? IND AS 21. This is the point of discussion. Now what IND AS 23 says that the lower of these will be covered under IND AS 23. First, actual exchange loss, that is equal to 30,000. Second, the interest, the difference in interest between functional currency borrowing and the foreign currency borrowing. Correct? So what is the interest in functional currency borrowing? That we need to find out. So what will be the amount of loan in functional currency? That will be 10,000 into 45 into 11%. Correct? If the loan would have been taken in Indian currency, so 10,000 into 45 into 11%. How much is 49,500? And what is the interest cost in foreign currency? That is 24,000. 24,000. What is the difference? 49,500 minus 24,000. It is coming how much? 25,500. 25,500. So lower will be covered under IND AS 23. Out of these, out of 30,000, how much will be covered? How much will be covered as a borrowing cost under IND AS 23? 25,500. Remaining is how much? Remaining is what? 30,000 minus what? 25,500 will be covered under IND AS 21, 4,500. This is the concept. This is known as this is known as borrowing cost. This is known as what? Are you able to understand what I am saying? So this is what? Uh, exchange loss. Exchange loss on foreign currency borrowing, which is regarded as an adjustment to interest cost. Correct? Have you understood this particular point? So only exchange loss is regarded as an adjustment to interest cost. If suppose in the first year, initial year, there is some exchange gain will not be regarded as an adjustment to interest cost. That exchange gain will be always covered under IND AS 21. Correct? Only exchange loss, some portion will be covered under IND AS 23 and the balance portion will be covered under IND AS 21. Now they have given one more case. Suppose the rate of interest 13%. Correct? For functional currency borrowing. Then what will be the situation? Once again, the borrowing cost is coming that only. What is the borrowing cost in foreign currency? That is 24,000 foreign currency loan. Then exchange loss will be same 30,000. But now we need to find out how much will be covered under IND AS 23. How much will be covered under IND AS 21? 23 it will be lower of point number A and point number B. Point number B is what? 30,000. Point number B will be what? Difference in the interest in functional currency borrowing and foreign currency borrowing. The loan amount is 10,000. The loan would have been taken in functional currency into 45. The rate is 13%. It becomes 10,000 into 45 into 13%. That is coming 58,500. And what is the interest in functional currency borrowing? That is 24,000. Difference is how much? Minus karo 24,000. It is coming 34,500. You can see now the lower is 30,000. How much will be covered under IND AS 23? Entire 30,000 will be covered under IND AS 23. The balance, nothing will be covered under IND AS 20. Nothing will be covered under IND AS 20. Understood this particular point? Have you understood this concept? This concept? Correct? Have you understood this concept? Correct. There is one more point in this particular concept. Till now that type of question has not been asked. I am just giving one example. Just write down. Suppose I am continuing with the case number 1. I am continuing with the case number 1. We have taken a loan of $10,000. Initially the exchange rate was how much? 45. Then it become 48. And suppose again they become 46. Here exchange rate become 46. Initially borrowing cost was how much? Initially the borrowing cost was this much. Now 30,000. It was 24,000 plus 25,500. Borrowing cost was 24,000 and plus how much? 25,500. 25,500. I am taking case number 1. 24,000 plus 25,500 is coming how much? 49,500. Understood. Now, suppose in the second year, this same information has been given. What is the borrowing cost now? Borrowing cost will be 10,000 into 5% into 46 now. Correct? This is coming how much? 500 into 46 is equal to 23,000. 23,000. And now there will be exchange gain. Exchange gain is coming how much? Is 10,000 into 2. That is how much? 20,000 exchange gain. Exchange gain now initial year will not be regarded as an adjustment to interest cost. But exchange gain of subsequent year will be regarded as an adjustment to interest cost to the extent of any exchange loss which was regarded as an adjustment to interest cost in previous year. Means out of 20,000, how much can be adjusted as a borrowing cost? That will be to the extent of 25,500. Therefore, entire 20,000 will be regarded as an adjustment to interest cost in the second year. And what will be the borrowing cost to be capitalized? That will be 3,000 will be borrowing cost which are eligible for capitalization. I am saying eligible for capitalization means it may or may not be capitalized depending upon the condition given under IND AS 23. Understood? Have you understood this particular point? So in the next year, if there is any exchange gain, that exchange gain can be regarded as an adjustment to interest cost, but to the extent of exchange loss which was previously regarded as an adjustment to interest cost. Got this point? Suppose let's see. Suppose this amount was only 5,000. Then out of 20,000 we can only adjust to the extent of 5,000. Balance will be covered in IND AS 21. So out of 20,000, 5,000 will be adjusted against this borrowing cost. Balance 15,000 will be covered under IND AS 21. Understood? I hope you have understood this particular point. It was a good concept which can be asked in exam. Till now this type of question has not been asked. Question 5. This is also a good question. Question number 7 of my question bank. Alpha Limited on 1st April 2001 borrowed 9%, 30 lakh to finance the construction of 2 qualifying assets. Construction started on 1st April 2001. So one thing is clear, that is specific borrowing, because this is to finance the construction of 2 qualifying assets. Construction started on 1st April 2001. The loan facility was availed on 1st April 2001 and was utilized as follow, with the remaining fund invested temporary at 7%. You can see factory building. 1st April, how much expenditure done? 5 lakh. 1st October, how much expenditure done? 5 lakh. Office building, it is 10 lakh and 10 lakh. So we can see that out of 30 lakh, 10 lakh was used for factory building and 20 lakh was used for office building. So total become 30 lakh. Correct? Understood. Now, only just try to understand what they want to say. Where is the doubt? Doubt is what? This is 1st April. This is 30th September. How much expenditure done on factory building? Factory building 5 lakh यहाँ पर and 5 lakh यहाँ पर. Means can I say 5 lakh was not used? 5 lakh was not used for the first 6 months. It was temporary invested outside at a rate of what? 7% per annum. It was temporary invested. It was temporary invested outside the business at 7% per annum. Now whenever there is specific borrowing, always because 10 lakh was the loan amount which was used for factory building. So 10 lakh entire borrowing cost will be capitalized. So 10 lakh into what is the rate of interest for the borrowing? It is what? 9%. So entire 9% will be first calculated, irrespective of expenditure, irrespective of date of expenditure. Correct? Now, so for specific borrowing, the date of expenditure is not relevant. Date of expenditure is not relevant. So 10 lakh ka 9% for the 12 month, it become 90,000. Correct? From this you will deduct, out of this 5 lakh was invested temporary at the rate of 7% for the first 6 months. So 5 lakh into 7% into 6 by 12, how much it is coming? 17,500. What is the net amount of borrowing cost which will be capitalized? That is 90,000 minus 17,500. So you can see 72,500 will be capitalized for factory building. Similarly, you can do for office building. Similarly, you can do for office building. Understood? Have you understood this particular point? So normally student do mistake यहाँ पर, while calculating borrowing cost, they will do 5 lakh का 12 month, and for this 5 lakh they will do 6 months. That is not correct. For a specific borrowing, we will calculate borrowing cost irrespective of expenditure incurred during the capitalization period. During the capitalization period. Have you understood this particular point? Office building, once you have understood factory building, office building you can do by room. चलेगा? In same answer is given 72,500, 72,500. चलेगा? Yes. One more question. Question number 6. This is also one interesting question which has been added recently in the question bank. चलेगा? X Limited commenced the construction of a plant on 1st September 2001, estimated to cost rupees 10 crore. For this purpose, X has not raised any specific borrowing. It means they have used general borrowing, non-specific borrowing. Yes, sir. Rather, it intend to use general borrowing, which have a weighted average cost of 11%. So they have given capitalization rate. Weighted average cost of capital is nothing but capitalization rate. Total borrowing cost incurred during the period 1st September 2001, 31st March 2002 was 0.5 crore. They have given total borrowing cost incurred is 0.5 crore. Yes, sir. Now, the other relevant details are given. Month from September to March, they have given cost of construction accrued and cash outflow paid in advance at the start of each month. Now, just try to understand. Whenever we do accounting, accounting is done on accrual basis. Accounting means whenever you record any expenses, whether you record any expenses, so that is done on accrual basis. Accrual accounting we do, correct? Now we never do accounting on payment basis. But the question is that when you calculate borrowing cost, the borrowing cost will be calculated on expenditure on accrual basis, on expenditure on payment basis. I hope you are understanding my question. So in this question they have asked, we need to calculate borrowing cost to be capitalized on expenditure on accrual basis, on expenditure on payment basis. What is your answer? What is your answer? Bata. Are you able to, if you are able to follow me, just say yes sir, yes sir. Correct? Now you are not responding. Once you are not responding, what will happen? I will feel that you are not with me. You need to with me only. Just try to understand what I have asked. Have you understood my question? In this particular question, they have given expenditure on accrual basis and expenditure on payment basis. Of course, accounting of expenditure will be done on accrual basis, but the borrowing cost capitalization will be calculated on expenditure on payment basis, expenditure on accrual basis. Of course, on payment basis you are 100% correct. So this information is relevant. This information is not relevant for this chapter, but this chapter means for calculation of borrowing cost to be capitalized. Based on above information, discuss the treatment of borrowing cost as per cash outflow basis or accrual basis. First they have said ki calculate on both basis. We can calculate, and also suggest the appropriate amount of interest that should be capitalized to the cost of plant in the financial statement for the year. So what they have done, just first they have calculated on accrual basis. So on accrual basis, first they have calculated average expenditure. So into, you can say 7 by 12, 6 by 12, 5 by 12, 4 by 12, 3 by 12, 2 by 12, 1 by 12. This become average expenditure. Now on this they have applied capitalization rate. So you can see 2.74 into 11%. This is the borrowing cost to be capitalized on accrual basis, expenditure on accrual basis. Then they have done cash outflow. You can see 7 by 12, 6 by 12, 5 by 12, then 4 by 12, then 3 by 12, then 2 by 12, then 1 by 12. This become average expenditure on payment basis, correct? On this they have calculated 4.02 into 11%, 0.44 crore. Then they have given answer ki as per IND AS 23, expenditure on qualifying asset will be the expenditure on payment basis, not the expenditure on accrual basis. Therefore borrowing cost eligible for capitalization will be how much? Will be 0.44 crore. That is only given 0.4. Capitalization will be 0.44 crore. Understood? Yes sir. Yes sir. Question number 7. This is also newly inserted question. This is expected, 100% expected in exam. Good question. What they have given? LT Limited is in the process of constructing a building. The construction process is expected to take about 18 months from 1st Jan 2001 30th June 2002. You can see in this there are actually 3 financial year. First financial year there is 3 months. Second financial year there is 12 months, and third financial year there is 3 months. Correct? So 3 plus 12 plus 3 total become 18 months. The building meet a definition of a qualifying asset. They have given expenditure 1st Jan itna, 30th June itna, 31st March itna, 30th June itna. On 1st July 2001, LT Limited issued 10% redeemable debenture of 50 crore. The proceeds from the debenture form part of company's general borrowing, which it uses to finance the construction of qualifying asset, that is building. LT Limited has no borrowing before 1st July 2001. Before 1st July there was no borrowing, and did not incur any borrowing cost before that date. LT Limited incurred 25 crore of construction costs before obtaining general borrowing on 1st July 2001, and 25 crore after obtaining general borrowing. Correct? That is post borrowing expenditure. For each of the financial year, calculate borrowing cost to be capitalized. Good question. Let me draw a timeline for this. What they have given? So this is 1st Jan. This is 1st Jan 2001. And this is 31st March 2001. 31st March 2002, and this is 30th June 2002. The expenditure. First expenditure was done यहाँ पर. How much expenditure? Is 5 crore. Then second expenditure was done on which date? On 30th June 2001. 30th June 2001 will be यहाँ पर. 38th June. That is 20 crore. Then third expenditure was done on 31st March. That is 20 crore. Then fourth expenditure was done on 30th June 2002. That is 5 crore. The debenture was issued on 1st July 2001. So 1st July 2001 is this date only, 1st July 2001. A debenture of what amount? Amount was how much? That was 50 crore. 10% 50 crore. So 10% and the amount is 50 crore. You can see before availing the loan, already they have done expenditure of what? 25 crore. And after loan, they have done expenditure of 25 crore. Now the question is that how much borrowing cost will be capitalized year wise. So first we'll do first year 2001. We can say 2000 2001. So can I say for this year, so there was no borrowing. So no borrowing cost will be capitalized. The borrowing cost to capitalize will be nil. Like I think first year, no doubt. Coming to second year, 0102. 0102. Now just try to understand. You need to find out expenditure on qualifying asset. The expenditure on qualifying asset. So this 5 crore was already expenditure has been incurred from the own fund. But once the loan amount has been used, loan amount was availed. Can you say out of that loan amount, you will first that loan amount will be used for this purpose only. It means कि just try to understand. The intention was कि there was some delay in the loan availment. So we started using our own fund. But once the loan was availed, from the loan we'll take back our fund. Correct now. Means this expenditure was ultimately from this loan amount, but the borrowing cost will be incurred from this date. Means can I say the expenditure which was done on 1st Jan 2001, 5 crore. This will be, this is eligible for capital. On this the capitalization will be done for how many months? From this month to this month. That is how many months? 30th June to 31st March. That is 9 months. Into will do 9 by. Then expenditure was done on 30th June. 30th June 2001. 20 crore. On this also will be 9 by 12. Then expenditure was done on 31st March. 31st March. How much? 20 crore. On this the capitalized month will be 0 month, 0 by 12. So this will be the average expenditure. On this average expenditure we'll apply capitalization rate, that is 10%. That is 10%, and we can find out the amount of borrowing cost which will be capitalized. Amount of borrowing cost will be capitalized. I hope this you have understood. That is only done. Check karenge. First year, 1st Jan 2001, the capitalization period will be 0 month. But in second year, the expenditure which was incurred on 1st Jan 2001, the capitalization month is 9 month. For 30th June, 9 month. And 31st March, it is 0 month. This become the average expenditure. On this average expenditure, apply capitalization rate. This become borrowing cost to be capitalized. Borrowing cost to be capitalized. Now coming to third year. In third year, the capitalization period is 3 month only. So any expenditure which was done on 1st Jan, will do 3-month capitalization. Any expenditure which was done on 30th June, that will be also 3-month capitalization for the last year. 31st March, that is also 3 by 12. Any expenditure done on 31st March 2002, that is interest which you have capitalized. Interest was capitalized on 31st March only. That is also part of expenditure. On that interest means this amount. Also you will do borrowing cost capitalization for how many months? 3 months. This is a important point where you can do mistake. So expenditure on qualifying asset will also include the borrowing cost which was previously capitalized, which was capitalized in previous year. That will be also form part of expenditure on qualifying asset for further capitalization. Understood this point? Yes sir. And on 30th June it is 5 crore, but capitalization month will be 0 by 12. This become what? Average expenditure. On average expenditure applied capitalization rate, this will be borrowing cost to be capitalized. Got this point? With this, all the question of IND AS 23 we have completed from my point of view. Now if you have any question of IND AS 23 which you have not understood, just inform me. I will do that question right now. I will be waiting for 5 minutes. If you do not have any question in your mind, just say sir, done. We can continue with other IND AS. So I will start other IND AS. I will wait for 2 3 4 5 minutes. Okay, chalega. you have done, just sir, yes, just inform me, yes sir, we can continue. So I will start with another IND AS. If you have any question in your mind for this particular chapter, just inform me, I will do that question also. Yes, date of is given that building has been completed. The qualifying asset is completed on 30th June 2002. That will be the date. Is capitalization. Correct. Yes, Krishnamurthy, you are correct. 30th June 2002, the date when the borrowing cost will be ceased. Capitalization of borrowing cost will be ceased. Okay, sir. Can we continue with one more IND AS? IND AS 2. Let us start IND AS 2. Small chapter. Let us complete it fast. Okay, IND AS 2 में आते हैं. IND AS 2. IND AS 2. Let us revise fast. First IND AS 2. Everyone saying continue. Don't have any question for IND AS 23. Okay, sir. IND AS 2 start करते हैं. IND AS 2 is very simple for revision purpose. I will just take just take 5 to 7 minutes to revise it. So inventory means what? Inventories are asset which are held for sale in the ordinary course of business, which are held in the process of production, or which are held in the form of material or supplies to be consumed in the process of production or for rendering of services. Include, there can be two type of organization. For trading organization, it includes stock in trade. For manufacturing organization, it will include raw material, WIP, and finished good. The value of inventory will be very simple: cost price or NRV, whichever lower. The cost price consists of three components. One is cost of purchase, second is cost of conversion, third is other cost. What do you mean by cost of purchase? Cost of purchase means invoice price minus trade discount rebate plus non-refundable duties and taxes plus all the directly attributable expenses to bring the inventory in present location. So all the directly attributable expense means, can I say, transportation cost, insurance in transit, any toll tax paid, any octroi paid, whatever, any expenses which have been incurred to bring the asset in the present location, means any loading and unloading charges, all the costs will be added. Then cost of conversion are of two type. One is direct labor, one is fixed, one is production overhead. Direct labor cost will be added. Production overhead are of two type. One is fixed overhead, one is variable overhead. Variable overhead will be allocated to each unit on the basis of actual production. This point is very important. The variable overhead will be always allocated on the basis of actual production. However, fixed overhead will be allocated to each unit on the basis of actual production or normal production, whichever is higher. Be careful. The fixed overhead will be allocated to each unit on the basis of normal production or actual production, whichever is higher. If the question is silent, so we'll assume that actual production and normal production are same. If the question is silent, we'll assume actual production and normal production are same. What do you mean by other costs? Any other expenses to bring the inventory in in the condition of sale will be also added to the cost price of inventory. For example, packaging cost, transportation cost from factory to warehouse, modification cost, etc. What are not included in the cost price of inventory? Administrative expenses, selling and distribution expenses, abnormal loss will not be included. Storage cost, if it is not necessary for production process, is any storage cost which is necessary for production process will be added to the cost price of inventory. Foreign costs may or may not be added depending upon IND AS 23, because if it is a qualifying asset it will be added, if it is not a qualifying asset it will not be added. Understood? Yes sir. Now coming to some special point is joint product and byproduct. Joint product may, what we'll do first, we'll calculate joint cost. Joint cost joint cost means the total cost of production. From that will minus any NRB of byproduct. From that will minus any NRB of scrap material. That will become total joint cost. That total joint cost will be allocated each main product in the ratio of their sales value, either at the point of split up or at the time of completion of production process. They have given two ratio of allocation of joint cost. Either it can be allocated on the basis of sales ratio of each joint product at the time of split up or on completion of production process, correct. Byproduct means if the amount is material, then that is the amount is immaterial, then that product is known as byproduct. And byproduct are measured NRB, and that NRB is deducted from the cost price of main product. Very simple. Byproduct. The treatment of byproduct and scrap material is always same. Understood? Chalega? This much understood? Follow. This much understood? Now deferred settlement terms, it is similar to whatever we have done for PP, etc. Whenever we purchase inventory on deferred settlement basis, means if the payment period exceed normal credit period, then of course the cost price of inventory will be the present value of all future payment, which is nothing but purchase price at normal credit terms. In this case, the interest, whatever is the difference between future payment and present value of future payment, will be recognized always as an expense, means it will never be included in the cost price of inventory. This you need to remember. The interest you have calculated, this will be always recognized as an interest expense over the period of credit, but it will never be included in the cost price of inventory. Chalega? Yes sir. Correct. Then coming to cost of agriculture produce harvested from biological asset. Now any agriculture produce at the point of harvesting is measured as per IND AS 41. IND AS 41 says that initial recognition of such agriculture produce at the point of harvesting will be done at fair value less cost to sell. But once it is harvested, that become inventory, and for that harvested agriculture produce we need to apply IND AS 2, and IND AS 2 the measurement will be done at each reporting date at cost price or NRB. Now what IND AS 2 says, that cost price will be the fair value less cost to sell which was taken on initial recognition. So IND AS 41 says that agriculture produce at the point of harvesting are measured at fair value less cost to sell. However, this will become cost price of such agriculture produce for the application of IND AS 2. NRB, it is very simple. For finished goods, it is estimated selling price minus estimated selling expense. Both will be given in the question. For WIP, it is what? Estimated selling price of finished goods. From that minus estimated selling expense of finished goods, that will become NRB of finished goods. From the deduct estimated cost to complete, this will become NRB of WIP. Very simple, correct? I think no explanation required. Chalega. Now for raw material, what they have said, for raw material, we need to first find out the NRB of finished goods. If the NRB of finished goods is more than or equal to the cost price of finished goods, is the expected sale price of finished goods is the more than or equal to the cost price of finished goods, it means the finished goods are expected to be sold at profit, then in that case we'll value raw material at cost price of raw material. So in that case, raw material will be valued at the cost price of raw material. However, if the finished good which will be produced from the raw material given, the NRB of that finished good is less than the cost price of finished goods, in that case raw material will be valued at cost price of raw material or replacement cost of raw material whichever is lower. So cost price or replacement cost whichever is lower. This you need to keep in your mind. Chalega. Cost formula, it is very simple. You can read it. It is as simple as what you have done in your CA foundation, CA inter. Nothing to discuss much. Correct. Comparison will be always done on item by item basis. However, group basis can be also done if the circumstances require. Reversal write down, if there is suppose subsequent increase in NRV. So whatever previous write down you have done, that can be reversed to the extent of previous write down. Correct. Now the NRV should be reassessed at the end of each reporting period. If NRV increases, the amount of previous write down is reversed so that new carrying amount of inventory become lower of revised NRV or cost price, whichever is low. Correct? Understood? I think you have understood this. You can read the balance part, you can read. Let us come to some questions. Can we come to the questions? Hello. Question number 1. What they have given? ABS Limited manufacture control unit for air conditioning system. Each control unit require the following: one component X at a cost of rupees 1205 each, and one component Y at a cost of rupees 800 each. So this will be means each control unit required one component. So this will be capitalized. This will be included in the cost price of inventory. You give 1205, 800 will be added. Sundry raw material at a cost of 150 each. So sundry raw material will be also added 150. The company faces the following monthly expense: factory rent, this is fixed overhead; energy cost, this is also what? Fixed overhead. Selling and administrative cost will not be added. The total fixed expenses is how much? 1,500 plus 7,500. It become 24,000. Each unit take 2 hours to assemble. Each unit is taking 2 hours to assemble. Production workers are paid 300 per hour. So production worker are paid 300 per hour. So there is a direct labor. So 300 into 2 will take. So labor cost will come 300 to 600. Correct. The production overhead are absorbed into unit of production using an hourly rate. The normal labor of production per month is 1000 hours. We normally normal labor of production per month is 1000 hours. 1000 hours become normal labor of efficiency. This fixed overhead will be allocated based on normal labor of efficiency or actual labor of efficiency, whichever is higher. So since actual labor of efficiency is not given, we will say normal labor of efficiency is nothing but actual labor of efficiency. I hope you are understanding. In this case, what will do? 24,000 divided by 1000 into, and for this unit we are taking 2 hours. What is become 24,000 divided by 1000 into 2? It is coming how much? 48. So 48 will be also added. This become the cost price of inventory. Got this point? Simple. Next point. At the end of next question, question number 2. At the end of financial year, company P has 100 units of inventory on hand recorded at a carrying amount of 10 per unit. The current market price is 8 per unit at which this unit can be sold. Is this become the NRV, net realizable value? The company P has a firm sale contract with company Q to sell 60 units at 11 per unit, which cannot be settled net. Estimated incremental selling cost is 1 per unit. What they are saying, out of 100, we have a firm contract for 6 units to sell at 11. Okay, for that NRB will be 11 minus 1, that is 10. And for 40, we'll take the general selling price, that is 8. 8 minus 1, that is become 7. So NRB for 60 unit will become 10. NRB for 40 unit will become 7. What is the cost price? Cost price is given 10 only. The cost price is 10. 10 will take lower one. So for 60 it will be 10 rupees. For 40 it will be 7 rupees. You can see they have done only for 60 it is 10 unit. For 40 it is 7 unit. This become the total cost price of inventory. Total cost price of the inventory. Chalega. So whenever we find out sale price, the sale price first preference will be given to any binding sale agreement as on reporting date. There is no binding sale agreement. We'll just take the sale price based on the sale which has been made before approval of financial. That is also not given. Then we take the fair estimation given by the management, means as per the information given in the question. Got this? Next point, question number 3. They have given opening inventory, finished goods 1000, 25,000, raw material 1100, 11,000, purchase 1 lakh, labor 76,500, overhead 75,000, sales 10,000 unit, 2,80,000, this is sale price. Closing inventory, they have given raw material and finished goods. The expected production for the year was 15,000 kg. So this become what? Normal production. Correct. Due to fall in the market demand, the sale price of finished goods is 20. This is the NRB of finished goods. And the replacement cost of the raw material, this become replacement cost of the raw material. You are required to calculate the closing inventory as on that. Since first we'll find out cost price of finished goods. The cost price of finished goods will be the cost of purchase. The cost of purchase, can you see, we'll do first opening stock of raw material plus purchase of raw material minus closing stock of raw material. Opening stock of raw material is what? 1,100. Then purchase how much? 10,000. Then minus how much? 900. This will become 10,200 multiplied by cost price per unit. So either you can calculate cost price per unit either on FIFO basis or on weighted average price basis. You can see this opening stock of raw material is also 10 rupees per unit and purchase is also rupees 10 rupees per unit. So if you use FIFO or if you use weighted average cost price method, both in both the answer will come 10 rupees per unit only. You'll do into 10, this will become 1,02,000. This become cost of purchase. Understood? Suppose this is 10 rupees per unit, this is 11 rupees per unit. Then your answer based on FIFO and answer based on weighted average price method will be different. But in this question, answer based on FIFO and answer based on weighted average price method, both will be same. Means either we can use FIFO or whether we can use weighted average cost price method. I hope you have understood this point. Then we'll add direct labor. Then we'll add production overhead. So you can see fixed overhead is 75,000. 75,000. So first we need to find out what is the actual production. Actual production, that we need to find out. So if you assume that, if you assume that 1 unit of raw material, we produce 1 unit of finished goods and there is no abnormal loss. Okay, 10,200 will be our actual production. However, our normal production is 15,000. So we'll use 15,000 to allocate what? We'll use normal production, actual production, whichever is higher, for fixed overhead. So fixed overhead is how much? 75,000. Divide by what? 15,000. It is coming how much? 75,000. Divide by 15,000. That is rupees 5. 5 into actual production. You can see 5 into actual production they have done. 10,200 into 5. How much it is coming? That is coming 51,000. The 51,000 will be added. And the balance overhead will be charged to profit and loss account as an abnormal loss. So any balance overhead which is not allocated, which is not added to the cost price of inventory, will be charged to profit and loss account as an abnormal loss. Understood? This become total cost of production. Correct. Divided by actual production 10,200. This become total cost price. And you can see NRB is what? 20. NRB is 20. We'll take whichever is lower. The 20 is what? Lower. It means finished goods will be valued at 20 only. Therefore, the finished goods is 1,200 into 20 will do. This will be the value of closing stock of finished goods. Now, in this question, you can see the finished goods are expected to be sold at below its cost price because NRB is less than the cost price. Therefore, the raw material will be valued at cost price or replacement cost, whichever is lower. The cost price of raw material is 10. The replacement cost is 9.5. So we'll take 9.5 and this raw material will be due into 9.5. This will be the value of closing stock of raw material. Good question. This type of question can be asked. But normally kya hota hai? In AS 2 they may ask a question of 4 marks, maximum 4 marks on MCQ based question. So now we are expecting that MCQ based question can be asked from this chapter. Correct now. So we don't know whether this type of question they will ask or they will not ask. Now coming to question number 4. Sun Limited has fabricated special equipment solar power panel during 1415 as per drawing design supplied by the customer. Drawing and design. However, due to liquidity crunch, the customer has requested the company for postponement in delivery schedule and requested the company to withhold the delivery of finished goods product and discontinue the production of balance item. It is quite possible there is some liquidity issue in the customer point of view. Therefore, they are saying that will not take the delivery and they postpone the further production, discontinue the production of balance item. As a result of the above, the details of the customer balance and the goods held by the company as WIP and finished goods as on 31st March 2016 are as follow. Solar power panel is 85 lakh. Solar power panel finished product is 55 lakh. So this is WIP, this is finished product, and sundry debtor is 65 lakh. The petition for winding up against the customer has been filed during 1516 by Sun Limited. Comment with explanation on provision to be made of rupees 205 lakh included in sundry debtor, finished goods and WIP in the finance system. So guys, this for this to will apply IND AS 2. IND AS 2 says cost price NRB whichever lower. Now in this question they have not given NRB. It is based on assumption. If we assume NRB is more than cost price, then can I say will not write down the cost price of inventory, and that will be valued what 85 lakh and 55 lakh. But suppose if you assume that because this is based on the specification given by the customer, so this can be sold only to this customer and there is no other customer available for such goods. So we can assume that NRB of such finished goods and WIP is nil. We can assume that that is the case. So can I say we should write down 85 lakh and 50 lakh in profit and loss account, because the NRB will become 0. Understood? This can be two possible answer. Case sundry debtor, because they have filed a petition against the customer for winding. The petition for winding up against customer has been filed. That is going to be liquidated. It is quite possible the amount is not recoverable. Therefore, we need to calculate impairment loss on such debtor as per IND AS 109. As per IND AS 109. So based on that information is not given ki how much impairment loss we should calculate, but can I say this is sundry debtor, so we should apply IND AS 109 only. And if you take assumption that entire amount is not recoverable, therefore we should create an expected loss allowance of 65 lakh on such debtor. That is only given in the question. You can read. Question 5. Chalega. On 31st March 2001, the inventory of ABC Limited includes spare part which it had been supplying to a number of different customers for some year. The cost of spare part was 10 million, and based on retail price at 31st March 2001, the expected selling price of spare part was 12 million. On 15th April 2001, due to market fluctuation, the expected selling price of spare part in the stock reduced to 8 million. The estimated selling expenses required to make the sales would be 0.5 million. Financial statements are authorized by the board of directors on 28th April. This is a question of IND AS 2 in relation with IND AS 10. Just try to understand what they are saying. This is 31st March 2001. Cost price is given how much? 10 million. And NRB is given how much? NRB is given how much? 12 million. Now they have given before approval of finance statement due to market fluctuation, the NRB become 8 million. Now the question is that whether it is an adjusting event or non-adjusting. Just try to, when I am saying market fluctuation, so what do you mean by NRB? NRB means estimated selling price. At what price it can be sold? At what price it can be sold? It will be not sold on 31st March. It will be sold after 31st March only. So due to market fluctuation, can I say it will be sold due to reduced price only, and that is the information available before approval of financial statement. So market fluctuation is an indication that NRB should be re-estimated, because NRB means what? Estimated selling price on selling date. So we are not selling the product on 31st March. At what price it can be sold? So if there is a market fluctuation, that gives an indication that this can be the possible selling price of such unit, and if that information is available before approval of financial statement, this will be considered as adjusting event. This will be considered as adjusting event. Correct? Understood? So this will become adjusting event, and NRB will become 8 million. Is the estimated sale price will become 8 million, and the cost to sell is 0.5. So 0.5. So NRB becomes 7.5, and we should write down how much? 2.5 we should write down. Then at 31st March 2002, director noted as such inventory still unsold and lying in the warehouse of the company. Directors believe that inventory is in sellable condition and active market would result in immediate sale. Since the market condition have been improved, now estimated selling price become 11 million and estimated selling expense 0.5. So now NRB become 10.5. Once again we'll do reassessment of NRB. NRB become 10.5. Cost price was 10, whichever lower, it become 10. And now whatever previous write down you have made, that will be reversed. In the second year, there will be reversal of previous write down. Reversal of previous write down will be shown in SOPL as a reduction of inventory expense. as a reduction of inventory expense. Understood? Correct. So first year we'll do write down of inventory by 2.5 million. In second year we'll do reversal of that write down. Correct now. And the carrying amount of the inventory will become 10 million. And that reversal write down will be considered as reduction of inventory expense in the second year. Got this point? I'm coming to Rishi, I'm coming to your question. Rishi, I'm coming to your question. Okay. Coming to question number 6. Question number 6. 37. What they have given? An entry has following details regarding cost and retail price of the goods purchased and unsold at the beginning of the year. Opening inventory cost is this, retail price is this. Purchase is this, retail price is this. Inventory at end, retail price is this, sale price is this. Now applying the retail method means there is one adjusted selling price method, retail method, if you remember, correct now. For trading organization, whenever we can't calculate the cost price, actually we retail price method or adjusted selling price method for the trading organization. This is one technique of inventory valuation. And for that we first find out closing stock at selling price. From that we deduct profit margin, that will become cost price of closing stock. So that they have given percentage of what they have asked, percentage of cost price over retail price. Sorry, percentage of cost price over retail price. So you can find out this difference. This is what 8,000 minus 6250 coming 1750 divide by 8,000. Correct. This is coming what? That only. You can see the first they have asked. They have added, actually they have added this. So add kar do this two. Correct now. So you can see 6250 plus 19,500 and 8,000 plus 34,000. The difference is coming how much? They have asked what? They have asked percentage of cost price. They have asked percentage of cost price over retail price. So this cost price by retail price into 100. That will be the, you can see 25,750 divided by 42,000, that becomes 60%. Second, cost of closing inventory. Cost of closing inventory, they have given retail price 23,000. Okay, this is the sale price. We need to find out cost price. So we'll do 61%. That will become what? Cost price of closing stock. That only they have done 23,000 into 61%. That become the cost price. Means I will say bakwas question, but sometimes this type of question they ask can be dangerous from exam point if you are not doing that question. Correct now. However, now this type of question can be asked in MCQs also. Value of cost of sales at cost. So cost of sales. This is sales. This is sales now. You need to find out value of cost of sales at cost. Correct. So cost of sales for the period. What you can do? You can do opening stock plus purchase minus closing stock. So opening stock is how much? 650. Purchase is 19,500 and closing stock already we calculated 14,030. That become the cost of sales. That become the cost of sales. I hope you understand. Any doubt? So cost of sales you understand, opening stock plus purchase minus closing stock. Then profit earned will be sale price minus cost of sales. Sale price given 19,000 minus 11,720. This will become what? Your profit. I think pura bakwas type of question, but do it. Sometime what happen if this type of questions come and if you have not done that this type of question, you'll finding difficulty in exam question. Correct? Yes. Last question. This is also newly inserted question. So let us do it. A Limited began the operation in the year 2001-2002. In 2001-2002, it incurred the following expenditure on purchase of raw material for its product. Purchase price of raw material, this will be capitalized. Import duty and other non-refundable purchase tax, this will be also capitalized. Capitalized means it will be added to the cost price of inventory. Refundable purchase tax, this will not be capitalized. Freight cost for bringing the goods from supplier to factory to storeroom for raw material, this will be also capitalized. Cost of unloading the material into storeroom, this will be also capitalized. Packaging, this will be also capitalized. On 31st March 2002, A Limited received 530 volume rebate from supplier for purchasing more than 15,000 from supplier during the year. So of course this volume rebate will be received. Will deduct 530. This volume rebate will be deducted. A Limited incur the following additional costs in the production line. Salary of machine worker in the factory. Of course this will be this will be added because this is the salary of machine worker of factory. This is nothing but factory overhead. This you can say factory overhead, or you can say direct machine worker. This become direct labor actually. Salary of factory supervisor. This will be also added. Depreciation of factory building and equipment. This will be also added. Consumable used in production process. This will be also added. Depreciation of vehicle used to transfer the goods from a storeroom for raw material to machine floor. This will be also added. Factory electricity usage. This will be also added. Factory rental. This will be also added. All are directly attributable expenses. Correct me. These are nothing but part of production overhead. Depreciation of entities vehicle used for factory supervisor. This will be also added because factory supervisor. During 2001-2002, A Limited incurred the following admin expense: depreciation of admin building, depreciation of maintenance of vehicle used by admin staff, salary of admin personnel. Of the administrative expense, 20% is attributable to admin the factory. Means out of this, 20% will be added as a production overhead. Correct. In 2001-2002, A Limited incurred the following selling expense. Selling expense will never be added. This will not be added. Past next journal entry. Now they have asked journal entry. Journal entry they have asked. I don't think so in exam they will ask journal entry, but if they ask, you should be able to do it. So first, let us see the working. You can see everything whatever I have said: purchase price, import duty, freight cost, cost of unloading, packaging, trade discount rebate. This is become cost of purchase. Then we'll come to cost of conversion. Means in exam you need to do it only. First find out cost of purchase. Now come to cost of conversion. Cost of conversion is direct labor. So direct labor is only one part. That is what? 5,000. Direct labor you can see is what? This is direct labor. Then we'll write down production overhead. You can see fixed production overhead, depreciation and maintenance of factory equipment, depreciation of vehicle used for transporting the goods, depreciation of vehicle used by the factory supervisor. Correct. Factory electricity usage, factory management, factory rental, other cost of administrating the factory. This 20% has been added. Then there is one consumable that is also added. This is indirect material. So 11,440 become cost of conversion. So cost of purchase plus cost of conversion will be the cost price of finished good. Now they have asked journal entry. Journal entry is very simple. It is inventory account debit to cash or bank for the purchase. Correct. So you should write down inventory account debit to cash or bank. Inventory account debit to cash or bank. But only for depreciation, you write down inventory account debit to PP. Correct now. Means inventory will increase and PP will decrease. Correct now. So for other expenditure for which payment has been done, you will do inventory account debit to cash or bank. For depreciation, you will do inventory account debit to PP. And for consumable, you can see indirect material has been reduced and your cost price of finished goods is increased. Inventory account debit to inventory of consumable. You write down that inventory account debit to inventory of consumable. This journal entry you will do. Correct. I hope once you read, you will be able to understand question. The question sometime now suddenly they will give this type of question of 8 marks. Now if you have not done this question, you will not be able to write down. Just revise this question. Be sure that if this question come, you should be able to do it. Very simple. You can do it. Understood? I hope you have understood. Have you understood this question? Cool. These are the simple question, but what happens suddenly if in exam this question come na, is I always say exam में दिमाग नहीं चलता. If exam में दिमाग नहीं चलता, then this can be dangerous question. Correct? I hope you have understood. Have you understood this particular point? With this IND AS 2, I have completed from my point of view. All the good questions I have done. Now balance question you do it if you want. Otherwise IND AS 2 I will say, even though you have not done, you can attempt in exam. Have you understood this particular question? Once you read this question again, the solution you read. solution you चलेगा. Understood? There are two more questions that also you do for IND AS 2. I'm just writing that I have not given an expected question, but I will just inform you that two questions also you do that you can do by your own. There's no doubt about that. I'm just giving you that two questions. Come to IND AS 2. What happened? We have done this much. If suppose that questions come, then one question number 8 you do. Question number 8, that byproduct joint product wala question can be also a good question which can be asked in exam. Question number 9 can be asked for MCQ. Question number 9 is relevant for MCQ. You can do by your own. The question number 21, just do it, just see it. Can be if they ask this question, if you have not done now, so you will be not able to do it. So this type of question are not expected. But suppose they ask, then what you will do? Correct now. So just do question number 21, this full capacity, normal capacity, you will be able to understand. But if you have done it and the same questions come, you will be able to attempt it. This question 23 already asked in exam. You can again do it. It's very simple. Question 23, just read it. Question 23, just read it. Balance all question, you can do it. Okay. चलेगा? Yes, sir. So IND AS 2 is over from my point of view. Any doubt you have in IND AS 2 questions? Any doubt you have in IND AS 2 questions? No? Now let us come to one more IND AS. IND AS 36. Come to IND AS 36. IND AS 36. Let me first revise IND AS 36. Just try to understand. IND AS 36. Of course, the impairment of asset you have understood. What is the scope of this chapter? In this, what are covered? PP is covered. Intangible asset is covered. Investment property is covered. Investment in subsidiaries, associate and joint venture is covered. Correct. Then ROU asset is covered. ROU asset held by lessee. Any biological asset for which if you are using cost model initially, then that is also covered. That is also, that will be also, for that impairment testing will be done as per IND AS 36. This is the coverage of this IND AS 36. Apart from this, other assets are not covered in this chapter. Now, if you are performing impairment testing of individual asset, what is the formula? If from carrying amount of the asset, which you deduct recoverable amount, and this will be impairment loss. So what do you mean by recoverable amount? Recoverable amount is higher of value in use and fair value less cost to sell. Fair value less cost to sell will be given in the question. Value in use, the present value of future cash flow, correct now? Future cash flow which are generated from the use of the asset, as well as cash flow which will be obtained at the end of on disposal of the asset at the end of useful life. So you can see present value of future cash flow given in the question, including disposal value at the end of useful life. Including disposal value at the end of useful life, the disposal value, don't ignore that. Understood? So present value, that rate of discount will be given, that you are expert, you will take higher one, then find out recoverable amount, then compare this will become impairment loss. Coming to cash generating unit. Cash generating unit. There can be two type of questions. There can be two type of questions. Suppose, first, if corporate asset and goodwill can be allocated to smaller CGU. How to calculate this? First, you need to identify CGU. Suppose CGU A, B, C has been given. A, B, C has been given. In this, you will add goodwill. As per the ratio given in the question, you will allocate goodwill as per the ratio given in the. Then you will add corporate asset as per the ratio given in the question. This will become total carrying amount after allocation, total carrying amount of CGU. Compare with the recoverable amount. The recoverable amount will be given in the question. Correct. This will become total impairment loss. This will become total impairment loss. Impairment loss will be first allocated to goodwill to the extent of their carrying amount. Is to the extent of this carrying amount whatever has been allocated. Balance impairment loss. This will become balance impairment loss, and this balance impairment loss will be allocated to other asset, including corporate asset, in the ratio of their carrying amount. Balance impairment loss will be allocated other asset of the CGU and the corporate asset, means this and this, in the ratio of this carrying amount, in the ratio of their carrying amount. Can do. Have you understood? Now, second, if corporate asset and goodwill cannot be allocated to smaller CGU, correct? There are some corporate assets which cannot be allocated and goodwill cannot be allocated. So in this, we'll perform impairment testing on based on two stages. First, we'll do first stage impairment testing as whatever we have done right now. Then we'll do second stage impairment testing. Second stage impairment testing, what we'll do? First, we'll calculate revised carrying amount of larger CGU. Larger CGU will be entity as a whole. Larger CGU will be entity as a whole, including the unallocated corporate asset and unallocated goodwill, which will remain unallocated in first stage. Correct now? And so this will be compared with the recoverable amount of larger CGU, that will be also given the question. This will become total impairment loss. Total impairment loss. Correct. This impairment loss will be first allocated to goodwill, and the balance impairment loss will be allocated to the corporate asset which remain unallocated earlier, means which was allocated to larger CGU in the ratio of their carrying amount. This balance impairment loss will be allocated to only those corporate asset which are allocated to larger CGU in the ratio of their carrying amount. The ratio of their carrying amount. Understood? So this is the actual way of doing this chapter. Understood this point? I think basic point I have explained. Basic point of this chapter means from which all the question given in ICS study metric can be done. If you know this, so you can attempt any question of ICS study metric. Now the second question is of reversal of write down. Reversal of impairment loss. Concept is what? Reversal will be lower of these two. Point number A, point number B. Point number A is what? Recoverable amount minus carrying amount. Recoverable amount minus carrying amount. Point number B will be carrying amount as if no impairment loss was ever charged minus carrying amount as on that, means present carrying amount. The lower of these will be the reversal amount. Lower of these will be the reversal amount. This is very simple. The amount of reversal, so subsequently the impairment loss which was previously recognized can be reversed if there is an indicator for reversal. If there is an indicator for reversal, that amount will be lower of these two. First, recoverable amount minus carrying amount. Second, carrying amount as if no impairment loss was ever charged minus carrying amount. The lower of this amount will be the amount of reversal. However, we can say in this way, revised carrying amount after reversal will be lower of point number A, recoverable amount. Point number B, carrying amount as if no impairment loss was ever charged. No impairment loss was ever charged. So let's see, based on this, can we attempt all the question? Let's see, based on this, can we attempt all the question? Chalega? Yes, sir. This much is the general knowledge required from examination point of view. Hello. Can we take some question? Yes, sir, we can take. Yes, 36. They have given one question. Great Limited acquired a machine. Great Limited acquired a machine on 1st April 2012 for rupees 7 crore. That it has an estimated useful life of 7 years. The machine is depreciated on a straight line basis and does not carry any residual value. On 1st April 2016, the carrying value of machine was reassessed at 5.10 crore and the surplus arising out of revaluation being credited to revaluation reserve. For the year ended 31st March 2018, means after 2 years, the condition indicating an impairment of machine existed and the amount recoverable ascertained to be 79 lakh. Calculate a loss of impairment loss of the machine and say how this loss to be treated in the books of account. The Great Limited had followed the policy of writing down the revaluation surplus by increased charge of depreciation resulting from revaluation. Last point means what? As per IND AS 16, there are two accounting treatment for revaluation surplus. Either it can be transferred to retained earning on derecognition of asset, or the revaluation surplus can be transferred retained earning during its remaining useful life with an amount equal to additional depreciation. Only we have discussed this point. They are saying that they have followed second option. So first we'll find out total impairment loss. So what was the initial carrying amount? 7 crore. Correct. What was the date of revaluation? 1st April 2016. What was the initial date? 2012. This will calculate first depreciation for how many years? 4 years. That will be 7, the cost price, divided by 7 useful life into 4. That will be 4 crore. This will be carrying amount as on 31st March 2016. Now on 1st April 2016, there was a revaluation, upward revaluation. Fair value is what? 5.10. And what is the carrying amount? 3 crore. So there is a revaluation gain of 2.10. The revaluation gain of 2.10, this will be credited to OCI as revaluation surplus. Then revised carrying amount will become 5.10. Revised carrying amount as on 1st April 2016 will become 5.10. After that, what they are saying, after 2 years, there was indicator impairment. So once again we'll calculate depreciation for the next 2 years on the revised carrying amount. So depreciation for the next 2 years will be 3.40. What is the remaining useful life? Remaining useful life out of 7, 4 years gone, so 3 years left. Divide by 3 into 2. So this become accumulated depreciation. This will become carrying amount on the date of impairment, compare with the recoverable amount, and the balance will be impairment loss. Balance will be impairment loss. Now the question is, this balance impairment loss will be charged to OCI, the extent of what amount, and the how much will be debited to PL. So first we need to find out balance of revaluation surplus. You can see what was the balance of revaluation surplus initially, 2.10. From this, can I say amount equal to additional depreciation will be transferred from revaluation surplus retained earning to, after that we need to find a balance of revaluation surplus. So how much has been transferred? 2.10. What is the remaining useful life? 3 into 2. This has been transferred retained earning. So what is the amount left? Amount left is 0.70. So this is the balance of revaluation surplus. So out of 0.91, this much amount will be debited. This much amount will be debited to OCI as revaluation surplus, and balance 0.21 will be debited to PL. Impairment loss debited to PL will be 0.21. Impairment loss debited to OCI in revaluation surplus will be 0.70. Have you understood this point? Have you understood this question? This can be one popular question. Have you understood this? Follow. Everyone respond with me. Have you understood this particular question number 1? Yes, sir. Coming to question number 2. Question number 2. ABC Limited has 3 CGU. ABC, the carrying amount of which as on 31st March 2001 is as follows. They have given 3 CGU, A, B, C, and their remaining useful life they have given. Whenever remaining useful life is given now, it means the allocation ratio is relative ratio, and the relative ratio is carrying amount multiplied by useful life. Whenever useful life is given, it is an indication that ratio of allocation of goodwill or corporate asset, whatever is given, if the ratio is not specified, then it will be based on this ratio. This ratio is what? 5,000. This become 5,000, become 50,000. This become 22,000. The ratio will become 5:15:22. Understood? ABC Limited also has 2 corporate assets, X, Y. Remark: the carrying amount of X can be allocated on reasonable basis. They have given it can be allocated on reasonable basis, but ratio of allocation not given. The ratio of allocation will be what? It will be what we have done. It is 5:15:. Plus 5,000, 750, how much? 15,000, and this is 22,000. Ratio will be 5:15:22. So this will be allocated in the ratio of 5:15:22. And why it cannot be allocated? It means we need to perform impairment testing in 2 stages, first stage and second stage. Chalega? Recoverable amount is given for A, B, C, and you can see they have given for ABC Limited as total. So that is larger CGU. That is larger CGU. Calculate impairment loss if any. Ignore decimal. No decimal. करते. So carrying amount of CGU given. Carrying amount of CGU is given. You can see they have also done useful life. Correct. And they have done on some other basis. But you can see the ratio of allocation is this only. They have calculated in percentage. And percentage they have done rounding off. So just try, when you do percentage rounding off, the accurate answer will not come. Means they have calculated percentage of allocation. But just try to understand, when you do percentage rounding off, means it should be 500 divided by 4,200. Correct now. Means it is coming 11.90%. So when you have done rounding off in percentage, then that will not give accurate answer. Now they have given ignore any decimal. When they say ignore decimal, so we ignore decimal in amount, not in percentage. Percentage rounding off नहीं करते हैं. I don't understand why they have done rounding off in percentage. Percentage rounding off हम कभी करते नहीं है, amount rounding off करते हैं. I hope you are understanding. But चलो, if you want to follow ICA solution, let us do as per ICA only. So can you say this become the percentage of allocation? Percentage of allocation. Correct now. So you can see this carrying amount 600 will be allocated based on this percentage. 600 into 12% कितना है देखो, 600 into 12% is coming 72. Then it will come 36%. Then it will come 52%. Now we'll find out carrying amount of CGU. This plus this, this plus this, this plus this. This become carrying amount after allocation. Compare with recoverable amount. Recoverable amount is given. Recoverable amount is given. Now, if recoverable amount is less than carrying amount, that become impairment loss. You can see impairment loss is coming this, and this will be nil. This will be allocated to CGU and carrying corporate asset in the ratio of their carrying amount. So this 66 will be allocated in this ratio. This ratio means what? This ratio 750 and 216, and this 12 will be allocated. In which ratio 12 will be allocated? The ratio of their carrying amount, the 1100 and 312. Allocation has been done. So you can see they have also done allocation on that basis only. So this 66 has been allocated. This 12 has been allocated in this way. After allocation, we'll find out revised carrying amount. So now we'll do second stage impairment testing. Second stage impairment testing में देखो step number 2, second stage impairment testing. A, B, C, X and Y. We have taken total asset of largest CGU become ABC Limited. So this was the carrying amount before impairment loss. Then we have done minus impairment loss. The impairment loss of X is 15. Impairment loss of X is 15 plus 3, it is 18. So you can see X से minus के 18. Impairment loss of CGU A was nil. CGU B was 15. 151 minus किया. CGU C was 9. So CGU से 9 minus किया. This become revised carrying amount after first stage impairment testing. So this become total revised carrying amount including corporate asset Y, which was unallocated in the first stage. From this minus recoverable amount given in the question, and you can see there is no further impairment loss. There is no further impairment loss. Suppose there is impairment loss, that impairment loss will be allocated only to Y because there is no goodwill. If there is a goodwill, the first goodwill, then to Y. Understood? Have you understood this particular question? Hello. Same type of question have been asked 3 times in exam. Similar type of question. So this is also good question, can be asked. Well, have you understood this particular point? Yes, sir. Let us do one more question. This is also good question, till now not asked, can be asked in exam. Now, there is one concept that, just try to carrying amount of CGU will include all the asset. Even though asset is outside the scope of this chapter, the carrying amount of CGU will include inventory, even though inventory is outside the scope of this chapter. But the question is that whether carrying amount of CGU will include liability. Whether it will include liability. Include liability means whether we deduct liability. Well, no. We should not deduct any liability from the carrying amount of CGU unless it can be deducted. The liability has been considered for calculation of recoverable amount. If recoverable amount has been calculated by taking into consideration of that liability, then for carrying amount of CGU, that liability will be deducted. Otherwise, we'll never deduct liability from the carrying amount of CGU. Understood the question? Now, on that particular basis, there is one question. Company operate a mine in a country where legislation requires that owner must restore the site on completion of its mining operation. Therefore, now they have given that they have calculated a provision for restoration, etc. And the carrying amount of provision for restoration cost equal to the present value of restoration cost is 500, and that is included in the cost price of mine. They have given the basic calculation as per IND AS 16 and as per IND AS 37. Now, entity is testing the mine for impairment. The CG for the mine is the mine as a whole. But the mine itself is one CGU. Mine itself is one CGU. The entity has received various offers to buy the mine at a price of around 800. So this becomes fair value. This price reflects that buyer will assume the obligation to restore the overburden. Means, just try to understand what they are saying. If you sell the coal mine, so that obligation to restore will be also transferred. So obligation, that liability will be also transferred, means the fair value of coal mine has been calculated by considering the obligation to restore. It means, can I say this fair value has been calculated by taking into consideration that obligation to restore. Therefore, carrying amount of CGU, from that will deduct what? Carrying amount of provision. Understood this point? I hope you have understood. The disposal cost for the mine is negligible. The disposal cost is nil. Therefore, fair value less cost of disposal become 800. The value in use of the mine is approximately 1200, excluding restoration cost. So can you say they have not considered restoration cost? So we should consider the value in use will be 1200 minus 500 to present value of disposal cost. Present value of that restoration cost will be also deducted to 1200 minus 500. So value in use is equal to 700. Whichever is higher, so recoverable amount is 800. Now carrying amount of mine is 1000, but from this 1000 we should deduct what? From this 1000 we should deduct what? But we should deduct the provision of 500. Therefore carrying amount will become 500, and because recoverable amount is more than carrying amount, therefore there is no impairment loss. There is no impairment loss. Understood this point? Question number 3, have you understood? Yes sir. Got this point? Any doubt? No doubt. Question number 3. Come to question number 4. Question number 4 is a good question. On 1st April 2001, Venice Limited acquired 100% of Saturn Limited for rupees 4 lakh. The fair value of net identifiable asset is 3,20,000. The goodwill was 80,000. So of course, this minus this will be goodwill only. On 31st March 2003, the government has cancelled the license. So this is the indicator of impairment. Then they have given that full life of the asset 20 years with no residual value. Then they have given that value in use estimated by the management for that CGU 2,12,000. Then they have given on 31st March 2005, means the indicator impairment was on 31st March 2003. 31st March 2003. Then what they have given, suppose by 31st March 2005, the government reinstate the license of Saturn Limited. They have given once again the license, so this become indicator of reversal. The management expect that favorable change in the net cash flow. This become the indicator that impairment loss might be reversed. The recoverable amount of now Saturn Limited is re-estimated. The value in use is 3,04,000 and the fair value less cost of disposal is 2,90,000. So we'll take higher one. This will become 3,04,000. It is a question of what? It is a question of first impairment then reversal. So first we'll do impairment. But we have a CGU. In CGU we have other asset plus goodwill. Other asset plus goodwill. So initial cost was 80,000. This was 3,20,000. This become 4 lakh. First we'll calculate depreciation on other asset based on useful life 20 year from 1st April 2001 to 31st March 2003. For 2 years you can see what we have done. 3,20,000 divide by 20 into 2, that is coming 32,000. So this become carrying amount as on the date of impairment testing. Goodwill will not be amortized. Goodwill cannot be amortized. Understood? Now we'll compare with the total recoverable amount. Recoverable amount is given. How much given? The recoverable amount has been given. How much given it was? 2,12,000 is the recoverable amount. Correct? What is? So can you say we'll do minus 2,12,000? 2,12,000. So what is the total impairment loss? So it is 368 minus 212. 1,56,000 is impairment loss. This become total impairment loss. This impairment loss will first allocate to goodwill to the extent of their carrying amount, and balance will be allocated to other asset. The balance is 76,000 will be allocated to other asset. Therefore, revised carrying amount after this will be nil. This will be nil. This will become 2,12,000, and the revised carrying amount of the total asset will become 2 lakh. This become the first step. Now will come as on 31st March 2005 on the date of reversal. So now can say once goodwill is impaired, reversal of impairment loss of goodwill is not allowed. Impairment loss of goodwill cannot be reversed as per IND AS 36. Correct? So we'll ignore goodwill column because that is totally impaired. So now goodwill is not required. So you can see what we have. 2,12,000. Understood? So I will just do it. So what we'll do as on 31st March 2000, can say the reversal will be lower of A and B. A is what? Recoverable amount. How much recoverable amount? Recoverable amount is given 3,04,000. 3 lakh. B carrying amount. Carrying amount will be what? Is 2,12,000. Then minus depreciation for 2 years. Depreciation of 2 years. That will be 2,12,000 minus divide by what is the remaining useful life. So 20 was the useful life. That 2 year gone. So divide by 18 into 2 again you will do. 2,12,000 divided by 18 into 2. That is coming how much? That is 23,555. 23,555. So minus 2,12,000. How much it is coming? It is coming 1,88,445. Correct. What is the lower? What is the difference? Recoverable amount minus carrying amount. Recoverable amount minus carrying amount. What is the amount? 3,04,000 minus 1,88,445. That is coming 1,15,550. This is the first amount. A. B will be what? Carrying amount as if no impairment loss was ever charged. What was the initial cost? Initial cost was 3,20,000. Or we can say what is the carrying amount immediately before impairment loss. From there also we can start. So what was the carrying amount immediately before impairment loss? Immediately before impairment loss, it was 2,88,000. We'll start with 2,88,000. 2,88,000 minus depreciation for the next 2 years. That will be 2,88,000 divided by 18 into 2. So 2,88,000 divided by 18. That is coming 32,000. So 2,88,000 minus 32,000. How much it is coming? 2,50,000. So this become carrying amount as if no impairment loss was ever charged. From this will minus carrying amount, present carrying amount. Present carrying amount already we calculated 1,88,445. So what is the B? B will be difference of these two. So 2,56,000 minus 1,88,445. That is coming 67,555. Correct. The lower of these two will be lower of this. Therefore, reversal amount will be 67,555. This will be the amount to be reversed. This will be the amount to be reversed, and this will be added to the other asset after reversal. Understood? Have you understood this particular point? Cool. Everyone understood this reversal wala point? Reversal will be lower of these two. You need to remember recoverable amount minus carrying amount. This will be point number A. Point number B will be carrying amount as if no impairment loss was ever charged. How to calculate? Ignoring impairment loss, you should charge depreciation as if there was no impairment loss. So this will be the carrying amount as if no impairment loss was ever charged minus carrying amount. This will be the second point. So A and B which are lower, this will be the lower amount. This will be the amount of reversal. Amount of reversal, have you understood? This type of question can be asked in exam. Normally I have seen that from IND AS statistics actually they are not asking any question. Why they are not asking any question means they have asked only times, not always. Correct now? Not always. But they can ask. Yes sir. Also you have understood. Okay sir. One more question let us take. Question 5. First come to this question. Question 7. First come to question number 7. Now this question is based on estimated estimation of value in use. Is we need to estimate cash flow, and from estimated cash flow we need to find out value in use. Correct now. So that estimation will be based on the information given in the question. Let us do. I will revise that point from this particular question. Is limited own a machine used in the manufacture of a steering wheel which are sold directly to the major car manufacturer. So they use machine to manufacture steering wheel. The steering wheel is a inventory. The machine was purchased on 1st April 2001 at a cost of 5 lakh to a vendor financing arrangement on which interest is being charged at a rate of 10% per annum. So every year you need to pay interest expense. Correct. So what IND AS 36 says that the cash flow will be calculated without including any cash flow from financing activities. The future cash flow for the purpose of calculation of value in use will not include any cash flow arising from financing activities. So this interest payment will not be considered. During the year ended 31st March 2003, East Limited sold 10,000 steering wheel at a selling price of 190 per wheel. So this is the current year, 31st March 2003, year end is the current year. The most recent financial budget approved by the East management covering the period from 1st April 2003, 31st March 2008 means 5 years. You need to do forecasting for 5 years. Including that company expect to sell each steering wheel for 200 during the first year and the price rising in the later year in the line with the forecast inflation of 3% per annum. Every year this selling price will increase by 3%. During the year ended 31st March 2004, East Limited expect to sell 10,000 steering wheel. The number of forecasts will increase by 5% each year until 31st March 2008. So 10,000 will be the first year, then it will increase by 5%. The number of unit to be sold. East estimated each steering wheel cost rupees 160 manufacture, which include 110 variable cost, 30 share of fixed overhead, and 20 transportation cost. The total cost is 160. The costs are expected to rise by 1% during 2004-5 and then by 2% per annum until 31st March 2008. But the first year it will increase by 1%, then it will be increased by 2%. Okay, sir. During 5-6, the machine will be subject to regular maintenance cost. So regular maintenance cost will be part of cash flow, future cash flow. In 2003-4, East Limited expect to invest in new technology, the capital expenditure. So what IND AS 36 says that future cash flow will not include any cash flow arising from future capital expenditure. So this particular point is actually not at all relevant to any future cash flow arising from future capital expenditure is not to be considered, correct. East is depreciating the machine straight line method over the machine 10-year estimated useful life. The current estimate based on similar assets that have reached the end of useful life of the disposal proceed from selling the machine is 80,000 net of disposal cost. Of course, disposal value will be taken into consideration. Is expect to dispose of machine at the end of useful life means as on 31st March 2008. East has determined the pre-tax discount rate is 8%. Of course, as per IND AS 36, will tax discount rate which reflect the market assessment of time value of money and the risk associated with this asset. Assume tax rate. Now the cash flow whatever we are calculating for value in use should be before tax. Therefore, this tax rate is not at all important. What is the value in use of the machine in accordance with IND AS 36? I hope you have understood the question. Correct. Now in this, first we'll find out the quantity. This will find out cash inflow minus cash outflow. That will be total cash flow. Then multiply by discount factor. That will be value in use. Correct. So first we'll find out that quantity to be sold. So 10,000 they have given first year. It will be increased by 5% every year. So increase by 5%, 5%, 5%, 5%. Then the selling price for the first year they have given 200 and that will increase by 3% every year. So plus 3%, plus 3%, plus 3%, plus 3% it has been given. Plus 3%. You can see 203%. That you can calculate. Now this multiply by this. This multiply by this. Then you will get estimated cash inflow. Estimated cash inflow. Now there is one disposal value at the end of useful life that will be also added. This is disposal value. So this become total cash inflow to be obtained from the use of the asset. Now we'll do minus cash outflow which we incur to generate this cash inflow that we deducted. So can you see we'll find out the total cost. First find the cost price per unit. To cost price per unit is given 160. Correct. First year it will increase by 1%. It will be increased by 1% and then increase by 2%. Then increase by 2%, 2% and 2%. Understood? Have you understood this? This you can calculate. Correct. Now this will be multiplied by quantity given above, and this will be the estimated cash outflow. Estimated cash outflow. Then there is one regular maintenance cost during 2005-6. Regular maintenance cost will come. This will become, this two will be the total cash outflow. So total cash inflow minus total cash outflow will be net cash flow. Then multiplied by discounting factor. Discounting factor is given 8%. Discounting factor you can calculate. Discounting factor you can calculate 8%. That is calculated. Then multiply by discounting factor. You can easily get what value in use. This become total present value. Total of present value. This will become value in use. Simple. Got this point? Please only be careful of 3 points. 3 points. First is what interest payment will not be considered. Then any capital expenditure information will not be considered. Capital expenditure information will not be considered. And then one more point. You can see what they have given. Cost are expected. Estimated cost is what 160, which include variable cost itna, fixed overhead cost itna. Now in the bachpan means when you have done CA inter costing, your teacher has says that fixed overhead will increase. Fixed overhead will increase. Fixed overhead will remain same irrespective of production. Now this they have given that cost are expected to rise by 1% and then by 2%. The question is that this 1% and 2% we should apply only on variable cost or we should apply on total cost. Because whenever we do projection, the projection is based on total cost. And just try to understand practically fixed overhead will also increase due to inflation. So this whatever expected increase is given, that is due to inflation. Because just try to understand if you are paying some rent, so rent will increase in the next year due to inflation. If you say that inflation is constant, then fixed overhead will remain same. So in costing subject, you take one assumption that inflation is constant, then your fixed overhead will remain same irrespective of production. So normally, practically, the fixed overhead will also increase. When they are saying costs are expected to rise, it means total costs are expected to rise by 1% and then by 2%. Understood this point? This point have you understood? Cool. Got this point? Have you understood this question? Cool. Simple? Yes, sir. This also done. Come to question number 8. What they have given? I have doubt about this fixed overhead. Now clear now. For that reason I have came here. In exam you will do that mistake. This question will come. Come to question 31. EQL Limited is a company which has performed well in the past, but one of its major assets, an item or equipment, suffered a significant and unexpected deterioration in the performance. Management expect to use the machine for further 4 years after 31st March 2006, but at a reduced level. The equipment will be scrapped after 4 years. The financial accountant of PQL Limited has produced a set of cash flow projection for the equipment for the next 4 years. So they have given some cash flow information. You can see this is the cash flow information. The above cash flow information should be assumed to occur on the last day of each financial year. The pre-tax discount rate is 9%. The machine could have been sold at rupees 6 lakh. This is fair value, and related selling expense is 96,000. So this is fair value less cost of disposal. The machine had been revalued previously, and as on 31st March 2006, an amount of 36,000 was held in revaluation surplus in respect of the asset. The carrying value was 6,60,000. So we have a revaluation surplus also. The Indian government has indicated that it may compensate the company for any loss in the value of asset up to its recoverable amount. Indian government has indicated that it may compensate the company for any loss. Calculate the impairment loss, if any. Revise depreciation of the asset. Also suggest how the impairment loss, if any, would be set off and how compensation from the government be accounted for. Good question till now not asked. Can I say first, we can easily calculate it value in use. Means we can find out the present value of these by using the discount rate. Discount rate is 9%. Simple. Then fair value less cost of disposal will be 6 lakh minus 96,000. So this become value in use. This become fair value less cost of disposal. Will take higher. Higher will be recoverable amount. What is the carrying amount given? 6 lakh 60. That is given in the question only. Correct now. Minus these. So this will become impairment loss. Impairment loss. Now impairment loss will be first adjusted with the revaluation surplus to the extent available. So how much impairment loss revaluation surplus there? 36,000. So 36,000, out of this 36,000 will be adjusted in OCI revaluation surplus, and balance is what? 71,770 minus 36,000 is equal to what? 35,770 will be debited to PL. So this become revised carrying amount. This so you can understand. Now the revised depreciation for the next year. So the remaining is full life is 4 year. So on this will charge depreciation. So revised depreciation with this by 4. This will be per annum depreciation. This you can calculate right now. Setup of impairment loss already I have explained. Now treatment of government compensation. What IND AS 16 says, not IND AS 36. If you have received any compensation for any asset which have been impaired, so the compensation will be transferred to PL when the compensation will be received. Means when there is a virtual certainty that it will be received. Correct now. Means it is receivable. Correct now. Any compensation by government would be accounted for as such when it become receivable. When it become receivable means when it is virtually certain. At this time the government has only stated that it may reimburse the company, and therefore credit should not be taken for any potential government receipt. Abhi right now it will not be transferred as an income to PL account. So right now it is not virtually certain. It is only stated that we can compensate you, but now survey will be there, etc. will be there. Then some certainty will come. After that you can recognize it as an income. But this point, have you understood this particular point? Good question till now not asked. You have understood? Come to these questions. Question number 6. Come to question number 6. One of the senior engineer at XYZ has been working on a process to improve the manufacturing efficiency and consequently reduce manufacturing cost. This is a major project and has the full support of XYZ board of directors. The senior engineer believes that cost reduction will exceed the project cost within 24 months of their implementation. Correct? The senior engineer believes that cost reduction will exceed project cost. Regulatory testing and health and safety approval was obtained on 1st June 2005. This removed uncertainties concerning the project was finally completed on 20 April 2000. This is all a bakwas. Cost of rupees 18 lakh incurred during the year till 31st March 2006 have been recognized as an intangible asset. 18 lakh has been recognized as an intangible asset. An offer of rupees 7 lakh 80,000 for the new developed technology has been received by the potential buyer, but it has been rejected by XYZ. Correct? Offer has been received for 7 lakh 80,000. Utkarsh believe that project will be a major success and has a potential to save the company 12 lakh in perpetuity. So it means this become value in use. The directors of research of XYZ, Neha, who is a qualified electronic engineer, is concerned about a long-term prospect of the new process, and she is of the opinion the competitor would have developed a new technology at some time which is required to replace the new process within 4 years. We estimate that present value of future cost saving is 9,60,000 over the period. Now they have said that present value of future cost saving will be 9,60,000. After that, he takes that there is no certainty about his future. What will be the appropriate accounting treatment of the aforesaid issue? We just try to understand. First, though, they have developed one intangible asset. Understood? So what they have said? The regulatory testing and health and safety approval was obtained on 1st June 2005. This removed uncertainties concerning the project, which was finally completed on 20th April 2006, and the cost of 18 lakh was incurred during the year 31st March 2006. Have been recognized as an intangible asset. Have been recognized as an intangible asset. So of course, can I say, as per IND AS 38, any expenditure during development phase will be capitalized. The some condition is satisfied. They have said that yes, there is an intention to complete the asset. Finance is also available. Cost can be measured reliably. Benefit are expected to exceed. Therefore, amount of rupees, amount of rupees, amount of rupees. One more point I have not read. 1 minute. Six. What they have given, cost of rupees 18 lakh incurred during the year till 31st March 2006 has been recognized as an intangible asset. As an intangible asset. Correct. Now, when the approval was obtained, on 1st June 2005, on 1st June 2005, correct? This is what I am saying. So it means April May the approval was not obtained. It means we can only capitalize to the extent of 10 months if we assume that this was evenly incurred throughout the year. 18 lakh was incurred on 12 months, but any expenditure which has been incurred before the recognition criteria is satisfied cannot be recognized as an intangible asset. Therefore, they have done what? Amount of 15 lakh means 18 lakh into 10 by 12 should be capitalized in the balance sheet. Correct? Representing expenditure since 1st June 2005. This expenditure incurred prior to 1st June 2005, 3 lakh should be charged to expense. So this will be charged to an expense. Understood this particular point? So it means what is the carrying amount? 15 lakh. Now you need to find out impairment loss. You need to find out impairment loss. So what is the recoverable amount that we need to find out? So carrying amount is 15 lakh. Carrying amount is 15 lakh. Recoverable amount will be what they have given. The cost saving analysis 9 lakh 6,000. This is nothing but value news, which is higher than fair value less cost of disposal. Correct now. So 9 lakh 60,000 is what? Recoverable amount. So 9 lakh 60,000 become recoverable amount. So this become impairment loss. This become impairment loss, which is not yet charged. So we need to pass two rectification entry. First, so what we'll do? We'll do what? What we'll do? We'll do expenditure is expense which will be charged to PL is 3 lakh. Correct. And then impairment loss of 5 lakh 40,000 to intangible asset 8 lakh 40,000. This rectification journal entry we need to pass. Have you understood? This question is also good question. Till now not asked. Have you understood this particular point? Once again, what they want to say? They have said entire year total expenditure was 8 lakh, 18 lakh. They have capitalized 18 lakh as an intangible asset. But recognition criteria was made on 1st June. 1st June. 1st June. So this 2 months we can't do any capitalization. Capitalization will be only for 10 months. If we assume that this was incurred evenly throughout the year, so it means we can do only capitalization of 15 lakh, 18 lakh into what? 10 by 12, and 3 lakh should be charged to profit and loss account. Then this become carrying amount. Carrying amount become 15 lakh. The recoverable amount is given 9 lakh 60,000. It means there is an impairment loss of what? Impairment loss of 5 lakh 40,000. It means they have not This was not adjusted with PL. This is also not transferred to PL. So we need to pass one adjustment entry. The adjustment entry will be what? This expense account debit. You can see development expense account debit, correct? And impairment loss account debit to intangible asset. This journal entry you should pass. Got this point? This question is also good question. I'm not saying expected question, but this is thoda sa atpata question. Whenever this type of question na, you should do it just before exam. If suppose similar question come, you should be able to do it. This also done, correct? So you can see I have almost done all the question. Now there are 3 questions left which are based on NCI calculation. NCI calculation means the partial goodwill and full goodwill. That 3 question I am not taking right now. I will take thoda sa break because I am tired now. I am tired. You also take a break. So 3 questions are left in this. 3 questions are left in this. Okay, sir. I will take 15-minute break. 15-minute break. You also take 15-minute break. Then after 15 minutes, you will do what? Some break. 50 minutes. After 50 minutes, I will take the pending question of IND AS 36 and I will take AS 10. IND AS 10. Done. Then today's job will be over. Okay, sir? Yes, sir. Chalo. Can we start once again, everyone? Before break, I was taking some question of IND AS 36. Let me take some question related to NCI measurement. Correct now. Come to question number 9. This can be one of the expected question. Everyone, come to question number 9. A Limited acquired 80%. What is given? A Limited acquired 80% shares of subsidiary B Limited 3000 for 3200. At the date of acquisition, B Limited INA is rupees 3000. At the date of acquisition, the B Limited INA was 3000. So, of course, the goodwill it is 3000. Fair value of INA. A Limited elect to measure NCI proportionate share of net asset. So, NCI will measure by using Pasina method. There are two methods for valuation of NCI. One is fair value method. One is proportionate share in INA method. Whenever we use proportionate share in INA method, to we calculate partial goodwill. They have already calculated it. You can see 3200 for 80%. Then 20% of NCI will be taken. So 20% of 3000, 20% they have done. That is 600. This become total piece. From that they have deducted INA. So this become goodwill. This become partial goodwill. Now they have given at the end of next financial year the carrying amount of INA was 2700. Excluding goodwill, recoverable amount they have given two. Case 1 is this. Case number 2 is. So case number 1, when the recoverable amount is 2000, so how to calculate impairment loss? You can see goodwill is 800, other asset is 2700, total become 3500. Now just try to understand what IND AS 36 says, that because recoverable amount has been calculated by considering full goodwill, therefore for impairment testing a notional amount of will be added in the goodwill to make it full goodwill. Correct now. It means we'll increase the goodwill by unrecognized NCI share. That is notional amount. 800 is 80%. So how much 20%? That will be 200. So it become now full goodwill. This become 2700. So this become the total carrying amount of CG, including full goodwill. Now compare with the recoverable amount. This become total impairment loss. Impairment loss will be first allocated to the extent. First allocated. This will be first allocated to what? Goodwill. The extent of entire carrying amount, and balance will be allocated. 700 will be allocated to other asset. Correct now. Basically, this presentation you will not be able to understand. You can see out of this 1700, how much will be allocated to goodwill? 1000. And how much will be allocated to other assets? 700. But out of this 1000, 20% belong to NCI, 80% belong to parent company. Correct now. So this 20% which was not recognized, not be recognized as an impairment loss. So you cannot decrease whatever has not been recognized. So out of this 1000, only 80% will be considered. This become 80% impairment loss allocated to goodwill, and 700 will be allocated to other asset. This become the impairment loss. Now out of this impairment loss, how much will be attributable to parent company? Entire amount will be attributable to parent company. But out of this 700, 80% will be attributable to parent company and 20% will be attributable to NCI. This point have you understood? Follow. Have you understood this calculation? The second one is more interesting. When the recoverable amount is 2800. I will just inform you how to calculate this. In second case, same information, goodwill is given, other asset is given, this become total. They have given what? 800. They have given this carrying amount of other asset is 2700. So this become 3500. Will increase goodwill. It will become full goodwill. And it will become 1700. Now we'll compare with the recoverable amount. Now recoverable amount has given 2800. What is the total impairment loss? 3700 minus 1800. That is how much? 900. This 900 will be entirely first allocated goodwill. Means nothing will be allocated to other asset. Understood? Correct? Are you able to understand? So this become the impairment loss which has been allocated. This become impairment loss which has been allocated to goodwill. But out of this, there is a 20% belong to what NCI that cannot be recognized. So 20% is how much? 180 is how much can be recognized as an impairment loss. That is 800. Sorry, 900 minus 120. That is 720. 900 minus 180. 720 will be recognized as an impairment loss on goodwill, which will be attributable to parent company only. Which will be attributable to parent company. Have you understood this calculation? Correct. So first you need to do calculation as you have done previously by assuming that goodwill is full goodwill. Means you will add this. Then calculate impairment loss, which will be first allocated goodwill. Out of that, you can only recognize 80% share. So 20% which is related to NCI that belong to NCI share that cannot be recognized as impairment loss. So out of 900, only 80% will be charged to but will be recognized as an impairment loss, and that impairment loss will be entirely attributable to parent company. Understood this point? This is one of the question which is not yet asked in exam, can be asked in exam. I'll take one more good question from this. Come to this question. It's also expected in exam. Question 5. Question 36 of my question bank. On 31st March 2001, Vision Limited acquired 80% of equity shares of Mission Limited for 190 million. The fair value of net asset of Mission Limited. The fair value of net asset of Mission Limited were included in the consolidated statement of financial position of Vision Limited at 31st March 2001 were 200 million. Correct? Vision Limited acquired 80% of equity shares of Mission Limited for 190. Fair value of net asset is given 200 million. It is a group policy to value NCI interest in subsidiary on the date of acquisition at proportionate share of fair value of subsidiaries identifiable net asset. So what will be goodwill? 190 for 80%. 20% NCI will be 200 into 20%. That is 40. This become 30 minus 200. 30 become goodwill. This become the carrying amount of goodwill. On 31st March 2004, this is 31st March 2001. On 31st March 2004, Vision Limited carried out its annual review of goodwill on consolidation of Mission Limited and found evidence of impairment. No impairment had been evident when the review were carried on 31st March 2002 and 31st March 2003. 31st March 2002, 31st March 2003, there was no impairment loss. The review involved allocating the asset of Mission Limited into CGU and compute the value in use of each unit. The carrying value of individual units before any impairment adjustment are given below. You can see unit A means CGA, CGU, intangible asset, property, plant and equipment, current asset. This become total. And then they have given value in use. They have given recoverable amount. It was not possible to meaningfully allocate a goodwill on consolidation to individual CGU. Goodwill will belong to larger CGU. The first is impairment testing, then the second is impairment testing. The intangible asset of Mission Limited have no ascertainable market value, but all the current assets have a market value that is at least equal to the carrying value. Okay, this information is not relevant. The value in use of Mission Limited as a single CGU, they have given for larger CGU 350 million. Discuss and compute the accounting treatment of impairment goodwill as per India studies. First, we'll do first stage impairment testing. So first stage impairment testing, you can see they have given how they have given. Let's see. I will just do it. We'll do unit A, unit B, unit C. A, B. What is the total carrying amount? Total carrying amount will be 30. That is given 170, 190 and 100. is 170, 90 and 100. Goodwill cannot be allocated. Compare with the recoverable amount. Recoverable amount they have given value in use how much? It is 180, 66 and 104. 180, 6 and 104. So can you see impairment loss will come only in this 90 minus 66. How much it is coming? 24. 24. This is also nil. This will be allocated to intangible asset and property, plant and equipment in the ratio of their carrying amount. To allocate karo, the ratio of carrying amount, for this is 10 and 50. So in 1:5 ratio it will be allocated. We will do 24 divide by 6 to 1. So intangible asset will 4 and balance 20 will be allocated to PP. Correct? Understood? Now we'll find out. We'll do second stage impairment testing. Second stage impairment testing. This much you have understood? For the second stage impairment testing, what will be the total intangible asset? Total intangible asset will be 30 plus 10. That is 40. Intangible asset is 40 minus 4 is what? Impairment loss. We will do 40 minus 4 is equal to what? 36. And then property, plant and equipment will be how much? You can do CGU wise also. That is your choice. PP will be 80 plus 50 plus 60. 80 plus 50 plus 60. That is how much? 190. 190 minus impairment loss, that is 20. That will become 170. And current asset will be how much? Current asset will be how much? Batao. It will be 60 plus 30. It will be 60 plus 30 plus 40. That is how much? 130. 130 will be added. And then we'll add goodwill. Goodwill how much we have calculated? Goodwill was 30. But this was what? Partial goodwill. This was partial goodwill. 30 was partial goodwill. We'll add unrecognized share of NCI to the extent of 20%. 30 divided by 80 into 20 is equal to how much? 7.5 will be added. This will become 37.5. Total is coming how much? Batao. This 36 plus 170 plus 130 plus 37.5 equal to 343.5. 343.5. What is the recoverable amount given? Recoverable amount is given how much? Is 350. 350 is the recoverable amount, and therefore there is no impairment loss. There is no impairment loss, nil, and therefore it will not be allocated to any asset. Means there is impairment loss. First it will be allocated goodwill. The balance will be allocated to other asset which was unallocated. There is no other asset which was unallocated. Correct now? Got this point? I hope you have understood. That similar answer is given. You can see they have done this as what? Unit way. You also can do unit A, unit B, device carrying amount. You can see they have also added 37.5 become full goodwill. Understood? $36 plus 170 plus 30 plus 10, 40 plus 40. What mistake I have done, Ray? 36 plus 170 plus 130 plus 37. Oh, this is 373.5. Then compare with recoverable amount minus 350. This is 23.5. 23.5 point will be entirely allocated to goodwill. Entirely allocated goodwill. But out of this, how much can be recognized? Only 80% can be recognized. 80% is how much? 80% is how much? Into 80%, how much? That is 18.8. 18.8 will be recognized as the impairment loss that will be entirely attributable to parent company. Entirely attributable to parent company. Now understood? Correct? This is a good question, can be asked in exam. It's a good question which is not yet asked. This can be a 6 marks question which can be asked in exam. From my point to be, this is now due. Question number 5 will come in exam. Chalega? Definitely this will come. Now one question you do by your own. This question you do by your own. This question number 10 you do by your own. There are 2-3 questions more. I'm just highlighting. This question number 10 you can do by your own. You do it by your own. Correct? There are some more questions. I'm just saying that also you do. Here's 36. Come to my question bank. I'm just forming you some more question. On this question 13 you do by your own. 13. The question of cash flow in foreign currency can be asked in MCQs. Can be asked in MCQ. This 29 also you do by your own. Already asked in exam but can be repeated. 29 also do by your own. Also good question. I think balance question can do by your own. Okay. These 2 questions also do by your own. Chalega? Yes, sir. So with this we completed IND AS 36. Now let us come to IND AS 10. AS 105. IND AS 105, I think the reading part you can do by your own. My help is not required. IND AS 105 is non-current asset held for sale and discontinued operation. I think the chapter is very easy from examination point of view. Only there are few questions. Let us do it. Can we do the questions? You want me to read the content also? Follow. IND AS 105. Can we take some question? Yes, sir. Come to the question. First question. Normally, I have seen they ask this type of question. Question number 1. This is the favorite question of the institute. This particular chapter. Following is the extract of the consolidated financial statement. They have given the carrying amount of a disposal group as on 31st March 2001. The total amount is also given. On 15th September, entity A decided to sell the business. It noted that business meet the condition of disposal group classified as held for sale on that in accordance with IND AS 105. This is the date of classification. However, it does not meet the condition to be classified as discontinued operation in accordance with the standard. So this is not a discontinued operation. The disposal group is stated in the following amount immediately prior to reclassification as held for sale. So this carrying amount is not at all relevant. The carrying amount as on 15 September is relevant. 216 to become the carrying amount as on the date of classification. Entity A proposed to sell the disposal group at 19 lakh. The estimated cost to sale will be 70,000. So what is the fair value less cost of disposal? It will become 18 lakh 30,000. 1830. The cost consists of professional fee to pay to the external lawyer and accountant. Of course, this will be considered. Now, it means what is the total impairment loss? Total impairment loss is 216, so minus 1830. So this become 330. This 330 will be also first. I will explain DCO. Hello. This 330 will first allocated goodwill as we have done under IND AS 36. So this will be entirely allocated to goodwill to minus 200. This will become 0. Balance 130 will be allocated to all those non-current assets which are within the scope of IND AS 105. These other assets which are not within the scope of IND AS 105, that will not be impaired again. So can you say intangible asset will be covered? Financial asset major fair value will not be covered. EP will be covered. DTA will not be covered. Current asset will not be covered. Current liability will not be covered. Non-current liability will not be covered. The balance 130 will be allocated to intangible asset and PP in the ratio of their carrying amount. That you can do 930 plus 1020. How much is coming? 1950. So 130 into 930 divided by 1950. How much it is coming? 62. 930 minus 62 minus 130. Balance what? 60 minus 68. From PP you will do minus 60. चलेगा. So this will become the revised carrying amount after IND AS 105 measurement principle. चलेगा. Then what they have given? Next year, as on 31st March 2002, there has been no change to the plan. Sell the disposal group. Entity is still expect to sell it within 1 year of initial classification. Mr. X, an accountant of the entity, remeasure the falling asset. They have given the remeasurement of falling asset which are not within the scope of IND AS 105. The disposal group has not been trading well and its fair value less cost to sell has fallen to 50,000 required. You can see the first they have done. Simple. Same thing they have done. Now, second, 1 second will do it. Second, you can see they have given all this asset, revised carrying amount has been given. Correct? This is 410 plus 230 plus 400 plus 900 plus 250. In this, goodwill will be 0. Then as a PP will now not be depreciated. Intangible asset will now not be amortized. So their revised carrying amount will remain same only. 930 minus 62. That is how much? 868. We'll add 868 and PP it will be 1020 minus 8. How much it is? 952. We'll add 952. What is the total amount coming? Batao. 410 plus 30 plus 400 plus 900 plus 250 plus 868 plus 952. This is coming how much? 952. 410 plus 30 plus 400 plus 900 plus 50 plus 868 plus and 952 coming 4010. Can you give me the total? The total Hello. 410 plus 30 plus 400 minus 900 minus 50 plus 868 plus 952. How much it is coming? 1710. 17. Now what is the fair value less cost of disposal given? It is 1650. So what is the further impairment loss? Further impairment loss is equal to 60. Again allocated to PP an intangible asset in the ratio of their carrying amount. That you can do it. Very simple. This type of question is very simple. Only see the presentation. The presentation you need to present it very beautifully in exam. What is fine? In the second, as on 31st March 2002, what they have done? They have written the initial carrying amount. Then this is changes in the value to 31st March 2002. Any changes? This is changes in the other asset. If this is not required, but they have done. Then impairment was allocated. Then this become revised carrying amount at year end. Simple. Then one more question. PK Limited prepare the financial statement under IND AS for the quarter ended 30th June 2018. In the 3 month ended 30th June 2018, following event occurred. On 1st April 2018, the company had decided to sell one of its division as a going concern following a recent change in its geographical focus. They have decided to sell one of the division which represent a geographical area of operation. Correct. Now whenever, just try to understand what is the meaning of discontinued operation. Discontinued operation is a component of entity which has been either disposed of and has been classified as held for sale and which represent a separate operating segment. So can I say because they have decided to sell one of its geographical areas of operation, so it will become, will if it meet a definition, if it is classified as held for sale, it is considered as discontinued operation also. I will once again explain when I will do discontinued operation. The proposed sale would involve the buyer acquiring the non-monetary asset of the division, with the company collecting any outstanding trade receivable relating to division and settling any current liability. On 1st April 2018, the carrying amount of the asset of the division were as follow: purchase goodwill, PP, inventory. Total become how much? 30 lakh 30,000. चलेगा. From 1st April 2018, the company has started to actively market a division and has received number of serious inquiries. On 1st April 2018, the director estimated that they would receive 32 lakh from the sale of the division. 1st April 2018, the market condition has improved, and as on 1st August 2018, the company received and accepted a firm offer of purchase division of 33 lakh. Means what was the carrying amount? 3060. What is the fair value less cost of disposal? You can see on 1st April this was the estimated amount, so this become 32 lakh. So there is no impairment loss. There is no impairment loss as on the date of classification. The sale is expected to be completed on 30th September 2018, and 33 lakh can be assumed to be reasonable estimate of the value of division on 30th June 2018. 30th June 2018 it is the interim financial reporting date. On this date, we'll do subsequent recognition. During the period from 1st April to 30th June, inventory of division costing rupees 8 lakh were sold for rupees 12 lakh, and as on 30th June, the total cost of inventory was 9 lakh. Inventory's amount has been changed. So what will be now new carrying amount of the division? It will be goodwill will be 60. Property, plant and equipment will now not be depreciated. That will be 20 lakh, correct? And inventory will become 9 lakh. 9 lakh. So this will become 2960. What is the fair value less cost of disposal? That is 33 lakh. Once again, there is no impairment. There is no impairment loss on initial classification days as well as next reporting date. However, in your question, it is quite possible fair value less cost of disposal can be less than carrying amount. So there can be some impairment loss. That impairment loss will first allocate goodwill, and balance will be allocated to P in the ratio of their carrying amount. So there is only one PP, it will be allocated entirely to P. चलेगा? The company has approached you to suggest how the proposed sale will be reported in the interim financial statement for the quarter ended 30th June 2018. Now, as per disclosure requirement, what our IND AS 105 says that any non-current asset or disposal group which has been classified as held for sale will be presented separately from current and non-current item in the balance sheet. Therefore, that non-current asset or disposal group will be shown as a separate item after current asset in the balance sheet. Yes, sir. Second, because it is classified as held for sale and this represent as separate operating segment, therefore it will be also considered as discontinued operation. So if it is it will meet a definition of discontinued operation. What IND AS 105 says that any profit or loss from discontinued operation should be stated separately in statement of PL as a single amount. Separate disclosure should be given as a single amount. This profit or loss from DCO after tax. And as per the requirement of IND AS 33, the earning per share, both basic and diluted earning per share, should be calculated separately for discontinued operation. This information need to be given. If you read the para, you will be able to understand what to write in exam. Question can be asked in exam, till now not asked in exam. Then come to question number 3. S Limited purchase a property for rupees 6 lakh on 1st April 2001. The useful life of the property is 15 years. On 31st March 2003, S Limited classified the property as held for sale. The impairment testing provide an estimated recoverable amount of rupees 4,70,000. Can you say on the date of classification, if that is reporting date, first we need to perform impairment testing, then we should measurement as per IND AS 36, as per IND AS 105. The fair value less cost to sell on the same date is 4,60,000. Means recoverable amount is higher of value news and fair value less cost of disposal. So it is understood this value news and this is fair value less cost of disposal. On 31st March 2004, the management changes the plan as the property no longer meet the criteria as held for sale. Whenever there is change in plan, what IND AS 105 says that the non-current asset disposal group will be remeasured at an amount equal to lower of A and B. A will be the carrying amount as if the asset was never classified as held for sale. B will be recoverable amount. And the lower of these two amount will be the revised carrying amount on the date of change in plan. You need to find out value of means they have given the recoverable amount on the date of change in plan is 5 lakh. Value of property at the end of 2003 and 2004. First we'll find out value as on 31st March 2003. What was the purchase price? 6 lakh. Then we should charge 2-year depreciation. So 2-year accumulated depreciation will be 6 lakh. Divide by 15 into 2. That is coming how much? Lakh divided by 15 into 2. That is 80,000. So this become 5 lakh 20,000 become the carrying amount. Then we'll compare with the recoverable amount 4 lakh 70,000. You can see देखो 4 lakh 70,000 impairment loss 5 lakh 20,000 minus 4 lakh 70,000. The impairment loss is 50,000 as per IND AS 36. This become carrying amount. Now this carrying amount will be compared with the fair value less cost of disposal, that is 4 lakh 60,000. That become the 10,000 become impairment loss as per IND AS 105. So 10,000 will become impairment loss as per IND AS 105. The difference between these 10,000 will be impairment loss as per IND AS 105. This is impairment loss as per IND AS 36. This is impairment loss as per IND AS 105. Understood this? Have you understood this much? Much have you understood? Now, as on 31st March 2004, you need to find out first carrying amount as if no impairment, no, it was never classified as held for sale. We'll first find out carrying amount immediately before classification. Immediately before classification, the carrying amount was 4 lakh 70,000. On this 4 lakh 70,000, we'll charge depreciation of 1 year. So you can see 4 lakh 70,000 charge depreciation for the remaining 13 year. This will become the carrying amount as if it was never classified as held for sale. Then compare with the recoverable amount that is given 5 lakh. Lower will be the revised carrying amount. So revised carrying amount will be 4 lakh 33,846. Correct. What is the present carrying amount? Present carrying amount is 4 lakh 60,000. 4 lakh 60 will be now revised to this. So the difference will be adjusted to profit and loss account. Any difference, any adjustment to the carrying amount will be 4 lakh 60 minus 4 lakh 33 will be adjusted to profit and loss account. Understood? Have you understood this? What you asking? What are you asking? Aravindam, I have not understood your question. Why 2 lakh or 21 lakh? What do you are? 2 lakh impairment loss. For which question you asking? For which question you asking? That was where I no, one is impairment. Why 2 time impairment loss? No, just try to understand. Why 2 time impairment loss? First, to this is the 31st March, but the date of classification as held for sale. You need to find out first carrying amount. Carrying amount will be as per IND AS 16. IND AS 16 says is cost price as accumulated depreciation as accumulated impairment loss. So if can I say this will also become an indicator of impairment and they have given recoverable amount. So you need to first calculate impairment loss as per IND AS 36. Then find out impairment loss as per IND AS 105. First, you'll find out carrying amount as per IND AS 16. And IND AS 16 says calculate impairment loss as per IND AS 36. So first, find out carrying amount as per respective IND AS. But it's the first do impairment testing as per IND AS 36. Then classification will be done, and then find out impairment loss as per IND AS 105. Understood? Have you understood now? Aravindam, now your doubt is over. So always whenever you are doing classification as on reporting date, first you will perform impairment testing as on that date. If the classification has been done at any time during the year, then impairment testing you will not do, because impairment testing based on indicator is done only at year end. Impairment testing based on indicator is done at year end. Question you can see, the classification has been done at year end. First you will perform impairment testing at year end. Got this point? This also done. Now this is one newly inserted question, but before that, now I will just do DCO definition. Discontinued operation definition. Come to DCO definition. So non-current asset disposal group. What do you mean by disposal group? Disposal group is a group of assets and liability to be disposed of by way of sale. By way of sale together as a group in a single transaction. So when you disposed of any group of assets and liability together by way of only sale, together as a group sale, not individual sale, then that will become disposal group. Now, any non-current asset or disposal group will be classified as held for sale when the carrying amount is recovered principally through sale transaction. Now, what IND AS 105 says that when two conditions are satisfied, then it will be classified as held for sale. First condition, non-current asset or disposal group must be available for immediate sale in its present condition. Must be available for immediate sale in its present condition. If it is subject to some renovation, etc., then it cannot be classified as held for sale. Second, the sale must be highly probable. Highly probable means more than probable. More than probable. So they have given 5 sub conditions. If all these conditions are satisfied, then it will be considered sale is highly probable. For example, management must be committed for sale. Management has initiated an active program to find out potential buyer. Sale price is reasonable in relation to current fair value. The sale transaction is expected to be completed within 12 months from the date of classification, and management is not expected to change or withdraw the plan. Measurement principle we have understood. Now, due to this measurement principle, any loss will be considered as impairment loss, and that impairment loss will be always charged to profit and loss account. This impairment loss cannot be adjusted with revaluation surplus. You just try to understand impairment loss as per IND AS 36 for revalued asset can be adjusted with revaluation surplus. But impairment loss as per IND AS 105, correct now, cannot be adjusted with revaluation surplus, even though if there is some revaluation surplus available for that particular asset. This is very key point. You need to remember this point. Got this point? Correct. So this should be always recognized in PL and should not be adjusted with revaluation surplus. Once the asset is classified as held for sale, we stop charging depreciation and amortization. Depreciation and amortization will cease from the date of classification. Correct. Now, any impairment loss of a disposal group will first allocate a goodwill, and balance loss will be allocated to other non-current assets in the ratio which are within the scope of IND AS 105 in the ratio of their carrying amount. And also you have understood. Correct. The presentation you can see the non-current asset disposal group classified as held for sale as presented separately in the balance sheet after non-current asset and current asset. Got this point? Changes in plan, already I have said that whenever asset or disposal group is no longer classified as held for sale, then it will be valued at lower of the carrying amount had the asset not been classified as held for sale and its recoverable amount whichever is lower. Whichever is, and any adjustment to the carrying amount of the asset will be done through profit and loss account. Chalega? Then discontinued operation. So what do you mean by DCO? What they want to say, DCO is a component of the entity that either has been disposed of, is when I say disposed of, it can be disposed of by sale or by abandoned. Is any component which has been abandoned. Abandoned means any asset which has been used at the end of its economic life. Means if you have used any asset till the end of its economic life, then it cannot be sold. So it will be actually sold rather than sold. Correct now. That is known as abandoned, means discarded. Correct. So which has been disposed of either by way of sale or by way of abandonment, or is classified as held for sale. So any component which is a disposal group and classified as held for sale can be also DCO if that component represent as separate major line of business or geographical areas of operation. It is a simple word, it is a operating segment, or is a subsidiary acquired exclusively with a view to resale. If it is a subsidiary acquired with a view to resale, means this is nothing but from the point of view of consolidated finances. Simple word, DCO is a component of the entity which can be an operating segment, and if that operating segment has been disposed of, it will be DCO, or is classified as held for sale, it will be DCO. And if that component is a subsidiary acquired exclusively with a view to resale, is that basically this is in consolidated financial statement which have been disposed of, then it will be a DCO, and which is classified as held for sale, then also it will be a DCO. Understood? Correct? Have you understood? Means can I say in this way? Just try to understand. Disposal group. Disposal group. Disposal group can be operating segment. It is not a operating segment if it is classified as held for sale, then it is DCO. If it is not classified as held for sale, then it is not a DCO. It is not an operating segment if it is classified as held for sale, then it is not a DCO, because this is not an operating segment. If it is classified as held for sale, measurement principle will be applicable, but this is not a discontinued operation. Not classified as held for sale, then though it is not a DCO only. Have you understood this particular point? I hope you have understood this particular point. So just find out if there is a disposal group which is an operating segment and classified as held for sale, it will be a discontinued operation. So disposal group may meet the definition. Disposal group may be a DCO, may be a DCO, may be a discontinued operation. Correct? So in that question which we have done about purchase goodwill inventory, जो question कर रहे थे, in that question disposal group represent a separate geographical area which has been classified as held for sale. Therefore, it was classified as held for sale and also it was discontinued operation. Now, have you understood this particular point? Have you understood this particular point? Bolo. I think Tora to you have understood. Now, whenever it is a DCO, so IND AS 105 only has given disclosure requirement. So what IND AS 105 says that require presentation of a single amount in the statement of PL comprising the total of profit after tax of DCO and any gain or loss after tax recognized on the measurement to pay very less cost to sale or on disposal of asset of disposal group. This total gain or loss will be transferred to SOPL as a single amount, that will be presented. I think this much is this part. Balance you read by your own. I think you will be able to understand. I hope you have understood. Yes, sir. DCO is clear. DCO is clear. Now let us come to the last question. What they have given. This is also newly inserted question till now not asked. X Limited acquire B Limited exclusively with a view to sale. Is B Limited become a subsidiary acquired with a view to sale? Yes or no? And it meet the criteria to be classified as held, classified as DCO. It is given also. It meet the criteria to be classified as discontinued operation as per IND AS 105. So it is now discontinued operation. but the following information is available about B Limited. So one thing is clear that yes, it has been classified as held for sale. Then only it can be discontinued operation. Fair value of total asset excluding liability is 60. Cost to sell on acquisition on reporting date is 10. Fair value liability on acquisition and reporting date is 80. Is 360 minus 80. This becomes the fair value of disposal group. Correct? Minus 80. That is how much? 280. And 280 minus 10. This becomes fair value less cost of disposal on acquisition. And fair value of total asset excluding liability on reporting date is 340. 340 minus 80 is coming how much? 340 minus 80 equal to 260. What is the cost of disposal on acquisition reporting date? 10 only. Come 250. Now just try to understand. Now one doubt will come. When X Limited acquired B Limited, and B Limited is a subsidiary, B Limited is a acquiring company which is actually acquired with a view to resale. Initially, it will be classified as held for sale. To initial recognition will be done as per IND AS 105. Initial recognition will be done at fair value or fair value less cost of disposal, whichever lower. The fair value less cost of disposal will be lower only. So this, as per IND AS 103, normally it is the asset of the acquirer is recognized at fair value, but whenever it will meet the definition of classified as held for sale, initial recognition will be done at fair value less cost to sell. That is given. So initially it will be recognized at 270, and subsequent reporting date this will be recognized at 250. The difference of 20 will be transferred to PL. The difference of 20 will be transferred to PL. That is only given. Just read the question. You will be able to read the solution. You will be able to 20. In SOPL, X Limited recognize the loss on subsequent measurement of B Limited, which is equal to 20. Equal to 20. Just read the solution. Now you will be able to understand this. Inserted question till or not asked, can be asked in exam. Can be asked in exam. With this, we completed all the IND AS based, all the asset based IND AS. We have completed. Understood? Today this much only. Correct? Have you understood this much? Just inform me. Any more question if you have any in your mind about the chapters, whatever we have done, you can say I can do that. And I hope you have understood everything. If you have understood, if you have liked the classes, just leave a message in the comment box so that it will motivate me to take some more interesting classes, because motivation is required. Because this is because just try to understand, taking this type of classes require a lot of motivation. Because this, from my point of view, from this, if I see the trend, normally 10 marks you can expect. 10 marks. So today I have done for 10 marks. 10 marks is expected. Normally from asset based IND AS, you can see 8 to 10 marks to pakka aata. 8 to 10 marks. Understood? IND AS 37. Any more IND AS? IND AS 37 you have said? Or? Because IND AS 37 na is totally based on question. Just read the expected question. I will say that is my job is not required. IND AS 37, you read the question. Just read the content once and do all the expected question by your own. I will do that. It will wastage of time. So IND AS 37 is based on the case study. I don't know what type of question they will ask. IND AS 37, normally they may create a new question also. I will say whatever you know about IND AS 37, first read the content and do some expected question. You will be able to understand how to write. My job is so that is based on case study based question. Whether provisions will be recognized, what will be the amount of provision, that is also based on the information given in the question. Correct now? I think whatever we have done, that has been justified for this chapter. I think we have done 6 IND AS. 6 IND AS we have done, 7 IND AS we have done. IND AS 19 you have said. IND AS 19 I will take, but not now. I am totally tired. If possible, I'll come in the night. possible. Today I will update you 1 hour before in my YouTube channel and Telegram group. If possible, I will come today only for IND AS 19. और बताओ, IND AS 19 I have taken into consideration. और बताओ, any more? IND AS 12, IND AS 12 and 20. What is IND AS 22? IND AS 22 क्या होता है भाई? AS 22 we are seeing. IND AS 12 and 22 is what? Thank you Bharachandra. Thank you Arvindam. चलो ठीक है, I will take these two also into consideration. If possible, I'll come by night. I will inform you 1 hour before only. चलेगा? So I will come at 9:30 or 10:30 possible. 10:30. 10:30 possible I'll come. If from morning 6 I am taking the classes. 6 was my regular class. And from 11 I am totally tired now. After COVID-19 now we are not used to long hour classes. For COVID-19 they used to take long hour classes, but after COVID-19 once it was converted into recorded classes, we are not used of a long hour class. Chalo, thank you. I hope I have justified the revision. Tomorrow pakka we are meeting with lease and share based payment at 11. So be prepared for lease and share based payment chapter. That will be revised in such a way that it will be done with me only. Lease and share based payment, tomorrow we are meeting. Thank you very much. Bye bye. Love you all the best. And right now you need to focus on the remaining hours. Don't sleep. You are not supposed to sleep. Take some other chapter, revise it. ठीक है ना? So whatever chapters I am not doing, that you revise, or you can do any other subject also. Don't waste your time right now. Take 10-minute break and start your revision. Understood? Have you understood this point? Cool. Thank you very much. Bye bye. Love you all. Hello. Yes. Very, very good evening, everyone. First, let me know that is the voice is audible or not. It is clear or not. Audible? Okay, great. And I'm very happy that the first session, whatever we have taken, that was useful for you all. And I'm happy that I'm able to save your time as per revision is concerned. And this will only motivate me to take more and more session in the coming days. Okay. So really I'm happy. And if you are getting benefit out of this revision, then of course whatever I'm doing, it will be actually beneficial. It will be actually what will have some worth about this. Now coming to today's session, we'll take two IND AS, IND AS 19 and IND AS 12. Both these IND AS does not require revision of concept much. Correct. Now, if you have done previously the concept, then if you do only the expected question, it will help you, because can I say this is totally based on the question. India's 19 has few question. ICI will ask definitely question from that particular question only, means they will not create any new question from my point of view. Similarly, India's 12, from my point of view, they are not going to create any new question in India's 12 also. If you have done the content previously, don't waste your much time in the content, give more time in the question. I will say revise all the question whatever is given in ICI study matter here. Okay. Yes, sir. So coming to India's 19, can we start first? India's 19, are you all ready? And of course, don't forget to press the like button, because the more the like I am getting, it will also motivate me. So don't, if you are coming to listen this class, don't forget to place the like button, because your every like will bring a smile on our face. Okay. Now, of course, if you are new to this channel, don't forget to subscribe this channel. That is a common thing everyone says. Therefore, I am saying this point. Okay, correct. Now, normally I don't say this thing, but normally every person who is in YouTube normally say that subscribe my channel, subscribe my channel. So I am also saying subscribe my channel. Okay, but I know that if my student will always subscribe me, nothing to worry about that. Yes, sir. Chalo, can we start? Yes, sir. Let us come to question number 1. In this, actually, there are two type of topic from where question may come. One is short-term compensated absences. So till now, I think only one type of question, this question number 1, have been asked in exam. There are some new question have been introduced on that. That question can be asked in exam. And second, about the defined benefit obligation and plan asset. That type of question can be asked. There are these two. Normally, this type of two question normally they ask in exam. Let us come to question number 1. It has been asked in exam, I think, few times. Let us do it. It can be repeated. This question can be repeated. The Private Limited had a head count of around 1000 employee in the organization in 2010-11. As per the company policy, the employer given 35 days of privilege leave, 15 days of sick leave, and 10 days of casual leave. Out of a total PL and SL, 10 and 5 can be carried forward to the next year. So how much can be carried forward? 10 and 5 can be carried forward. On the basis of past trend, it has been noted that 200 employee will take 5 days PL and 2 days SL. Is the probability of availment is given. They can carry forward how much? 10 and 5, but out of that they can only avail how much? 200 employee can avail 5 days PL and 2 days SL. Similarly, 800 employee will avail only 10 PL and 5 sick leave. So can I say we need to create a provision based on the probability of availment. We can carry forward how much? 10, but we can only take how much? We can only avail how much leave? So 200 employee. So can I say for 200 employee, we should make a provision. Are you able to understand? We should make a provision for 5 days PL leave and 2 days sick leave. Means in the question only solution has been given. And for 800 employee, we should make provision for 10 days PL and 5 days SL. Correct. Now, because in this question they have not given salary per working day, so therefore you can't actually calculate the amount of provision. Let's read the answer. They have asked what is the treatment of short-term compensatory absence. You can see fiscal limited will recognize the liability in the books to the extent of 5 days of PL for 200 employee and 10 days of PL for remaining 800 employee. So you can see 5 days for 200 employee and 10 days for 800 employees. Similarly, for sick leave, 2 days sick leave for 200 employee and 5 days sick leave for remaining 800 employee in the books as an unused entitlement that has accumulated in 2010 and 11. First answer is very much simple. Okay. I have understood some problem. Now okay. Now it is okay. Now you can see. I think you have understood what I am saying. So what I have read the question that we should create a provision based on the probability of availment. Based on the probability of availment. So 200 employee can carry forward 5 days PL and 800 employee can carry forward 10 days PL. So we should make a provision for that much carry forward, that much leave which can be availed. Similarly, one employee can avail 2 days sick leave, and 800 employee can avail 5 days sick leave. So based on that, we should create provision. Understood this point? The first point, have you understood? Also, the company has been incurring profit since 2009. It had decided that in 2010-11 to distribute a profit to its employee at a rate of 4% during the year. However, due to the employee turnover in the organization, employee turnover means employee will leave the company. The expected payout of Cisca Private Limited is expected to be around 3.5%. The profit earned during 2010-11 is 2000 crore. So can you say we get a provision for bonus based on the expected rate? So of course the expected rate is 3.5%. So 3.5% of 2000 crores should be created as provision for bonus. So what they have done? Cisca Private Limited will recognize 3.5% of 2000 crore as a liability and expense in the books of account. The next point is Cisca Private Limited has a post-employment benefit plan also available, which is in the nature of defined contribution plan. It is this defined contribution plan where contribution to this fund amount to rupees 100 crore, which will fall due within 12 months from the end of accounting period. The company has paid 20 crore. Already they have paid how much? 20 crore. So can you see the expense will be 100 crore, out of which 20 crore has been paid, and the liability will be 80 crore. So they should recognize the liability of 80 crore which is not yet paid. So that will be payable. That will be only answer. You can see under IND AS 19 the amount of 80 crore may be recognized as a liability after deducting any contribution already paid. Correct? However, if the contribution already paid would have exceeded the contribution due for service before this is not required. Also 80 crore will be recognized as an expense. But from my point of view, liability should be 80 crore, but expense should be 100 crore. So whatever you have paid, that also become an expense. So from my point of view, the expense should be 100 crore and the liability should be 80 crore. Understood? Yes, sir. I hope you have understood this point. Question number 1 is clear. This question is already asked in exam, can be also again repeated in exam. Come to the next question about the short-term compensated absences. Let me come to that question. Come to question number 4. This is very, very important. Mr. Niranjan is working for Infotech Limited. Consider the following particulars. Annual salary they have given 30 lakh, 30 lakh. Number of working day during the year is 300 days, 300 days. So can a salary per working day will become 10,000 per day, per working day. So this become salary per working day. Leave allowed initially first year 10 days, leave taken 7 days, leave unutilized carry forward to next year. Those 3 days will be carry forward. 3 days will be carry forward. Now it is given that based on past experience, Infotech Limited assume that Mr. Niranjan will avail unutilized leave of 3 days. So out of these 3 days, they can utilize, means they can avail 3 days only. It means the provision should be based on availment, and we should create a provision of 3 days into 10,000, means 30,000 provision should be created in the first year. Understood? So first year how much provision will be created for carry forward of leave? That is 30,000. So can you say first year the EB expense will be 30 lakh and the provision will be how much? 30,000. The total EB expense will become 30 lakh 30,000 because the number of working day will be 300. Are you getting? 300 days. Understood? And they have extra work for how many days? Unutilized leave is what? 3 days. 303 days they are working. They have a total EB expense will be 30 lakh 30,000. So what journal entry they will pass? The journal entry will be what? EB expense will be what? 30 lakh 30,000. To bank account it has been assumed that 30 lakh has been paid. So 30 lakh has been paid, and they should create a provision for leave encashment, or you can add a provision for short-term compensated absences 30,000. Understood? Yes, sir. Now coming next year, what happened? Next year what happened? 10 days was leave allowed and carry forward is 3 days. That means total become 30 days. Out of 30 days, entire 30 days has been availed. Means can I say there is no unused leave. It means can I say will not create any new provision in the next year. Will not create any new provision in the next year. But can I say whatever provision created in the last year will be reversed. Whatever provision created in last year will be reversed, because in this particular days they have worked only for 300 minus 3 days minus 3 days, so 297 days they have worked. Therefore the actual EB expense should be based on 97 days, that is 29 lakh 70,000. So 30 lakh was EB expense and provision reverse will be 30,000. That will become what? 29 lakh 70,000. Understood? You can see the answer has been given that way only. the 29 lakh with 29 lakh 70,000 will become total EB expense. So what journal entry will do? EB expense 29 lakh 70,000, provision account debit 30,000, to bank payment will be as per the contract, that is 30 lakh. That is 30 lakh. I hope this point have you understood. Suppose in the same question, it has been given that out of these 3 days leave, it has been assumed that they will avail only 2 days. It is given that they will avail only 2 days. The probability of availment is not 3 days. Probability of availment is 2 days. Then we should create provision based on 2 days in the first year. Then your then your then your EB expense will be 30 lakh plus 20,000. That is 30 lakh 20,000. And in the next year, whatever provision created in last year will be reversed, irrespective of actual availment. To last the next year, what you will do? 30 lakh minus 20,000, that will be what? 29 lakh 80,000. If the question has given that instead of 3 days they will now avail 2 days. Understood? Have you understood this particular question? This question can be expected in exam. Have you understood? Question number 4, batao. Just say yes sir or no sir, everyone. Question number 2, have you understood? Yes sir, got it. This question may come, so similar question will come. We'll like to take one more question. It's also very interesting. Question of 5. SL Limited has 350 employee, same as a year ago. The average staff attrition rate observed during the tenure represents 6% per annum. Is out of 350 employee, how many employee will leave the company? 350 into 3%, 350 into 6%, sorry, percent. So 21 employee will leave the company. So can I say whatever employee will leave the company, new employee will join based on that replaced employee, meaning new employee will replace the old employee. It will be assumed in the question, even though nothing is given, that new employee will replace the old employee who have left the job. So can you say in the current year there will be 350 minus 21 old employee and 21 will be new employee. Understood? Yes sir. SL Limited provide the following benefit to all the employee: paid vacation 10 days per year regardless of the date of hiring. Regardless of date of hiring means if they have joined during the year also, the 10 days per year will be given as a paid vacation. Compensation for paid vacation is 100% of employee salary, and unused vacation can be carried forward for 1 year. As of 31st March 2001, unused vacation carry forward was 3 days per employee. Average salary was 15,000 per day, and accrued expense for unused vacation was 65 lakh. Means much provision was created in last year. So this is the opening provision for current year. This was the provision created in last year. So 65 lakh is the opening provision. Understood? During 2001-2002, employee took 9 days vacation in average. 9 days vacation they have taken in average. Salary increase was 10%. Salary increase was how much? 10%. How would SL Limited recognize the liability and expense for this benefit as on 31st March 2002? Pass the journal entry to show the accounting treatment. So just try to understand how many old employee are there. 350 minus 21 is 329 employee. You can see, you can do in this way. Let me explain. How much old employees are there? How much new employees are there? Old employees 329, new employees 21 employees. What is the leave granted? 10, correct. What is the brought forward leave? How many leave brought forward to, that is given. The unused vacation carry forward was 3 days. Carry forward is 3. That brought forward from previous year will be 3 days. But for this employee it will be nil. So it will become 13. It will become 10. Understood? Now they have said that in the current year they have utilized 9 days leave. 9 days leave is how much is left? Here 4. Here it is 1. Now the question is that this 9 leave will be adjusted first from brought forward leave, yeah, from current year entitlement. That will be based on the information given in the question. that will be based on the information given the question. It can be on FIFO basis, or it can be on LIFO basis. If question is silent, always do FIFO basis. FIFO basis means that first this 9 will be used from the brought forward, and balance will be used from what? Current year entitlement. Current year entitlement. Which can I say? This minus 3 done, and 9 means 9 minus 3 is 6. 6 will be used from this. So current this 4 is now will be carry forward to the next year, will be carry forward to the next year. Understood? Yes, sir. Similarly for this, so this 1 will be carry forward because the brought forward leave is what? 0. Now in this question, once again the probability of availment is not given. Ki out of this, how much will be availed in the next year? How much will be availed in the next year? If the probability of availment is not given, we'll always assume the probability of availment is 100%. 100%. Now we'll multiply with what? Average means salary per working day. It is given salary per working day for the current year is increased by 10%. So last year it was 15,000. So 15,000 increased by 10%. It will become how much? 16,500. So we'll do multiply by 16,500 multiplied by 16,500 and multiply by number of employee. This is 329 and this is 21. Understood? So how much it is coming? Batao. Is 329 multiplied by 16,500 multiplied by 4 is coming how much? 20 is how much? 2 crore 17 lakh 14,000, and this will be 21 into 16,500. This will be 3,46,500. Total become 2 crore 17 lakh 14,000 plus कर दो तो total will become 2 crore 20 lakh 1,500. Such provision will be created for current year, and last year provision will be reversed. Last year provision will be reversed. Means what journal entry will do for this? Will create one, will pass one journal entry for this amount. EB expense account debit to provision. EB expense account debit to provision, and last year provision means the opening balance of provision will be reversed. Will pass one more journal entry, provision account debit to EB expense. Provision account debit to EB expense. Understood? I have done some wrong calculation. Same correct calculation. Okay, you have given this amount. Chalega? Understood? Have you understood what I am saying? Now suppose in the same question it was given that it is LIFO. Suppose they have given LIFO, then your answer will change. Suppose they have given LIFO, so can is this 4 will be first adjusted with what? The current year entitlement. First adjusted with what? Means whatever 9, sorry not 4, this 9 leave whatever you have taken will be first adjusted with current year entitlement. So it will be minus 9 and 1 will be left, and this 3 whatever brought forward leave will be automatically left because it can be carried forward only for 1 year. Means this will be left. Is now on LIFO basis for old employee you will create provision for only 1 day, and for 21 employee of course you will create provision for 1 day. So of course your answer will change. So if the same question they have given LIFO basis, so your answer is going to change. So be careful about LIFO and FIFO. If question is silent, then use what? FIFO basis. But if the question has given information about LIFO, then be careful. Have you understood this particular point? Hello. Have you understood this particular LIFO? You have understood LIFO? बोलिए. You need to respond yes sir, no sir, yes sir, no sir बोलते रहो. Correct ना? Yes sir, no sir बोलते रहो, so that I will also feel that you are understanding whatever I am saying. Have you understood LIFO? Understood LIFO. Chalo. Now let us come to some question based on defined benefit plan. Defined benefit plan means defined benefit obligation and plan asset. I am assuming that in LIFO 3 days leave salary will be left. Yeah, in LIFO because this 9 will be first used from current year entitlement. So out of 10, 9 you have used. So 1 will be carried forward. But these 3 cannot be carried forward for more than 1 year. So these 3 will be automatically left. Therefore, you should create provision only for 1 day which can be carried forward to next year. Understood? If question, I have said if question is silent, use FIFO. In the given question, you can see the question was silent. Question has not given whether we are using FIFO basis or LIFO basis. So if the question is silent, use FIFO basis. But if the question has a LIFO basis, then you need to use FIFO only. Correct now. Write down somewhere. If the question is silent, always will use FIFO. If the question has mentioned LIFO, then use LIFO. Chalega? Yes, sir. Now let us take some question of defined contribution plan. That is also important. One by one, we'll take all the question. I'm assuming that you remember the concept of defined contribution plan. Defined contribution plans, first we recognize current service cost, then interest cost, then measurement gain or loss, remeasurement gain or loss will be transferred to OCI, and that will never be recycled to PL. Then there is a concept of plan asset. I will explain with the question only. First, let us take one question of plan asset. On 1st April 2000, the fair value of plan asset was 10 lakh. The opening balance of plan asset. The plan paid benefit of rupees 1,90,000 and received contribution of rupees 4,90,000 on 30th September 2000. Normally, this contribution is received and benefit is paid at the end of the year normally. But if question has given at the mid of the year or on a particular point of time, be careful. So you can see this benefit has been paid and contribution is received on 30th September. The company compute the fair value of plan asset to be 15 lakh as on year end, and the present value of defined benefit obligation amounted to rupees 14,79,200 on the same date. This is closing balance of present value of defined benefit obligation. Actual loss on defined benefit obligation were 6,000. So actual loss has been given on DBO. Compounding happens half yearly, means interest is computed on compounded basis, on compounded half yearly basis. The normal interest rate for the 6-month period is 10% per annum, while the effective interest rate for 12-month period is based on the following data. Now this all information is bekar. This 10.25 they have given effective interest rate. Now just try to understand whether you use 10% per annum compounded 6 months, or you have been given one 10.25% per annum on effective basis. Both are same only. This 10% per annum, this is 10% per annum compounded half yearly, and 10.25% effective rate of interest per annum are same. For example, just try to understand. Suppose you have 100 rupees. So first 10% you apply for 6 months. So this will come how much? This will come 5 rupees. Then can this 5 rupees will be also compounded. So next 6 months it will become 105 into 10% into 6 by 12. So this will come 5.25. Check karo 5.25, 105 into 10% into 6 divided by 12. It will come 5.25. So what is the effective rate of return? Become 10.25% per annum. So that they have given. Now this expected rate of return is actually not, word has not been used under IND AS 19. AS 15 used to use this term. To expected rate of return, there is no concept of expected rate of return. However, I will say this 10% per annum compounded on half yearly basis, and the effective rate of interest 10.25% per annum, both are same. This information is actually not at all important. Ignore this information. Determine actual return, expected return on plan asset. The expected return on plan asset, this term has not been used under IND AS 19. This is actually interest income based on discount rate. What is the discount rate? Discount rate is 10% per annum compounded on half yearly basis only. Correct. Also compute amount to be recognized in all the other comprehensive income in this case. You need to find out actual return first. Now, how to calculate actual return? First, you need to calculate interest income based on discount rate. So what is the opening balance of plan asset? Opening balance of plan asset is 10 lakh. So for first 6 months, the interest will be calculated on 10 lakh to 10% to 6 by 12. Correct. This is coming how much? Coming 50,000. Then last 6 months, so This 10 lakh will be increased by contribution received. What is the contribution received? Contribution received is how much? 4,90,000. And how much benefit paid? 1,90,000. So can I say we'll do plus 4,90,000 and minus 1,90,000 benefit paid, and this will add interest also 50,000. How much it is coming? 10 lakh plus 3 lakh, it become 13 lakh 50,000 on this 10% was 6 by 12. But how much it's coming? 13 lakh 50,000 into 10% into 6 by 12. What is the answer? 67,500. What is the total interest income? Plus 50,000 kar do, it is 1 lakh 17,500. Correct. This is the one way. This is a simple way to calculate interest. What you used to do in your bachpan. In this way only you used to calculate interest. Other way to calculate interest, as it is given in ICS solution, they have done in this way. Just try to understand. This 10 lakh is outstanding for the entire 1 year. So we'll use 10.25% because effective rate of interest is 10.25% for the entire 12 months. So 10 lakh into 10.25%, it is coming how much? 1 lakh 2,500. 1 lakh 2,500. And then how much was outstanding only for the last 6 months? That is, can I say 4,90,000 minus 1,90,000. This is only outstanding for the last 6 months. This is only outstanding for last 6 months. On this they have applied 10% for 6 by 12. So 3 lakh into 10% into 6 by 12. How much it is coming? 15,000. You can see both answer is same. Both answer is same. So ICA has used this way. I will say this is actually simple mathematics. In bachpan to used to calculate in this way. I will say you can use this way also, but if you have understood ICA solution, you can follow ICA solution also. Why to take risk? Follow ICA solution. Have you understood this interest calculation? Yes. In case of LIFO also, last year provision will be reversed. If last year provision always will be reversed. Current year create, last year provision will be reversed. Understood? Correct, Krishnamurthy? But have you understood this interest income calculation? Interest income calculation you have understood. I have done this way so that you can understand interest calculation. Have you understood this? Hello. Yes, sir. This you have understood. Now, second they have asked to calculate actual return. Actual return. So in this, first can you give me what is the fair value of plan asset at year end? At year end, what is the fair value of plan asset at year end? So fair value of plan asset at year end is given 15 lakh. So 15 lakh write down. Then find out the carrying amount of plan asset at year end. So what is the opening balance of plan asset? It was 10 lakh. Then plus contribution received is 4,90,000. Then minus benefit paid 1,90,000. So this become the carrying amount. This become carrying amount without interest calculation. Without interest calculation. So this become how much? 13 lakh. Correct now. So this become now 13 lakh become 15 lakh. So this 2 lakh become actual return. This 2 lakh become actual return. Understood? So this become actual return. This become actual return. Now we need to find out what is the actuarial gain or loss. We need to find out what is the actuarial gain or loss on plan asset. Batao, what is the actual return? Actual return is 2 lakh. But what is the interest income calculated based on discount rate? So this was our actually expectation. 1,17,000. 1,17,500 is expectation. So whatever we have earning, whatever we are earning more than our expectation, that become actuarial gain. So what is our actuarial gain? Actuarial gain will become 2 lakh minus 1,17,500. That is 82,500. 82,500. Understood? So this actuarial gain will be also transferred to OCI, and that will not be recycled to PL. That will not be recycled to PL. Now you can see there is one actual gain on plan asset 82,500, and there is one actual loss on defined benefit obligation. That is given how much actual loss has been given the question 6,000. 6,000 is the actual loss. The net gain is net actuarial gain is how much? 82,500 minus 6,000. So 76,500 will be transferred to OCI. Will be transferred to OCI. Correct now, and accumulated in separate component of equity in the statement of changes in equity, and that will not be recycled to PL. Have you understood this particular point? This was asked in question. Have you understood the entire thing? This question can be asked. This is one expected question for 5 marks, or this can be asked in MCQ also, multiple choice question also. Got this point? I'm expecting this question this time because this has been given in RTP, till now not asked in exam. Have you understood this? Yes, sir. Hello. Now coming to one more question. This question number 3 is also very popular question. Question number 3 is also very popular question. On 1st April, the fair value of plan asset, fair value of the asset of XYZ defined benefit plan were valued at 20 lakh 40,000, and the present value of defined benefit obligation is 21 lakh 25,000. You can see plan asset defined benefit obligation. So what is the opening balance? This opening balance is given 20 lakh 40,000, and this opening balance is given 21 lakh 25,000. So for this type of question, they will ask you to calculate actual gain loss, which will be calculated as a balancing figure from this statement. On 31st March 2002, the plan received contribution amounting to rupees 4,25,000. The plan received contribution, so your plan asset will increase. So you can see contribution received, your plan asset will increase by 4,25,000, but this will not affect what your defined benefit obligation. Understood? What journal entry will do? Plan asset account debit to bank. Plan asset account debit to bank. Then they have given plan paid out benefit, paid out benefit of 2,55,000. Whenever benefit is paid out of plan asset, there are two journal entry. One will withdraw the amount from plan asset. So journal entry will bank account debit to plan asset. Your plan asset will decrease, and whatever amount has been withdrawn, that will be used to pay the defined benefit liability. Can you see that will reduce your defined benefit obligation also? So what journal entry will do? Defined benefit obligation account debit to bank. So this will reduce both plan asset as well as defined benefit obligation. You can see benefit paid will reduce both. Benefit paid will reduce plan asset as well as defined benefit obligation. Understood this point? This point have you understood? Follow. Sir, can you once revise the meaning of actual gain or loss? Acha, I will come to that. First, let us do this question. I'll come to that. Okay, na? Then current service cost for the financial year ended is 5,10,000. The current service cost will increase your present value of defined benefit obligation. Per journal entry will do current service cost account debit to defined benefit obligation. You can see current service cost will increase your defined benefit obligation. Understood? Yes, sir. An interest rate of 5% is to be applied to the plan asset and obligation. So this is a discount rate. To discount rate will be used to calculate interest cost on defined benefit obligation and interest income on plan asset. You can see in this question, on 31st March 2002, the plan received contribution and amount was paid for benefit, paid out benefit also on 31st March. So on closing date, contribution has been received and benefit has been paid, so that will not be considered for interest calculation. So for this type of question, interest will be calculated always on opening balance. However, in the previous question, because benefit was paid and contribution was received at the mid of the year, therefore we need to be careful about interest calculation on that particular question. But in this case, interest will be calculated on opening balance. You can see 5% interest income is calculated on 20,40,000 and 5% interest expense has been calculated on 21,25,000. This you can easily calculate. Yes, this will increase also your plan asset and defined benefit obligation. Now the fair value of plan asset as on year end is 23,80,000 and the present value of defined benefit obligation is 27,20,000. So they have given closing balance. So this was the closing balance of plan asset and closing balance of defined benefit obligation. Any balancing figure in this statement will be remeasurement gain or loss. Understood? Have you understood? So if the amount is this balancing, this becomes balancing figure. If the balancing figure is coming in positive, in asset side, if it is coming plan asset, if it is positive, means it become actual gain because that is increasing the plan asset. So you can see it is become actual gain. But if the liability is increasing, that become actual loss. If the liability is increasing, that become actual loss. So I will suggest you to do in this way. First find out the total up to this. In exam, do in this way. First find out total up to this. Then compare the total with this, and automatically the asset is increasing, then it become actuarial gain. If the liability is increasing, the balancing figure will become actuarial loss. Correct. So they have asked you to calculate that only. Provide a reconciliation from the opening balance, the closing balance from plan asset and defined benefit obligation. Also show how such amount should be shown in the statement of PL and other comprehensive income in balance sheet. Now let us prepare one extract of statement of PL. Token is a current service cost. Net interest cost. Net interest cost means what? This minus this. Net interest cost and bus only this. Current service cost and net interest cost will be shown in SOPL. So you can see current service cost 5,10,000 and net interest cost on net defined benefit liability means 1,06,250 minus 1,02,000 will be shown in the statement of PL. Net actuarial gain or loss. You can see the actual loss is more than actuarial gain. Remeasurement loss is more than remeasurement gain. So actual loss, actual gain, remeasurement gain or remeasurement loss are interchangeable word. So 2,33,750 minus 68,000. So you can see this other comprehensive income will show loss on defined benefit obligation. How much? 2,33,750 and gain on plan assets 68,000. However, this will be shown as a net amount only. This will be shown as a net amount in other comprehensive income. In the balance sheet, can I say this? What is the defined benefit obligation? 27,20,000 minus fair value of plan asset 23,80,000. This is shown under non-current liability under the head provision. You can see in balance sheet, this net defined benefit liability will be shown under non-current liability under the head provision. Under the head provision, 3,40,000. This is the difference between present value of defined benefit obligation and the fair value of plan asset as on year end. Understood this point? Understood this point? Correct. Now, what is remeasurement gain or loss? Just try to understand. What do you mean by remeasurement gain or loss? When we say present value of DBO, so this become opening balance of DBO. In this we add current service cost. We'll also add interest cost. We'll also add past service cost. Past service cost is the cost which increase the present value of defined benefit obligation due to any amendment or modification in the plan. That is the past service cost. Correct now. Now, if suppose this opening balance changes due to changes in actuarial assumption, we do remeasurement of opening balance. Suppose these all are based on actuarial assumption. So assumption may change in this year, current year. So due to changes in assumption, if the opening balance changes, that changes is known as remeasurement gain and loss of DBO. Correct. And that will not be transferred to PL, that will be transferred to OCI. Understood? Any changes in the opening balance of DBO due to changes in actuarial assumption is known as actuarial gain and loss. So in exam, we are not supposed to calculate that changes in opening balance. They will give you the closing balance. So if they have given closing balance of DBO, so the difference of these will be automatically the remeasurement gain or loss. Remeasurement gain or loss. Understood this point? I mean, so similarly, in plan asset, we write an opening balance. For plan asset, we write an opening balance first. Then this will be added by contribution received minus benefit paid. Correct now. Plus interest income. Correct. Understood? So this become the amount. But suppose the closing balance of plan asset, suppose this is 10 lakh and the closing balance of plan asset is 11 lakh. It means, can I say there is some remeasurement gain? Means your expectation was this much interest income, but you earned more than that. So that is known as remeasurement gain or loss on plan asset. If you are earning more than expectation, that become remeasurement gain on plan asset. If you are earning less than your expectation, that become remeasurement loss on plan asset. So that remeasurement gain and loss will be transferred to OCI. Understood? Have you understood now? Was a doubt of Arvindam. Arvindam, have you understood now? Remember remeasurement gain or loss? Yes, sir. Got this point? Yes, sir. Coming to the next question. So this is also one of the important question which has already asked in exam. This type of question have been also asked in exam for 5 marks. Correct ना. Now this type of question can be also given in MCQs. MCQ में पूछ सकता है. They will ask you how to, what amount will go to SOPL, what amount will go to OCI. That type of question can be asked. This also we have done. 5 also we have done. Come to 6. SA Private Limited is engaged in the business in the retail, having 100 retail outlets across northern and southern India. SA Private Limited is this given plan asset. Now they have given opening balance of plan asset 10,000. Contribution to plan asset on 31st March. Normally they will give contribution and benefit paid on 31st March. But they have given at the mid of the year or at any point of time during the year. Be careful about interest calculation. Understood? Contribution received 3,000. Amount paid means this benefit paid is 300. As on 31st March 2002, the fair value of plan asset is 14,700 and actual return, they have given actual return on plan asset 2,000. They have given actual return on plan asset. Correct now. It means, can I say, if they have given actual return, you can easily find out what is actual gain or loss. Correct now. So just try to understand. Suppose this is the opening balance. Opening balance. What is the contribution received? 3,000 plus करेंगे. Then 300 is minus. Correct. What is the total of this? This is how much? 13,000. This become 12,700 and the closing balance is how much? 14,700. The difference is nothing but actual return only. So that is, if even though not given, we can easily calculate this become actual return. Now if you find out interest income based on discount rate, then we can easily calculate the actual gain or loss. Even though this actual return is not given, we could have calculated this. Now defined benefit obligation, opening balance given 12,000, closing balance they have given 15,500, actual losses they have given 100, current service cost they have given 2,500, benefit paid they have given 300, discount rate is 10%. Now in this case interest cost will be calculated on 12,000, so 12,000 into 10%, this can I say it become 1,200, and in this case the interest will be calculated on 10,000 based on this. So this is what 1,000. You can see 2,000 is actual return. However, my expectation was 1,000. So what is our remeasurement gain on plan asset? So remeasurement gain on plan asset will be 1,000. And in this case, the remeasurement loss on DBO, they have already given 100. Now what they have asked? As per IND AS 19, please suggest if there is any amount based on above mentioned information that will be taken to OCI. So yes, the remeasurement gain or loss on plan asset is 1,000 and the remeasurement loss on DBO they have given 100. This is minus 900 will be taken to OCI. 900 will be taken to OCI. Also compute the net interest on net defined benefit liability. That already also we calculated. This become 1,200 and this is 1,000. So 1,200 minus 1,000. So 200 will be the net interest cost. 200 will be the net interest cost. That only given. Very simple. Means this question is super easy. Super easy. 900 will be taken to OCI and 200 will be the net interest cost. Chalega. Then other information is given then that you can calculate. Got this point? Yes, sir. Now this question number 7 is newly inserted question. Good question, can be asked in exam. There is one mistake in the question. We'll try to ignore that mistake and we'll try to answer as per ICR solution, because at this point of time, if I will rectify the mistake and the same questions come in exam and same suggested solution is given, you will be worried about that. So you need to follow ICR solution only. Yes or no? So from the following particulars, compute the net defined benefit liability and expense to be recognized in PL. You can see they have given balance at the beginning. This is defined benefit obligation current year and this is defined benefit obligation of previous year. So let us start with previous year. This is the opening balance of previous year. Then current service cost will be added, interest cost will be added. Now changes in demographic assumption, changes in financial assumption, this experience variation, this total become actuarial loss. This total become actuarial loss. So actuarial loss will increase the liability. You can see all these three has increased the liability. So this is the remeasurement loss. This is the remeasurement loss. So remeasurement loss is what changes in assumption. There are two type of assumption. One is demographic assumption. One is financial assumption. So changes in demographic assumption, changes in financial assumption, and there is experience adjustment. Experience adjustment means what? Whatever you expected and the actual is different. Means you have estimated your liability is 1000, but actually you paid 1200. So you have paid extra 200. That is also known as actuarial gain or loss. That is also known as actuarial gain or loss. That is known as experience adjustment. चलेगा? Yes sir. Then benefit paid is 4.46. This will be minus. इसको minus करेंगे. Investment income. Investment income. Not coming. Investment income. I think typo mistake है. Investment income will not come यहाँ पर. Investment income will come यहाँ. Understood? Right. This will not come यहाँ पर. This will be interest cost. One minute. You can see this is also not correct. So this is benefit paid. My mistake. I have. This is benefit paid. Benefit paid is 0.61. This will be minus, and this was experience adjustment. थोड़ा सा mistake. I'm not reading. 1 minute. Interest cost was how much? 3.56. This was interest cost. Interest cost will be added. I was also confused. Interest cost will be added. These three are what? Actually a gain or loss. And this was benefit paid 0.61. Investment income is 0. Investment income is 0. So this will become the closing balance. This will become the closing balance. And this closing balance will become the opening balance of this year. Means actually this information was not required only. If you want to find out actual gain or loss of current year, so you want only opening balance. Want only opening balance. Opening balance may you will add current service cost. You will add interest cost. You will add this actual loss. You will add this actual loss. You will minus this actual gain. Correct. Now benefit paid was nothing. Correct. Benefit paid was nothing, so this will become closing balance. Closing balance you can find out. Closing balance, this become closing balance. Now coming to plan asset. Plan asset opening balance is what? 14.65. Then benefit paid 0.61 minus. Then investment income. Now investment income means what? Interest income calculated by using discount rate. So this is 1.12 investment income. So this is investment income. This is investment income calculated by using discount rate. Discount rate. Then employer contribution will be added. Now they have given return on plan asset. Actually, from my point of view, this should not be return on plan asset. This should be actual gain or loss. This should be actual gain or loss on plan asset. This was the mistake in the question. If they have given return on plan asset, but this should not be return on plan asset. This should be actually gain on plan asset, because return on plan asset will will have two components. One is interest income calculated by using discount rate, and then remeasurement gain or loss. Correct. Now means what is the formula? Means first we calculate actual return. From this we minus interest income calculated by using discount rate. Correct. Now this is minus, and this is known as remeasurement gain or loss. So it means actual return is nothing but sum total of these two. Sum total of these two. I hope you are understanding. So this is actually, I will say, typo mistake. It should not be return on plan asset. This is given. This is actually gain or loss. So this should be considered as actual gain or loss. And after this will become closing balance of last year, which will become opening balance of current year, and then we can find out closing balance of current year. Understood? Means all the information has been given. Only you need to put all the information. You can see this closing balance calculated. This become opening balance. Then this become closing balance. This closing balance calculated. This become opening balance. Then you calculated closing balance. Now what they have asked? What they have asked? From the following particular computer net defined benefit liability and expense. Net defined benefit liability of the current year will be this minus this. For previous year will be this minus this. We are showing previous year figure also. Right? Then they have asked what is the expense to be recognized in PL. The expense to be recognized in PL will be current service cost plus interest cost. Correct. plus net interest is net interest cost. So interest cost minus interest income of the current year, that will be shown. Current service cost plus net interest cost. Net interest cost will be interest cost minus investment income. Actually gain or loss will be shown in OCI. They have asked in SOPL. So SOPL, if I am saying SOPL has two parts, PL and OCI. So in OCI will go, but this become the actual. This become the actual gain or loss on DBO, and this become but 2.1 to become actually a gain or loss on plan asset. Actual gain or loss on, if it is positive means it is actually gain. The net amount will go to OCI. I hope you have understood. Have you understood this particular point? Have you understood? To that only they have shown. Check karenge. In the balance sheet, the net defined benefit liability to be recognized for the year ended 31st December 2001 means previous year is 63.25 minus 21.81. And for the current year it is 75.07 and minus 33.39. And in SOPL, this is what SOPL, this is defined benefit obligation plan asset. However, you should not show in this way. To write down in SOPL format. So current service cost of current year will be 5.84. Previous year it will be 4. Interest cost, so this will be net interest cost. Net interest cost will be 4.27 minus 1.47 and 3.56 minus 1.12. But they have not shown the actual gain loss, means OCI they have not shown. I don't know why they have not shown. So you should also show OCI. OCI will be what? So this become actuarial loss. Actual loss of current year, and this become actual gain on plan asset of current year. So these minus this will be the net actuarial gain or loss be shown in OCI. This is the actuarial loss on plan asset for previous year, and this is the actual loss on plan asset. This is actual loss on DBO. This is actual loss on DBO. This is the actual loss on plan asset. So total actual loss will be shown in the PL of previous year. Have you understood this particular point? Cool. Got this? Any doubt? No doubt. So this can be one of the expected question. Now this question number 8 is also good question. Can be asked in exam. This is simple question. Let us read. Arunachalam operate a defined retirement benefit plan for the current and former employee. Given the large size of the company, it engaged a firm of actuaries for advice on the contribution level and overall liability. On 1st April 2001, the actuarial valuation of the present value of DBO is 15 crore and the fair value of plan asset is 13 crore. 15 crore, 13 crore. Check karo. What they have given. Reconciliation statement they have made. They have prepared one account. We can prepare one account also. You can see 15 crore. They have converted in lakhs. Is the opening balance. Plan asset, it is 13 crore. In lakhs, it is 1300 lakhs. Chalega. Then they have given on 1st April 2001, the annual market yield based on government bond is 5%. So we'll calculate interest cost. You can see they have calculated interest cost 5% on opening balance 75, and here it will be interest income 5% on opening balance, that is 65. They have calculated. I'm just showing the account also. Then during the year, Arunachalam made contribution of 1.75 crore to increase your plan asset. You can see plan asset account debit to bank, we write down plan asset account debit to bank. Plan asset account debit to bank is 175 lakhs. Crore also you can add on. I don't understand why they have given in crore. Write down in crore only na. Why you are writing in what lakhs? Write down in crore only. It is 1.75 crore. Chalega to bank. Then what is given? What is given? And the plan paid out benefit of 1.05 crore. So what journal entry? There will be two journal entry. One is what? Bank account debit to plan asset. Plan asset will decrease, and one is DBO account debit to plan asset. DBO will also decrease. So DBO account, take a DBO account debit to bank means they have written, they have adjusted with plan asset. You can see DBO account debit to bank 1.05, and you can see bank account debit to, I think they have written bank account debit to DBO. So they have written bank benefit paid means they have written one example plan asset account. So you can see by defined benefit obligation benefit paid 1.05. However, you can say two journal entry. One is uh, plan asset account debit to bank, then DBO account debit to bank. Understood? Yes, sir. The next point is what? The actuarial firm estimated that current service cost is 1.55 crore. That will increase your DBO. So journal entry is what? Current service cost account debit to DBO. Current service cost account debit to DBO. So by current service cost 1.55 crore. Yes, sir. This also done. Yes, sir. Next point is what check करेंगे. On 28th Feb, the rules of plan were amended. So there will be some past service cost. They have given that the past service cost, the retrospective effect is 37.5. So amended with retrospective, which led to increase in present value of defined benefit obligation. This is known as past service cost. So what journal entry will do? Past service cost which will be transferred to PL account debit to DBO. So you can see past service cost. So even by past service cost 37.5 means in lakhs. In crore it was how much? 37 lakhs only given. 37.5 lakhs. So in crore it will be 0.375. Chalega? Yes, sir. During the year ended 31st March 2002, Arunachalam was in negotiation with the employee representative regardless of plan redundancy. Some employee left the company, so the plan will be cancelled. It is quite possible that we need to some settlement here. So there can be some gain on settlement. Means that what you are paying that will be benefit paid, and if you are paying less than actual liability, that will be known as what? That will be known as gain or loss on settlement. So these negotiations were completed shortly before the year end and the redundancy package were agreed. The impact of this redundancy was to reduce the present value of DBO by 2 crore. Means liability was 2 crore, but the amount payment was 1.875 crore. So this is the benefit paid. Once again, benefit paid is 1.875 crore. Benefit paid, what will be journal entry? That will decrease both DBO and plan asset because benefit will paid out of plan asset only. What journal entry? Plan asset account debit to bank. So you can see plan asset account debit to plan asset account debit to bank. Correct? What was the amount? It was 1.875 crore. 1.875 crore. Correct? Yeah. So what they have written? So what journal entry will do? Journal entry is what? Sorry, this is first we'll withdraw the amount from plan asset. Will be bank account debit to plan asset. You can see by bank you can add on 1.875 crore, 1.875 crore, and the amount the defined benefit obligation will also decrease. DBO account debit to bank. In this actually they have done this entry. You can add on to bank. It will be 187.5. Whatever paid 187.5. Correct? And the gain on settlement is how much? 2 minus 1.875 minus 1.875 coming how much? 0.125. So gain on settlement you can add on DBO account debit to gain on settlement, that is how much? 12.5. So ultimately the total will be 200 lakhs only. Correct? So basically we pass two journal entry. This journal entry is what? Just try to understand. DBO account debit to bank. DBO was 200 lakh. To bank was 187.5 and the difference will be gain. Gain will be also calculated now. So you can pass this journal entry or you can add on two criteria and settlement, whatever your choice. So this will become this much. You understood? Correct. Then they have given closing balance of what? Present value of defined benefit obligation and fair value of plan asset. This become closing balance. So closing balance will be at this side and at this side. Correct? So difference, the balancing figure of this account will be actual gain and actual loss. So this become actual gain and loss which will be transferred to us. Same to same question but with more information. Understood this point? Correct. This now they have asked how to present this in balance sheet. So balance sheet you can see previous year, current year. The present value, this is closing balance. This become net defined benefit liability. This is the closing balance of last year. The closing balance of last year means opening balance of current year. This is previous year figure. Statement of peer, current service cost will come. Past service cost will come. Now you can see gain on settlement. They have written 12.50. That only I was mentioning. And net interest cost. Net interest cost means interest expense minus interest income. That will be 10. This will be the total in SOPL. Now in other comprehensive income, you can add on actual loss. And then this is not return on plan asset. This is actually remeasurement gain on plan asset. So remeasurement gain on plan asset, which has been calculated a balancing figure. Balancing figure, if you see 152.5 was gain and 237.5 was loss. So you can write on net amount or you can write on in this way, your choice. So this becomes the total other comprehensive income in negative amount because it is a loss. But this point, to this question is also expected in exam. Newly inserted question. I have a similar question was there, but we can say newly inserted. So this can be one expected question exam where they may ask you account also. The account was a part of working note. I will say don't prepare account. If they ask, you can do in a statement format. Better do in a statement format what we have done in previous question. The statement format, that will be easy to understand. That will be easy to understand. Correct? Means I will just revise the statement. Just revise the statement for you all. Chapter is over from my point of view. Now if you have any question in your mind, you can inform me. If you have any question in your mind about IND AS 19. Have you understood the last question? Have you understood the last question? Bolo. This is IND AS 19. Normally my class I used to give one this statement. This statement is for what? DBO and plan asset. So DBO, first we write on opening balance. Opening balance. Then we write on current service cost in DBO. In this current service cost will not come. Then we write on net interest cost. Is interest cost यहाँ पर and interest income यहाँ पर. Past service cost will come यहाँ पर. Past service cost will not come यहाँ. Contribution received will come in plan asset. It will be added. Benefit paid will come in both, and this will be what? Negative amount. This will come in negative amount. Gain on loss on settlement will come यहाँ पर. Gain on loss on settlement means liability amount and the actual payment. That the difference will be gain on loss on settlement. This will be balancing figure in exam question. This given in the question, this you can calculate as a balancing. So this become one statement of reconciliation. Now current service cost will go to PL. Net interest cost to income will go to PL. Past service cost will go to PL. And gain or loss on settlement will go to PL. This remeasurement gain or loss will be transferred to OCI. And this net amount will be shown in the balance sheet. Net amount will be shown in the balance sheet under the head non-current liability. Under that head provision. Under that head, understood. Have you understood this? Follow. This much have you understood? Any doubt? Chalo. Got this point? Yes, sir. With this IND AS 19 is over. Now let us come to IND AS 12. Come to IND AS 12. Now IND AS 12 is also totally based on question. Now IND AS 12, before I start any question, I'll just like to say for asset and for liability. First we calculate carrying amount. Then we calculate tax base. Correct. So this will become temporary difference. Now for asset, carrying amount is more than tax base. then that is taxable temporary difference. And if carrying amount is less than tax base, then that is deductible temporary difference. It will be reversed for liability. Carrying amount is more than tax base, then it is deductible temporary difference. And carrying amount is less than tax base, then it is taxable temporary difference. This you know. Only question are sufficient right from exam point of view. This IND AS 19 I will say question is only because they will ask question only until unless they will not ask theory question in exam. Correct now. So if you do much question and do some more question whatever is given in the book, that from that only question will ask. Is from my point of view from IND AS 19 they will not create any new question. They will not create. But they also don't know how to create a new question for IND AS 19. चलेगा? So no question from long-term employment benefit and termination benefit given in the ICS study material. But termination benefit, one question can be asked. Suppose termination benefit, the termination benefit is payable after 12 months. Correct? After 12 months, then we need to calculate provision for termination benefit at discounted amount. But if it is payable within 12 months, then undiscounted amount. So this type of question can come in what? In MCQ based question. However, no question has been given for long-term employment benefit and termination benefit. Long-term employment benefits same concept of defined benefit plan will be applicable. Defined benefit plan will be applicable means whatever you have done for defined benefit plan, long-term employment benefit same treatment done. Only one difference is that in case of defined benefit plan, the remeasurement gain or loss will be transferred to OCI. In case of long-term employment benefit plan, remeasurement gain or loss will be transferred to PL. This is the only difference. The entire other accounting treatment remains same. However, they have not given any question on long-term employment benefit. Chalega? If the question is means nothing means whatever question they have given, that is for what defined benefit plan. Chalega? Understood? Because a new question will be done if they are asking new question. That is new question for everyone. Correct now. So don't worry about that right now. Right now you should not worry about that. Correct? Got this point? Yes, sir. What I was saying. Have you understood this particular point for IND AS 12 deferred tax? Now taxable temporary difference will create DTL. Deductible temporary difference will create DTA. This will be DTA. This will be tax. This will be DTL. Correct? Understood? Understood. This is the general point. Now there is one point. The tax base is the value of assets and liability as per income tax book. If you are preparing your books of account as per income tax act, then what will be the value of assets and liability? That become tax base. But there is one rule, a simple rule I will say only for understanding. If there is any permanent difference, there is any item of permanent difference, is the any expenses which have been disallowed forever, that become an item of permanent difference. If there is any item of permanent difference, then in that case deferred tax will be zero. That case deferred tax will be zero. So in that case tax base will be equal to carrying amount. Tax base will be equal to carrying amount. So that the difference is the, I will say, brief understanding of this chapter. Brief. If you know this much, then you can attempt any question. You can attempt any question. Can we start? So question number 1 I will come at the end. Come to question number 2. X Limited prepare consolidated financial statement to 31st March each year during the year ended 31st March 2018. The following event affected the tax provision of the group. They are asking the tax provision of the group financial statement is consolidated finance. Y Limited is a wholly owned subsidiary of X Limited. Made a loss adjusted for tax purpose for 30 lakh. So they have a loss adjusted for tax purpose. Means they have a tax loss. So on can I say unused tax losses also we create deferred tax liability because that is also deductible temporary difference. So any tax losses which can be carried forward, on that also we create deferred tax asset. Now deferred tax asset will be created only to the extent it is probable that future taxable income will be available against which such DT can be utilized. This can I say we can create deferred tax asset only when it is probable that future taxable income will be available against which such deductible temporary difference can be adjusted. there is no future taxable income, then will not recognize any DTA. Understood this point? I hope you know. I hope you know. Know this point or not? Y Limited is unable to utilize this loss against previous tax liability. Income Tax Act does not allow Y Limited to transfer a tax loss to other group company. Understood point hai? However, to allow Y Limited to carry forward a loss and utilize it against the company future taxable profit. The directors of X Limited do not consider that Y Limited will make taxable profit in foreseeable future. There will be no future taxable income, and therefore on this no DTA will be recognized. First point, have you understood? Second, just before 31st March 2018, X Limited committed itself to the closing a division after the year end and making a number of employees redundant. So they are committed to one restructuring program. This is 37 means you need to create a provision for restructuring. Therefore, X Limited recognized the provision for closure cost of 20 lakh in the statement of financial position as on 31st March 2018. Income Tax Act allow tax deduction for the closure cost only when the closure actually take place. This case is a carrying amount 20 lakh. The tax base, because it is not allowed right now, it will be allowed only in the year when it is paid, will be 0. Now for liability, carrying amount is more than tax base, it is deductible temporary difference of 20 lakh on which DTA will be recognized at the tax rate given. Tax rate is how much? 20%. So we should get DTA at a rate of 20%. But provided future taxable income will be available. So what is given? In the year ended 31st March 2019, X Limited expect to make taxable profit which are well in excess of 20 lakh. It means the taxable income will be available against which such DTD can be utilized, and therefore we can recognize DTA on such deductible temporary difference. Chalega? Yes, sir. During the year ended 31st March 2017, X Limited capitalized the development cost to satisfy the criteria in paragraph 57 of IND AS 38. Means they have recognized one intangible asset on as on for the year ended 31st March 2017. The total amount capitalized was 60 lakh. The development project began to generate economic benefit from 1st Jan 2018. Means can I say for the first year depreciation, yeah, amortization will be only for 3 months. 16 lakh was the cost price. On this amortization will be for 3 months. The director estimated the project generate economic benefit of 5 years. So 16 lakh divided by 5 equal to how much? It is 3.2 lakh. For 3 months you will divide by 12, it is 80,000. 80,000 you deduct. What is the carrying amount? Carrying amount is 15 lakh 20,000, 15 lakh 20,000. The development expenditure was fully deductible against taxable profit for the year ended 31st March 2018. Means this is totally allowed. Means the tax base of that development expenditure, means that asset will be nil because it is totally allowed as expense. So it is nil. Now it is an asset and the carrying amount is more than tax base, so it is taxable temporary difference of 15 lakh 20,000, and therefore on this DTA will be created at a rate of 20%. I hope you can do it. Chalega? Aage chale? Yes. On 1st April 2017, X Limited borrowed 1 crore. The cost to X Limited of arranging the borrowing was 2 lakh. Now we know that as per IND AS 101, transaction cost will be deducted from 1 crore. 1 crore minus 2 lakh, it is 98 lakh. 98 lakh. And the cost qualified for tax deduction on 1st April 2017, but as per Income Tax Act, this transaction cost will be allowed as an expense. The loan was for 3-year period. No interest was payable on the loan, but the amount repayable was itna 1 crore 30 lakh. Means it was repayable at premium. This equate to effective annual interest of 10%. So as per IND AS 109, we need to recognize interest amortized cost by applying EIR to 9 lakh 80,000. Will be the interest expense, and there is no contractual cash outflow because the interest payment is nil. So this become how much? 98 lakh plus 9 lakh 80,000. This will become how much? 1 crore 78 1 crore 7 lakh 80,000. 1 crore 7 lakh 80,000. Correct. So this become the carrying amount of liability, and the tax base of liability will be how much? 1 crore only. The tax base of liability will be 1 crore. Tax base of liability will be 1 crore. Now the liability, you can see carrying amount is more than tax base. Therefore this will be deductible temporary difference. That is what? 7 lakh 80,000. On this 7 lakh 80,000, once again you have to create deferred tax asset because already it is given that we have future taxable income against which such can be utilized. So on this 7 lakh 80,000 also will create deferred tax asset. So last wala 7 lakh 80,000. to 20%, that is 1,56,000 due to availability of taxable profit. The asset can be recognized as a deduction from deferred tax liability. Of course, DTL and DTA will be set off and that amount will be shown in the balance sheet. Chalega? Yes. Understood? Question number 2 understood? Hello everyone. Are you able to follow me or not? Have you understood this? Everyone respond. You're not responding now. Because I am also teaching from morning 6. Morning 6 to 10 was my regular class. Then I came for live class 11 to, I think I have taken class up to 5:30 for you all. Then from 7 to 9 I was in gym. For 2 hours I was in gym. Then again came and 10:15 I am taking the class. It's fully tired. So whatever you are also working for 15 hours. I am also working for 15 hours. So both are same. I am also CA, you are also CA. Every CA need to work for 15 hours per day. Means before becoming CA and after becoming CA, you need to work for 15 hours. Just right. The difference is what I am working for others. So I need to earn money for others, my family. Therefore I am working. You are working for yourself. You are studying, you are learning to gain knowledge for yourself. You should be more dedicated towards your working. Understood? But I am working not for myself. I am working to earn remuneration, means earn income to survive my family. Just try to understand. Chalega? So I am also working for 15 hours. You are also working for 15 hours. Both are same. Both are same. Both are same. ठीक है, तो रेस्पॉन्ड करो. अभी राइट नाउ यू आर फीलिंग स्लीपी और यू आर ओके? नींद आ रहा है? आर यू फीलिंग स्लीपी? Correct? Just try to understand. Right now, I can motivate you, but my motivation will last for only 1 hour. You need to motivate yourself. Whatever you are doing for yourself. You will become CA, you will get benefit, your family will get benefit, your family will become happy, you will become happy. So whatever you are doing for yourself. Work for, I will say, entire 24 hours. Entire 20, if it is possible right now, this last moment is the crucial moment. If you can survive in this last 7 to 8 days, you'll become CA. Definitely you'll become CA. Chalega? Yes, sir. Let us come to one more question. A Limited prepare financial statement 31st March each. The rate of income tax applicable to A Limited is 20%. The following information relate to the transaction of assets and liability. A Limited has 40% shareholding in L Limited. A Limited purchased this shareholding for 45 crore. The shareholdings give the A Limited significant influence over L Limited but not control. So it become an associate. A Limited account this by using equity method. Equity method, the carrying amount they have given as per IND AS 28 as on 31st March 2001 70 crore and as on 31st March 2002 75 crore. But can you say under income tax act IND AS 28 will not be applicable. Under income tax act this investment will come at cost price only. So under income tax it will be 45 crore. Tax base will be 45 crore. Correct. So now simple. I think you need to find out in the tax jurisdiction this point is given. You can read it. Simply just try to understand. This is current year, this is previous year. This is 31st March 2001, 31st March 2002. What is the carrying amount? Carrying amount is what? 70 and 75? 70 and 75. What is the tax base? Tax base is 45 and 45. So the initial carrying amount is more than tax base. So it become what? Taxable temporary difference. So it is 70 minus 45. 70 minus 45. This is 25, this is 30. Correct? Of course, you will create DTL. DTL at what rate? DTL at what rate? Batao. It is given the question. DTL will be created at what rate? It is given 20%. 20%. At the rate of 20%. At the rate of 20%. So 25 into 20%. It is 5 and this will be 6. Now they have asked you how much deferred tax will be recognized in current year. So you can DTL 5. Now it becomes 6. So difference is what? 1. This will be the deferred tax expense of current year. Deferred tax expense of current year and this will be transferred to PL. This will be transferred to PL. This has been asked in the question. Chalega? Aage chale. One more question is there. This is also important. A Limited measure the head office building using the revaluation model. The building is revalued every year on 31st March. On 31st March 2001, the carrying amount of building after revaluation was 40 crore and its tax base was 22 crore. You can see opening balance and opening tax base is given. During the year ended 31st March 2002, A Limited charged depreciation in SOPL 2 crore and claimed a tax deduction of 1.25 crore. On 31st March 2002, the building was revalued to 45 crore, but revaluation is not applicable under Income Tax Act. Now they have asked, this is the information given. Let me do. This is 31st March 2001. This is 31st March 2000. So what is the carrying amount given? Carrying amount initially given how much? It was 40, and then after revaluation become 45. But this 45 is what? 40 minus depreciation. Depreciation was how much? It was 2 crore. 40 minus 2 and plus, can 7 will be revaluation gain, so this become 45. So this was the revaluation gain during the year, which has been transferred to revaluation surplus. Understood this point? Yes. The tax base is given. Opening tax base is given how much? 22, and then depreciation as per income tax is 1.25. 22 minus 1.25 is equal to how much? That is 20.75. 20.75 chalega. Understood this point? Correct. Now you can see in this also there is a taxable temporary difference of 40 minus 22, that is 18. This is 45 minus 20.75, that is how much? 24.5. Now there is a rule. Rule is what? Whenever revaluation gain, there is any taxable temporary difference because of revaluation gain, so detail will be created on that, and that detail will be created through OCI. So what is the rule? The accounting effect of deferred tax will depend upon the accounting effect of a transaction on which deferred tax has been created. If the transaction has been transferred to PL, their deferred tax will be also transferred to PL. The transaction will be transferred to OCI, then their deferred tax will be also transferred to OCI. The transaction will be transferred to other equity, then deferred tax will be also transferred to other equity. This is the rule. So revaluation gain has been transferred to OCI, so their deferred tax will be also transferred to OCI. The rule, have you understood? Correct. So initially there was a DTL at a rate of 20%. How much? 18 to 20% is 3.6. 3.6. Now on this 24.25 into 20%, this is 4.85. But out of that, just try to understand. On 7 into 20%, 7 into 20% is 1.4. This has been created during the year, and this will be transferred to OCI. This will be transferred to OCI. Correct. Now balance is what? 4.85 minus 1.4, that is 3.45. So 3.45 is the closing balance, and opening balance was 3.6. You can see there is a reversal of DTL. Means closing balance 3.45 and opening balance 3.60. So how much DTL reverse? DTL reverse how much? 0.6. So that is 0.15. So this is a reversal of DTL. So this reversal of DTL is due to depreciation, and because depreciation has been transferred to PL, therefore this reversal will be also through PL. So this will be transferred to PL. This will be transferred to PL. So 1.4, this is 1.4. This is DTL created. This is DT expense through OCI. Correct. And this is what? DT income, because reversal DTL will be DT income. So this will be reversal DTL through PL. Have you understood this particular point? This is a good question. If you have understood, I hope you will understand the solution also. Solution has been given in some other way, but if you try to understand this way, this is more easy to understand. Have you understood this particular point? Follow. Have you understood? Fast. If you have understood, I'll go to the next question. Also you have understood. This is one of the expected question. Question number 4. On 1st April 2001, P Limited is granted an 1 crore share option worth rupees 4 crore. So 4 crore is the fair value of option, subject to 2-year vesting period. The income tax law permit a tax deduction at an exercise date of the intrinsic value of the option, but the Income Tax Act will allow deduction based on the intrinsic value of the option on exercise date. This can I say IND AS 102 accounting and the income tax allowance of expense are different. The intrinsic value of option at 31st March 2002 1.6 and 31st March 2003 is 4.6. The increase in the fair value of option on 31st March 2003 was not foreseeable in 31st March 2002. The option were exercised at 31st March 2003. Means the vesting day and exercise they are same. Vesting day and exercise they are same. Keep the accounting treatment. Now let me explain what they want to. This is 31st March 2000. This is 31st March 2000. 1/4/2001. On this date, option was granted. How many options was given? 1 crore. The fair value was 4 crore. Now can you say whenever there is equity settle SBP, the fair value of option granted will be recognized as an expense over the period of vesting period, and if there is no option which is going to be cancelled, so EB expense will be 2 crore, 2 crore. What journal entry will do? Journal entry will be EB expense account debit to SBP reserve. Correct. Now they have given intrinsic value as on this date was 1.6 and intrinsic value as on this date was 4.6. 4 point. Correct. Now just try to understand. At this point of time we are calculating deferred tax. What is the carrying amount of asset or liability? Can I say under IND AS 102 there is no asset, no liability, because what journal entry you will do? EB expense account debit to SBP reserve, and SBP reserve is equity. So there is neither asset nor any liability. So carrying amount will be nil. Carrying amount of asset or liability will be nil. Now tax base. Now tax base means what? The amount which will be allowed in future. So what they have given in the question, that as per Income Tax Act, the intrinsic value on exercise day will be allowed as a deduction. But can this 4.6 not known at this point of time, and is given the question that this 4.6 was not foreseeable on 31st March 2002. Is if you want to calculate expected deduction, the expected deduction will be based on this intrinsic value. This intrinsic value is for the 2 year. So what is the intrinsic value of the allocated in first year? That will be 0.8 crore. So can this become expected deduction to be allowed in future for the first year, and whatever deduction to be allowed in future for first year, that become deductible temporary difference. Or you can say this become the tax base. So tax base become 0.80, and you can see carrying amount is less than tax base, so this become deductible temporary difference of 0.80. Have you understood this? Similarly, in the next year, carrying amount is once again nil. Now this 4.6 is already allowed as an expense in Income Tax Act. Already allowed now. So there is no expected deduction. So this will also become nil. So there is no tax base. Tax base become nil because there is no expected deduction to be allowed in future. Because this is already allowed in second year. Understood? Therefore, it also become nil. So deductible temporary difference become nil. On this date, we'll create DTA at a rate of, what is the rate? Rate of tax is 30%. At a rate of 30%, 30% will be 0.24. Correct, 0.24. And here it will be nil. So can I say whatever you have created in first year will be reversed in second year. So here will create DTA of 0.24, and here we reverse DTA of 0.24. So what journal entry will do? Here journal entry will be DTA account debit deferred tax 0.24, and here the journal entry will be deferred tax account debit to DTA 0.24 and 0.2. Have you understood? Journal entry. This question is expected in exam. Have you understood this particular point? Lot of doubt is there in this particular question. Got this? Can we move to other question? Yes, sir, we can move. Come to next point. This is a simple question. You can do it. I am not doing it. This is based on ROU asset and lease liability. Of course, ROU asset and lease liability will have carrying amount, but there will be no tax base. Tax base will be 0. So you can find out carrying amount and then tax base below that will be taxable or deductible temporary difference, as the case may be. You can This is based on business combination question. I hope this also is very simple. You can see fair value is given, fair value. So in case of business combination, we need to first find out fair value of net asset. So this will become the fair value of net asset. This will become tax base of net asset. We'll find out difference. And if the fair value is more than tax base, we'll create deductible temporary difference. Sorry, that will be if the fair value is more than tax base. What is the amount? You can see fair value is 1070. The tax base is 920. All the information are given to 1070, 920. Difference is what? Is 150. So because fair value is more than tax base, this will be taxable temporary difference. On taxable temporary difference, we create deferred tax liability. Deferred tax liability. So you can see deferred tax liability will be how much? What is the rate given? Now rate of tax for holding company is 30% and for subsidiary company is 40%. Because this is the INA of subsidiary company, tax rate of subsidiary company will be applicable. Therefore you should take 40%. 40% to 150 into 40% will create DTL of how much? 60 lakh. You will create DTL of what? Journal entry you will do. Journal entry will what? The INA account debit. INA will be 1070. DTL how much? 60 lakh. What is the consideration paid? Consideration paid is how much? Consideration paid at limited acquired for rupees 15 lakh. Consideration paid is 15 lakh. 1500 we can say. 1500. Difference will be goodwill. Goodwill कितना है बताओ? 1500 plus 60 minus 1070 equal to 490. You can see 490 is goodwill. You can calculate by using the formula given in business combination chapter. Fair value of consideration paid minus fair value INA including DT and DTL. Understood now? This you can do it. So this type of question can be asked. Only be careful whenever tax based information is not given, then carrying amount of INA will become tax based. Carrying amount of INA will become tax based. Sometimes tax based information is not given, so carrying amount of INA will become tax based. In this question, only one point is careful. Tax rate will be based on S limited, not H limited, because this is the INA of S limited. So it means that tax will be also based on the tax rate of S limited, not H limited. Chalega? This is one super point. Now this is also one good question. If we have understood that we need to create DTA based on the future taxable profit availability. Now, what IND AS 12 says that the taxable income should be assessed based on the taxable temporary difference availability. If there is a taxable temporary difference and their reversal pattern matches with the reversal pattern of deductible temporary difference, it means we have future taxable income. I'll just inform you by one question only. You can see in this question there is a taxable temporary difference relating to accelerated depreciation of rupees 1,24,000. These are expected to reverse equally over the next 4 years. So equally means 1,24,000 divided by 4. So it will reverse 31,000, 31,000, 31,000, 31,000 for 4 years, and this year nil. So can you see if taxable temporary difference reversing, it will increase the taxable income of subsequent year, because that will be added to the taxable income. So this will increase the taxable income of the future year by this amount. Now they have given deductible temporary difference of 80,000, which I expect to reverse in 5 years. So that will be 20, 20, 20. Sorry, 80 divided by 5, 16, 16, 16. So 16,000 will be reversed in 5 years. So out of this 60 is for this 16,000 we have this much taxable profit. It means we have sufficient taxable profit. 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 But for this we do not have sufficient taxable profit. Means for this deductible temporary difference we can create DTA, but for this 16,000 we cannot create DTA if there is no future taxable profit. Now it is given that it is expected that PC Limited will continue to make losses in next 5 years, means there is no probability of taxable income. So on this 16,000 will not create a DTA, but on this 16,000 into 4 will create DTA. So DTL will be on this entire amount. DTA will be on this particular amount. Have you understood? This particular question can be asked in exam. Have already been asked in exam. This similar question have been asked in exam. Now read it, you will be able to understand. Now question number 8 is based on reconciliation. This you do by your own, because I am now tired, fully tired. Correct now. This is also, I think you can do it. Question number 8 and question number 9 you do by your own. This is a reconciliation question. I hope you can do it. Very simple, very simple. With solution you will be able to understand. Do it, but important question. And question number 9 also do it. This is also good question. You can understand these two questions today. This much only from my point of view. These two questions, do it right now. Right now do it. Okay. I hope you have understood. From my point of view, this much only. But this point. From my point of view, this much only. Correct. Today we have done IND AS 19 and IND AS 12. I hope you have understood. Bye bye. All the best and keep studying. Right now you are not going to sleep. Means you need to sleep as per your plan timing. Correct now. As per your plan timing. I don't know what is your plan timing for sleeping. You have a thing that you should sleep at this moment. You need to sleep for 5 hours, 6 hours, whatever your plan. Sleep for that particular hours. Then once again wake up in the morning. Once again start studying. Now in this coming hours is whatever number of hours left. You need to only study. You have only one job. Study only. Correct? Understood? Believe me, after becoming C, you love to study, but you will have no time to study until unless you come into the profession of teaching. Right? Teaching is, I will say, learning is one of the I will say best thing in your life. You should not miss this. Right now you are learning to become CA. You are learning to become CA. To learn how much you can learn and just write exam and pass and become CA as soon as. Good night. All the best. Correct. And don't forget to subscribe the channel if you are new to this channel. Don't forget to like. Press the like button. Love you. Bye bye all.